Hi Cameron, good morning, good to see you in. Give us your sense about other asset classes as well. How have flows been to gold? That asset class actually has been holding steady and maybe in fact, it's under ownership of retail participation, so to call it. So that could do well from here. How are you seeing flows? And maybe even if you could give us a sense on cryptos, Bitcoin.
So gold continues to be curiously unloved in an environment where you would expect much more interest in building up a bit of exposure. Another 600 million out of, 350 million, I think, out of physical gold funds this week. Flows to crypto funds have certainly faltered, and quite how they will react to events, I'm not sure. I don't see them as an asset class that figured largely in the carry trade, but it is all new territory there. But no, certainly the usual suspects are still seeing fresh money. U.S. equity and bond funds had solid, if not spectacular, inflows. Money continues to pour into technology sector funds. How long that will run, given the much more skeptical background noise, is an open question. But for the moment, any dips in the market are definitely being treated as opportunities to come in at a slightly better price.
Okay, we'll leave it at that. Thanks a lot for joining in and, have a great weekend. Cameron, thanks for being with us on the channel. Well, let's do one thing. Let us talk about individual stocks now that you need to watch out for in our top 10 list of stocks. First up we have on our list is Eicher Motors. Decent set of numbers coming through. A revenue growth of 10.5% is what the company has clocked in at 4,393 crores. The EBITDA has gone up 14.5%. The margins have actually improved 100 basis points to about 26.5%. And the net profits are up almost 20%, coming in at 1,100 crores. Goldman Sachs put out a report where they have a buy and they have actually raised their 12-month target price by 4% to 5,600 on the stock, which implies a 22% upside to the current market price. And they talk about how the upcoming new Classic represents an upside or optionality, and they are quite bullish on the stock. So I'm going with green on Eicher Motors this morning. But Vamakshi is joining in to give us a quick word on ABB and how you should approach that one. Vamakshi, morning.
Well, good morning. I'm going with the green for ABB, and that is because the company reported a modest beat as compared to expectations. Revenue came in at 2,831 crores. This is an uptick of almost 13% on a YOY basis, but it has missed pole by almost 8%. When we look at the segment-wise revenue, robotics and discrete automation declined by almost 31%, but the revenue growth is largely being driven by process automation, electrification, and motion. All of these segments saw a double-digit uptick this time around. EBITDA margin expanded by 526 basis points and came in 225 basis points higher as compared to our expectations. Largely, this is being driven by positive price movement, cost optimization, steady material cost as well. Robotics and discrete automation, motion, electrification, and process automation, all of these counters witness an uptick in their EBIT margins as well. Net profit resultantly saw an uptick of almost 50%, coming in at 444 crores. This is nearly 3% higher as compared to expectations. Order inflow, however, was a bit subdued, saw a downtick of 5%, but the order backlog was up nearly 7%. Again, muted growth out here as well. The company also announced its a capacity expansion plan. They will be expanding its operation in the process automation and electrification business and will be making investments up to 85 crores. Overall, given the modest beat on its numbers, going with the green for ABB. Watch out for the commentary on the con call, which is scheduled at 11 a.m. today.
All right, green on that one as well. Thanks, Vamakshi, for that. Well, let's hop across to Ekta. She's here to tell us about Biocon. Morning, Ekta.
Thanks for that. Well, Biocon, I expect the stock to be in the red based on what they've reported. But it's important to note that their conference call is at 9 a.m. So the commentary might, in fact, change the course of the stock. Now, in terms of the revenue, I expect it to be flat. It was flat on a year-on-year basis. The street was anticipating a double-digit growth. Margins came in at 18.1% versus 21% versus estimates of around 21-22%. And the profit 659 crores because there was that Eris Life deal that they accounted for in this quarter. Biosimilars because revenue was lower or flattish, you'd have to say, but on a like-to-like basis, it was up 11%. Research services, Syngene, we know, was sluggish this quarter. Generics was down 6% as well. Other income was stronger because of the HDFC Life deal. Company says they anticipate a stronger growth in the second half. I'll wait by for the conference call takeaways to get a full assessment on how the stock could perform today.
All right, Ekta, thank you very much for that. But there's more, so hang in there. We're coming back to you. LIC reported numbers. The country's largest life insurer, Yash, is here with details on how the company did. Yash, morning.
Well, Prashant, if I just had to go by what the companies reported in the first quarter, then I would certainly go with red, and that's because the companies missed what the street was baking in terms of numbers on various parameters. If I have to take you through the numbers, the new business premium was the only number where LIC reported its numbers ahead of the street estimates, but total annualized premium equivalent, it missed street estimates. Retail annualized premium equivalent, it missed street estimates. Value of new business was a miss, as well as margins were a miss. In terms of absolute numbers, total APE was up 21%, retail APE was up 13%. Value of new business was up 24%, and finally value of new business margins was up by 20 basis points. As I said, these were the negatives in terms of what the company reported in the first quarter, and hence I'm going with red. But what will be positive is the management's commentary on saying that they stick to FY25 guidance of AP being somewhere about 15%, margins being 19 to 20%. The stock has had a significant run-up in the last 1 year, in the last 6 months. Still remains to be one of the cheapest in the sector, trading at about 0.75, 0.8 times FY25 price to embedded value.
Okay, all right. Thanks a lot for that, Yash, and hope you had a good birthday evening yesterday. Maybe the remainder of the celebrations over the weekend. Well, that said, let's hop across to Manglam. Manglam, how was Concor?
Well, no surprises, neither positive nor negative from Container Corp. So if you look at the revenues, 9.5% jump out there. The company had reported its volume growth at around 6%, so not much deviation is reported from there as well. 11.5% jump in the EBITDA, margins largely contained around that 21% mark. The net profit grew by about 6%, impacted by some bit of profit, rather depreciation as well. You have the Exim business, which saw margins of around 20% with a 7% revenue growth. Domestic business showed a 13% revenue growth. Out there, the EBIT actually expanded by 40%, causing a bit of a margin expansion out there as well. No negative surprises coming in from the land license fee as well. For this quarter, it's pegged at around 106 crores. This compares with around 130 crores the same time last quarter. And we already had the volume update, so not much deviation from there either. So going with mild green on Container Corp on account of the mood of the market, and no negative surprises coming in.
Okay, thanks a lot for that. Well, Sonal is with us to talk about Oil India and why you should be watching that one. Sonal, good morning.
Good morning, Sonia. Well, Oil India reported numbers. On a sequential basis, the revenues were up 1.5%. If you look at the EBITDA, that was up 6% as well. Margins came in at 42.2% versus 40.6%. But profits this time were down 28% sequentially. That is largely because of other income going down. Other income declined 80% to come in at 162 crore rupees versus 833 crore rupees. The conference call is at 11 a.m. today. We'll get more details about production, sales, volumes, etc. But do remember, the stock is up already 146% on a year-to-date basis and trades at 9.5 times FY26 EPS. The performance is good, but it is not as strong as ONGC, which is trading at around 4.9 times FY26 EPS. So yes, the stock could see some green, but it could see some red afterwards. A lot depends on the commentary coming in from the management as well.
Got that. Thanks for that, Sonal. Well, let's focus on sale then, and I'm going with red, and let me explain that to you. On the top line, it was a little bit better. The EBITDA number was bang in line, and the profitability was hit by a one-off. Let's run you through those numbers. The sales volume number were up by close to around 3%. That was on expected lines. But sale has grown less than what the market as well as its peers. So that's telling you it's lost market share. Then how did the top line beat expectations? Well, they're focused on their product mix. Longs as a percentage of the total mix, that's at around 37%, which is higher than peers besides JSPL. And also value-added products is more than 55%. So because of the better product mix, realizations were higher than what the street worked with, and that explains why the top line was a beat. The operational performance was pretty much in line with what we were working with. The reason I'm going with red is the debt number of sale has moved up. On a sequential basis, it's moved up by close to 5,000 crores because of expanded working capital as well as because of the capex that they are incurring. And that chart tells you the picture. For the last few years, we've been talking about sale. At some point of time, they'll start deleveraging their balance sheet. Well, the debt number today is the same as it was on March 2021. So that's a problem pocket for me. And as we know, steel prices are lower, as well as, when iron ore prices fall, some of the integrated players like SAIL, they lose their advantage. So going with the red out there, what saves them is that the global markets are looking good this morning, and also the markets appears are net short on this going into the event. So let's see how that goes.
Okay, well, MCX is also something we're looking at this morning. Vamakshi is here to tell us why. Vamakshi, over to you.
Well, MCX is expected to open higher today, and that is because SEBI has finally approved the appointment of Praveena Rai as the MD and CEO of MCX. Now, of course, her appointment is subject to acceptance of the offer made to her as well as the approval from shareholders. Keep in mind that she is a banker with nearly 25 years of experience, and in her last role, she is the Chief Operating Officer at National Payments Council of India, that is MPCI. Keep in mind that the CEO's position at MCX was vacant since PS Reddy stepped down on May 9th, and with this nod coming in from SEBI, it bodes well for the counter. The overhang on the counter seems to have gone away, as the street was expecting this for a very long time. Overall, going with the green for MCX on account of this.
At the margin, there was also news which I think Reuters, the newswire, reported that BSE is essentially looking at launching, derivative contracts, gold derivative contracts, and I think on silver as well. But we'll need to confirm this with the BSE. There was a news report coming in from Reuters, so maybe more competition. So we'll have to see. But point taken, Vamakshi, thanks very much. Person at the top after some time at MCX. Well, let's talk about Cochin Shipyard. Astral reported numbers. Upasana is here with details. Upasana.
Thanks so much for that. First up, let me start with Cochin Shipyard. Company reported strong set of numbers. Revenue stood at 771 crore with an uptick of 62% on a YoY basis, and EBITDA margins also expanded from 17% to 23%, mainly led by ship repair segment. PAT stood at 174 crores with an uptick of 76% on a YoY basis. Now coming to company's key segments, shipbuilding recorded a strong revenue growth of 62% on a YoY basis, and margins stood at 17.5% versus 19.3%. Ship repair also recorded a strong revenue growth of 63% on a YoY basis, and margins here expanded sharply from 24% to as high as 43%. Next up is Astral. The company Q1 FY25 numbers slightly missed the street estimates. Revenue saw an uptick of 8% on a YoY basis. EBITDA saw an uptick of 6% on a YoY basis, and EBITDA margins saw a downtick of 20 basis points at 15.5%, while company's PAT stood at 119 crores, which was stable on a YoY basis.
Okay, thanks a lot, Upasana, for that. Well, here's a quick recap of our top stocks. Stocks with positive news flow. There's Eicher Motors, ABB, Concor, Oil India, MCX, Cochin Shipyard and Astral. While stocks with negative news flow, there's Biocon, LIC and SAIL. Let's take a short break. On the other side of the break, Siddharth Khenka of Motilal Oswal Financial Services will join in for some fundamental stock analysis. Stay tuned.
to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Assuming a normal monsoon and taking into account the 4.9% inflation print which has already come out so far as Q1 is concerned, CPI inflation for the current financial year, that is 2024-25, is projected at 4.5%.
Welcome back. We're getting ready for a market that is all set to open well in the green. But there's also another big story today, which is in the primary markets. The much-awaited Ola Electric Mobility shares will list on the bourses today. The company received over 4 times the number of bids for the shares of offer. Earlier this week, we spoke to the Chairman and Managing Director, Bhavish Agarwal, asked him about the EV maker's path to profitability. Listen in.
Just wait for our Q1 results, which will be out soon after the listing on 9th August, and you will get to see the financials then. But thematically, if I tell you, if you look at our business in FY24 over FY23, we grew revenue 90%. And our revenue in FY24 ended up at around 5,300 crores. So this shows you the kind of improvement the financials already in the public domain showcase. And this is because, in manufacturing businesses, there are 2 themes I want to leave with your viewers here. In manufacturing businesses, as you grow scale, and we've seen very significant volume and revenue growth, your cost structure, the factory investments, etc., don't scale linearly with it. In the EV era, the cell is the heart of the vehicle. And hence, 4 years ago when we began this company, we decided to focus on making our cell in-house. And if you look at the amount of cost contributed by the cell, if a vehicle costs 100 rupees, the cell costs about 30 or 35 out of that. This is like an average across multiple companies. The entire margin that global cell companies make, as well as a 5% duty that cells have when they come into India, all of that money we will save when we start using our own cell in our vehicles. Step by step, all that margin on 30% cost, assume saving 20-30% margin, all of that will eventually come into our books.
Okay, so that is Bhavish Agarwal, a big listing coming up today. Siddharth Khemka of Motilal Oswal is with us. Siddharth, people are on the fence with this one. What is your expectation post-listing? Given that the overall electric two-wheeler sector is undergoing a bit of a slowdown and Ola Electric is sitting on large losses as well, what's the way forward for this one?
Good morning, Sonia. Yes, so even we are sitting on the fence right now. We don't have a view on the IPO. So we will be waiting for the results that Bhavish just talked about. So definitely it's an upcoming sector, but and we have seen the EV penetration in two-wheelers to be the highest in India so far. So growth in this sector will come by. But as you rightly said, the company is right now loss-making, and they intend to come into even lower price segments where we believe the losses could even increase in the near term. So it's definitely a wait and watch, and the path to profitability, as we have seen in some of the other past new age companies that got listed, that could drive the stock price in future.
All right. Hi, Sid. Morning. Good to see you. And let's talk about a couple of listed companies then. LIC, plenty of retail interest over there because the IPO was disappointing. Post that, the stock nearly halved. How do you read the numbers? Valuations are a support, but your pick from the insurance space.
Yeah, Nigel, good morning. So yes, I think LIC very good numbers last few quarters. For this quarter, they reported a net premium income of 7,500 crores, a growth of 16%. The new business AP, which grew 9%. And if you look, VNB margins for the quarter stood at almost 14%, 13.9%. And if you look for the last couple of quarters, we have seen that the company has come out with good numbers. We believe LIC has levers in place to maintain its industry-leading position and ramp up growth in the profitable segment, which is mainly your protection, non-par, as well as the savings annuity products. However, given the size, it will take time and requires a lot of superior and well-thought execution. So we expect it to give about 11-12% AP growth, and which should lead to a VNB CAGR of 18%. Valuations definitely supportive. So we have a positive view on LIC and a buy rating. We'll come out with a target price. But within the insurance space, SBI Life is something that we like. Company came out with a decent performance in Q1. AP for SBI Life grew 20%. Whereas the VNB grew about 11.5%. Margins have been pretty strong. Again, the expectation is that the AP and VNB would remain pretty strong going forward, and SBI continues to maintain its cost leadership. So we are expecting an 18% CAGR both in AP as well as VNB for SBI Life, which is our preferred pick, with a target price of 1,900.
Got it. All right, Sid. Request you to stay with us. Let's invite our first management, Galaxy Surfactants. They reported actually an improved set of numbers. To understand about the way ahead, we're joined by Mr. Natarajan, the MD of the company. Hi, Mr. Natarajan. Good morning, and thanks a lot for speaking to us here on CNBC TV18. Let's get a couple of those basic numbers out of the way. The volume growth has been impressive in the first quarter at around 8%. Earlier, you were guiding for around 6 to 8%. Do you want to guide now for a upper end of the range, or do you want to revise it? And also the EBITDA per ton, what was it in the past quarter? And do you want to stick to that band of around 20,500 to around 21,000?
Yeah, good morning. Thank you for having me on the show. Yeah, with regard to the volume growth, I think the team has done a fantastic job given the sort of headwinds that we have on the supply side. But then I'd like to stick to the volume growth of 6 to 8% once we look for 2 more quarters to see as to whether I need to guide it upwards. With regard to the EBITDA per metric ton, we revised the guidance just last quarter to 20,500 to 21,500, and I'm pretty happy that we have come closer to the lower end of the guided and increased range. We do see the coming quarters with the premium specialty segment picking up in the developed markets. We could touch the higher end of the band of the EBITDA per metric ton.
Is 21,500?
Yeah, that's the higher end of the EBITDA guidance that we have given.
You were talking about how the specialty business, which is low volume but high margin, I mean, destocking in the US is probably coming to an end. Is that, could you shed more light? Is it actually happening?
Oh, yeah, it has. So I think mercifully the destocking has bottomed out. And then we do see orders coming back. But yes, there are certain projects in pipeline that were put on hold for the last 1 year. They have started getting revived with regard to the premium specialties. And we do expect that to gain momentum in the coming 2 quarters.
In the export markets, is it more of the specialty product sales or performance products? And what would you see as the growth driver, specifically in the export region?
Oh, yes, in the export market, I think we need to look at it into 2 parts. One is what we do in the Africa, Middle East, Turkey is majorly driven by performance products. Whereas if you look at the markets other than America and the rest of the world, that's more driven by the specialty ingredients.
Okay, so what about the freight situation right now in the export market? What's the latest there?
Oh yeah, the freight situation is bad. I think freight rates have more than doubled in most of the sectors. More than the rate increases, I think what's a challenge is in terms of getting space to get our products loaded, and also in terms of the enhanced transit time. So both incoming and outgoing situation in terms of rate has been impacted. But yes, we have started adjusting to the new normal, and we do hope that in at least by October things start settling down, and we at least have a proper space available on the ships to be able to serve our customers well.
All right, Mr. Natarajan, final question before we let you go. You're currently doing around 1,000 crores per quarter. What is the utilization levels that you're going at? And also, what is the capex plan that you've lined up for FY25, FY26? What should the asset turn on that be?
Yeah, so we are at about 70% capacity utilization. And then we typically have about 150 crores of capex per annum. And the asset turns typically would be in the zone of about 2.5 times.
Okay, all right. Thanks a lot, Mr. Natarajan, for joining in. Wishing you a good day ahead and a good quarter. We look forward to chatting up with you in the time to come. For the last 1 month or so, the stock is a little bit lower, but these numbers look pretty good. And in fact, the management commentary as well, pretty stable for times ahead. Well, let's go back to Sid Kemkar then. Sid, what's your take on a couple of these companies? If you have a view on Galaxy Surfactants or a couple of other names, PI Industries and the likes.
Yeah, so we do have coverage on Galaxy. The results were better than our expectation, mainly on back of the lower operating cost and raw material cost, which led to EBITDA being higher. PAT also came in much higher than our expectation. So overall, if you look at in terms of Galaxy, we believe that the outlook for the business remains positive, and the structural story is impact. There has been improvement in the accessibility for the products due to the quick commerce and the headroom for growth in the personal care segment. So overall, what we are seeing that with the continued effort and focus on R&D and the increased share of wallet from its existing customers, this would be driving the volume growth going forward. And even with raw material prices coming down, OPEX being lower, we expect margins to see gradual recovery. Also, higher share of premium specialty products to drive volume. So net, what we are liking is valuations are also comfortable for the stock. The stock has come down recently. So we have a positive view, the buy rating and a target price of 3,450, which is a decent upside from current levels. Even if you look at other companies in the specialty chemical space, PI Industries has been doing well after the past few quarters where the overall numbers were kind of weak, but now things are kind of improving. And again, that is a space where they have consistently done well in the CMS space as well specifically. So that is again a stock that we like in the agrochemical space. And again, we have a positive view on buy rating on PI Industries.
Okay, got that. Just a quick word, Sid, if you track Lemon Tree, stock was down 10% yesterday. I think seasonally it's a bit of a weaker quarter occupancy-wise for hotels. I mean, EIH was the case in point as well. Do you have a view?
Yes. So if you look at Lemon Tree, yes, results were not that good for Lemon Tree. Seasonally a weak quarter. And if you look at overall, the revenue was quite good for the quarter, 21% growth, led by good growth in ARR and opening of newer property in Mumbai. However, what was weak was EBITDA margins came under pressure primarily due to increase in renovation and business expenses. The company is renovating its entire inventory by FY26, and hence while in the interim there could be margin pressure, we believe that will lead to improvement in ARR by FY26. And hence, while the near-term pressure would continue, the overall hospitality space is doing well, as seen by the volume growth, the revenue growth for Lemon Tree. So we continue to remain buy. From a long-term perspective, we have a target of 170. But as I said, near term, because of the margins, the stock could remain under pressure.
Okay, well, Siddharth, I have many more questions for you, specifically on some of these auto names like, Bharat Forge and Eicher Motors, but more on that coming up in a bit. For now, let's take a break. When we come back, we'll get you some thoughts on the technicals of the market. Mitesh Thakkar and Shrikant Chauhan of Kotak Securities will be joining in.
With Q2 at 4.4%, Q3 at 4.7% and Q4 at 4.3%. CPI inflation for the first quarter of next financial year, that is Q1 2025-26, is projected at 4.4%. The risks are evenly balanced. First and foremost is the fact that our target is the headline inflation, where food inflation has a weight of about 46%. With this high share of food in the consumption basket, food inflation pressures cannot be ignored. Further, public at large understands inflation more in terms of food inflation than the other components of headline inflation. Therefore, we cannot and should not become complacent merely because core inflation has fallen considerably. Second, and equally important, is the reality that high food inflation adversely affects household inflation expectations, which have a significant impact on future trajectory of inflation. The Monetary Policy Committee met on 6th, 7th and 8th August. After a detailed assessment of the evolving macroeconomic and financial conditions and the overall outlook, it decided by a majority of 4:2 members to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%.
Free speech, and yet the need to ensure that there is moderation and there are guidelines and it is a safe space. What's been the experience on that front today? I mean, I remember you saying that whatever's happening in the world is happening on YouTube, and we have active wars currently on in the world at this point in time. We've got situations that have just taken place over the last few days where there is an active call inciting violence, for instance, in different parts of the world. Do you believe that there is a need to perhaps review the moderation community guidelines, the moderation policy? Is there a need to engage actively with regulators, with governments at this point in time around the world? I mean, how do you see the road ahead on this front going forward?
I mean, I think you encapsulated it quite well. I do think what happens in the world happens on YouTube, and what happens on YouTube does influence what happens in the world, and that's why living up to our responsibility.
Welcome back. There's 10 minutes to go for the pre-open session. Let's get in our technical experts for quick calls on what they'd like you to do. The GIFT Nifty implied open is about 250, 260 points higher. Mitesh is with us, and so is Shrikant Chauhan of Kotak Securities. Gentlemen, good morning. Great to have both here. Mitesh, so back up again. 250 is like a roller coaster. It's just you got to sort of not get stuck at the chopping area. So what would you recommend for viewers on the index at least?
Good morning, Prashant. I think yes, typically corrections do turn choppy, and I think this is a prime example of what we are seeing: a gap down every alternate day and a gap up the other day. So I think today will be a gap up, but the most important thing is that we'll open around that 24,350, 24,400 zone, which is where the gap down starts and which is where the intraday averages are placed. So I think if we don't sustain about 24,400, I think I would still maintain a negative stand and add on to put options positions. The median of the gap is close to about 24,550, 600 zone. So that's where we can go aggressively short on the futures side. But the structure to me still looks negative, despite the fact that today could be a good day in that negative structure. But I think capturing 24,400 on an intraday basis or even a closing basis would be important because today we also have a weekly close. So let's see if we can sustain about 24,400 or if we get signals during the day that this level will be crossed. But my initial feel is that post the gap up, I think there could be some supply again.
Okay, got that. So Shrikant Chauhan is also with us. Shrikant, do you think this continues to be a buy on dips market, and what's the best strategy today?
Good morning, Sonia. Good morning, Prashant. Nigel. I think this market is definitely not a buy on dips because we saw a vertical decline in the market. But at the same time, if we see the overall trend of last 4 days, then it was in the range, and it was mainly because of specific uncertainty in the global markets. But today, on the back of specific news flow from the US markets, I'm of the view that we could see some short covering. And in this type of market, we should look for taking some breakout trades in this market. About 24,400, I'm expecting Nifty to move towards 24,650 or 750 sort of levels. And today, I think we should look for taking that bid. So we can keep stop loss at 24,150 for taking any long trade in this market. But yes, as Mitesh said, we need to see that whether the market is crossing 24,400 or not. For the Bank Nifty, it is relatively doing well, but it has hurdle at 50,750. Above that, I'm expecting Bank Nifty to move towards 51,500. So broadly, I think Bank Nifty is also ready to move towards 51,500 or 250 sort of levels.
Okay, got it. Good morning, gentlemen. Good to see you in. Shrikant, you go first. Tell us what are the stocks you're tracking?
Yeah, I would like to go with oil and gas sector because there we are seeing good amount of strength. Most of these stocks are trading above their important supports, and even though there was weakness in the market, most of these stocks managed to survive above their important support areas. ONGC looks good. It is around some 320. It is around it is around 320.25 levels. So from here, the stock can move to the levels of 355 or 360. We can keep stop loss at 310 for the same. And the other stock which we like is LIC, Life Insurance Corporation of India, which is around 1120, 1130. There I'm seeing a very consistent upward rising pattern. Here we are expecting stock to move towards 1250. So it's a buy at current levels with a stop loss close to 1080.
Okay, well, what about your stock? Okay, those are the stock ideas. Mitesh, what about you?
So, despite the fact that I have a negative view, today we'll have some buy calls looking at stocks which yesterday were closer to their support levels from where some reversal can happen. And L&T is one of them. 3520 is a very important support area if you look at the last 2-3 months of price movement, and multiple times the stock has bounced back from there. It's trading around 35, 45, 50 mark. So buy here for targets of 36.15. PEL also, after a good rally corrected in the last few days, is now at important moving averages. So buy here with a stop at 925 for targets of 980. ABB is a buy. ABB, in fact, looks like a stock which has completed its correction. We had a buy call there yesterday as well. Now can be bought with a stop at 78.30 for targets in excess of 8,200. And one sell call, Page Industries, I would want to sell at a slight bounce back. So around 40,750, 800. Sell with a stop at 41,200 for a first target of 40,000 and then maybe below it.
ABB, Page, and what's the first one, Mitesh? Missed that?
L&T.
L&T. Larsen & Toubro. All right. And the target over there?
L&T, I'm looking at a target of 36.1520 to begin with. And then in case the Nifty starts getting past 24,400, good chance that we'll see 36.60 here.
All right, we'll leave it there, gentlemen. Good speaking with both of you, and we speak again at 9:10 for more sort of ideas as the pre-open sort of starts, kicks off, and then we'll have a better sense of where things are opening up. We'll be joined by the management of Gokuldas Exports on the other side, so stay tuned for that conversation. Q1 numbers came through, stock sold off. We're coming back in just a bit.
Here in India, but really globally everywhere that we operate around the world, is my top priority. It's what I will prioritize above everything else because it is the right thing for us to do, but it is also the basis of the business opportunities, the creator economy, everything that we've talked about. And so we work very closely with our partners in government here in India, but really all throughout the world. And I would say that we have a clear set of community guidelines that we have invested in very heavily over the years. In many ways, we have learned through trial by fire over the years to understand sort of how those community guidelines could be written, how they should be clear. But they are always up for being modified. It's important for us to have clear principles, but then also to be flexible in terms of how we adjust them. Because as you rightly point out, what's happening in the world is changing on a regular basis. And so that's really how I've approached the space. And you know, it's something that's near and dear to my heart. It used to be what I was responsible for, even as a chief product officer before I took over as CEO. And it's something, as I said, that I'm going to prioritize both in terms of my time, but also resources at the company before anything else.
My wife, for instance, you know, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to you know, without getting sort of stressed, being able to manage many different things. I'll just give you one example. You know, when I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or some, and they'd get these calls actually, and they would be, you know, because they're in a meeting with me, they would be, you know, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so you know, because that's exactly what, you know, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked, you know, my kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing.
Well, Sneha Seth is joining in. She's the derivatives analyst at Angel One. Sneha, hi, good morning. How are you feeling about the market now, and what is the strategy for today?
Very good morning, Sonia. If you look at the market, it's been 4 sessions wherein index has been trading in a 500 points range, wherein 23,900 has been acting as a support and 24,400 has been acting as a hurdle. Today's opening would be positive, and any move, any sustainable move, especially above the gap area, which we have seen, which is around 24,400, 24,700, then only we should, you know, go ahead and long. Otherwise, I would recommend, if any bounce back we are seeing, that should be, you know, utilized to exit your longs if you have any. Because looking at the FI's long short ratio, which has declined towards 50, the rising put call, the rising IVs, which is not giving up very comfort to go ahead and long at this point in time. Individual counters, if we talk about, I have one call which is a buy call, that is on ITC. If you look at this counter has been, you know, in pressure recently, but it has bounced back from the important support around 20 DEMA. I believe we can see an up move at least towards 509, and so one can go along with a strict stop loss of around 487. Apart from this, I have a sell call on DLF. This counter has been recently under selling pressure. It is trading around 89 MA. We have seen decent writing in call option along with unwinding in put options. So I believe we may see a correction at least towards 799. So for the target of 799, it's a sell. The stop loss can be maintained around 584.
Okay, thanks a lot for that. Well, Siddharth Khemka is still with us, so let's get a couple of calls in from him. Siddharth, the stock I wanted to ask you about was Bharat Forge, because in this quarter's numbers, the defense vertical has grown very sharply, and it's a large contribution now to their overall revenue growth. Would you play the defense theme through some of these stocks like Bharat Forge, or are there, you know, other pure play defense companies that you'd rather pick?
Yeah, so Sonia, if you look at definitely this quarter, defense was the key growth driver. While the other businesses were showing signs of weakness. And so if you look at the overall view, the order book that they have is a mix of artillery guns, vehicles, and consumables. So defense business, we are expecting it to be a key growth driver, and also the strong traction in terms of outsourcing opportunities from China, Europe to India in the industrial segment should be positive for Bharat Forge going forward. Again, it expects its aerospace business to double in the next 3-4 years. So clearly, if you see in terms of the overall numbers, there is a good, strong growth that we are expecting because of the increasing contribution of defense, which should lead to almost 50% CAGR in net profit over the next 2 years. The stock has run up and valuations in line with a lot of other defense companies, pure play defense companies. So to play purely defense, I would still go and buy a Bharat Electronics or a HAL. But if I were to play the overall industrialization along with defense, I would still look at a Bharat Forge.
All right, Sid, thank you very much for that. Good conversation as always, and have a restful, nice Friday and the weekend as well. We'll see you next week. Let's move on to Gokuldas Exports. So first quarter numbers came through. And we'll talk about the numbers in a bit, but let's start, of course, with what's happening in Bangladesh and what the impact could be, implications could be for a company like Gokuldas. We have Siva Ramakrishnan Ganapathy, Vice Chairman and Managing Director at Gokuldas Exports, now joining in. Siva, great to have you with us here. Good morning. Prashant this side.
Good morning.
As I said, Q1 in just a bit, but tell us what is the situation, because there's been so much talk about how, with textile mills in Bangladesh coming to a bit of a standstill, maybe temporary, buyers may be looking elsewhere and India stands to benefit. So is that a reasonable assumption to make? Is it actually happening? Tell us.
So we have to look at it from a little longer term perspective. In the short term, all the textile apparel factories have reopened and they've started. Most of them have reached some 90% of their productive capacity levels. So the disruption was there in Bangladesh, but they are coming back out of it pretty quickly. And that's because this industry is pretty critical for Bangladesh's success, and the government and everybody will work towards restoring that industry to its productive levels very quickly there. So the issue is different. The issue is, most of the brands have been worried about the volatility in Bangladesh for quite some time, and that reached a flashpoint a week ago. One never knows how things will evolve going forward. The only certainty is that there is instability and a lot of uncertainty. Given that scenario, there is a lot of pressure from certain brands to increase their allocation, outside of Bangladesh to regions like India, and that would happen. So it's not that Bangladesh is going to, suddenly sharply drop or anything at this moment, but there will be a more secular trend of looking at alternative locations just to de-risk many of their sourcing from Bangladesh. Commercially, most of the brands would love to source from Bangladesh, given their cost advantage, and especially Europeans, they would like the duty advantage as well. Having said all of that, nobody wants to take all the risks or put too many eggs in one basket. So from that perspective, most of the brands are seriously looking at some bit of diversification, and then they will wait and watch. So that's how I'm seeing this unfold over the near term.
But they were always looking at a bit of diversification, Siva, right? Or is that
they were
incrementally a little bit more now in terms of
that? That is correct. They were particularly in the last 1 year. I've seen a lot of them look at diversifying outside of Bangladesh because people were reading this, and now this would get a little more fillip because of what has actually happened. The flashpoint has been reached, or the trigger has happened. So it would result in a little more, concerted, work towards moving things out of Bangladesh. Not a whole lot, but some bit. Even that some bit will be fairly big for us.
All right. Hi, Siva. Good morning, and always good to see you in. And I understand, with some feedback that a lot of top bureaucrats, army veterans, they hold most of those textile hubs over there. So that's why it's critical to get it up and running. So that's about Bangladesh. Let's keep that aside. Let's focus on your company. Growth has been good with a mid-teen growth, For the remainder of this year, what kind of a growth you're looking at? Since you have the inorganic growth as well that will play out. On a consolidated basis, should we stick with high teens, mid to high teens? Will that be a fair assessment? And also margins got pulled back because of the acquired entity. And also you had some, a higher employee cost and a couple of other expenditure. Will margins start improving? Should we see it in double digits by second quarter itself?
So I anticipate margins to improve from second half of this year, especially because we have some acquired entities where, there would be some moving parts. Q2 has been seasonally a weak quarter, not particularly for Gokuldas, but for the industry in general. So some of the acquired entities may still see some softness in Q2 on account of the seasonality when the season changes from fall, winter to spring, summer. But that said, I think from third quarter onwards, there's no looking back. Our growth will continue because we're seeing a fairly strong order book and all our factories are full going forward. And we anticipate, growth, as you said, in the mid-teens. So that would happen. The critical factor that we are working on is to bump up our margins. We had some one-off issues in Q1 as well. And very marginal residual impact in Q2, but largely we have confined it to Q1, where we lost a lot of production capacity in April and May on account of huge amount of worker absenteeism, etc. But then we've recovered from there subsequently, and we've augmented our workforce also pretty strongly since then. So I see growth happening and margins catching up somewhere in the second half of this year.
So second half, it gets back to double digits?
To double digit levels, absolutely.
11, 12%?
Closer to 11% perhaps, because we still have the acquired entities which may not be as profitable, at the high margins as we are. That would probably take FY26.
All right.
Yeah, FY26, the next financial year.
Shivam, just the fundamentals of the business, exports to US, Europe, etc. What is it at? I mean, I think we spent the bulk of the last 6 months, 7 months, whenever we spoke, talking about this destocking coming to an end, etc. Where is it at? I mean, is momentum strong? Is it moderate? Is it expected to pick up?
Good question. Most of the destocking has happened. When I talk to all the brands that we work with, and which is most of the brands in the globe, big brands in the globe, they've all reached a stage where they're buying again. They've reached an optimal inventory levels, and they are back in the market buying. In fact, that's one of the reasons why we are seeing a fairly strong order traction as we speak. Even outerwear brands which were not really buying for more than a year have now started indicating that they have also reached an optimum optimum stocking level. So there's a more secular trend of buyers wanting to restock as the retail sales in those markets continue to grow. So even if you look at calendar year 2024, the last 6 or 7 months, you'll see that the retail sales is 3% higher than same period calendar 23. So the end user demand is not seeing any abatement. So there is a need for brands to stock up their inventory, and that's why they're coming and buying. Now, has the global demand supply reached a sort of equilibrium level? I would say no, since most of the brands are still being very cautious before extending themselves. They're also waiting and watching to see how their own economies will play out. But as far as Gokuldas is concerned, we have a fairly strong order traction simply because we have a very diversified customer base. And most of the customers that we have are touchwood doing exceedingly well. So they are coming in and sourcing more from us.
All right.
Okay. We'll leave it at that. Thank you so much for joining in. And have a great rest of the year. Q2, Q3, we'll of course touch base with you again later. For now, it's 9:10, so let's get some calls in. Mitesh is with us. Mitesh, what's the big call at 9:10?
Well, I'll go with the buy on Pyramid Enterprises for targets of 980.
Okay, and let's also talk about Eicher Motors because the stock is up 5% right now on the back of a good set of numbers. The revenue growth was 10%. The EBITDA growth was 14.5%. The margins came in higher at 26.5% versus 25.6%. So good improvement in margins, and net profits went up about 20-odd%. Brokerages are largely positive. Goldman Sachs says that Eicher reported a Q1 beat. They raised their 12-month target price on the stock to 5,600. They say there's a 22% upside potential to the stock. The new Gorilla 450 launch that happened has already done 6,500 units of dispatches since the July 17th launch. So they are quite optimistic there. Investec, though, maintains a sell. They say valuations appear a bit rich at 26 times FY26 EPS, and the volume growth is expected to moderate.
Okay, all right, Sonia, thanks for that. So that's Eicher. I'm focusing on Birla Corp. The numbers look quite disappointing. Remember, the stock has corrected from around 1,800 rupees to around 1,400. Nonetheless, these numbers look disappointed. Like in the top line, there was a degrowth of close to around 9%. A couple of factors played out here. Realizations were under pressure. Volumes are more or less flattish. In a growing market that's growing in mid-single digit, you're not growing. That tells you that market share is being lost as well. And in addition to that, realizations were under immense pressure. And the management's commentary as well is that demand is quite subdued, and Q2 as well is likely to be soft. Operating profit did decline by close to around 13%, which tells you that margins did contract from around 12.5% closer to around the 12% mark. One positive is the power and fuel cost has come down because they've been focusing on the renewable power as a percentage of the mix. The profit number as well did get hit. Finance cost, well, it continues to remain elevated. The debt number at around 3,100 crores odd. The jute business, which is a very small part of the business, reported a net loss. So these numbers are disappointing. What supports them is the stock has corrected from the recent peak, and it trades at around $85 per ton on an EV upon EBITDA basis. So EV per ton basis, so that supports it a little bit.
Absolutely, and we'll keep an eye out on these. I mean, the other one, Shree Simmons, has been under pressure as well after reporting numbers a few days back, and there was, of course, a wide miss there. What do we have? First rate should come up in the next couple of seconds, and we'll be looking at it. But I think we can squeeze in Container Corporation as well. Mangalam is here to shine the spotlight on that one. Mangalam.
Well, no surprises coming in from Container Corp in the first quarter. No negative surprises, no further positive surprises either. But the stock has corrected about 15-16% from the highs, and the market mode is good. So hence, we're seeing a mild green tick at the pre-open on Container Corp. 9.5% revenue growth on the back of 6% volume growth. Remember, the volume data was revealed by the company already. The margins are stable at around that 21% mark. And we've had the Exim business, which showed a revenue growth of 7.3% despite a volume growth of just 3.3%, telling you that there have been improvements in realizations out there. The domestic business showed a revenue growth of 13% on a volume growth of 15%. But on there, the margins have improved from 5.3% to 6.6%. That's a positive. And again, no negative surprises coming in from the land license fee as well. 106 crores. This compares with about 130 crores same time last year.
Okay. Right. Thanks a lot for that. Just, a few seconds to go. Just wanted to point out that Lupin is one stock that has had it really good over the last many weeks and days. And this morning, JP Morgan has upgraded Lupin to an overweight with the target price raised to 2,400. So that's another stock to look at.
Absolutely. And I think should be reacting, as you said, stocks done very, very well going into those results and out of the results as well. So first rates coming up, the Nifty and the Sensex. We'll do a quick check. IT index was the biggest loser. 24,373 is where the Nifty is starting, and 79,800. So the Nifty is up 200 points. And the Sensex is starting with a 700-point gain. So about 1% higher, both on the Nifty and the Sensex. Nifty IT is up 1.6, which means it's entirely reversing the losses from yesterday, almost entirely reversing. Nifty Bank was in the green yesterday, but barely so. It's up 0.5% at the word go, 50,417. Market breadth is positive, 4:1 in favor of what's up. Right out of the gates. So that is the overall picture as far as indices are concerned, but let's take it to stocks.
Absolutely. So let's take a look at some of the result reactions first up. For Eicher Motors, good set of numbers. Brokerages have raised their target price on the stock. So Eicher Motors is up 4% right now. Margins have improved, so the street likes that. Let's take a look at ONGC, because over there, Morgan Stanley has raised their target price on ONGC to 430. That one has, of course, been gaining all this while, but ONGC just pulled that up for you. Cochin Shipyard is also up almost about 6%, so result reactions coming in over there. And then you have Biocon, where the earnings were weak. The margins are down almost 290 basis points year on year, so Biocon could be in the red this morning. Lupin, as I was talking about, JP Morgan has upgraded into an overweight, raised its target price to 2,400 on Lupin. That one perhaps could look good. But for now, Eicher Motors and ONGC are your top gainers. Both are up about 3 to 4%. And then you have all the IT names, HCL Tech, Tech Mahindra, Infosys, TCS, Wipro, all up in the green, up about 1 to 2 odd %. M&M is holding up, so there's barely any stock in the red. BPCL, HDFC Life are two stocks that are just trending in the red. And for now, the market, look at that, looking extremely solid. Sensex up 800 points, Nifty up 230 points. We've bounced back, and how?
Well, that's right, Sonia. A few stocks, though, they're seeing big moves today. Bharat Rasayan, I saw that company on our ticker, the sharp jump in operating numbers. EBITDA is up close to around 6x. That one is up close to 10%. So one of the top movers in today's trading session. Keep an eye out on that one. Bharat Rasayan is the one they're talking about. JG Chemicals, that one as well is up close to around 10%. Bharat Rasayan is now up close to around 17%. JG Chemicals is up more than 10%. Those numbers as well look pretty good. So that one's flying away. Cosmo first, we'll try to get the management later on in the trading session, and that one as well has opened up with a gain of close to around 6%. On the flip side, Birla Corp, that one, the numbers we just explained to you were quite disappointing. Margins weak, realizations under pressure, stock down 3.5%. It's corrected from 1,800 to around 1,400 rupees, but that's under pressure. Shankara Bilcon is another one that's down more than 3% in today's trade. I guess those numbers as well were rather disappointing. Let's pull up SAIL. The initial tick was in the red, but the street was prepared for a net short number. So SAIL should come up in the screen. It's still down close to around 2%. The high debt in their books, that's what's swaying. Earlier today, we mentioned that maybe tech will do well and maybe metals will do well. For starters, since the global space is in a better position, you have the IT index that's up close to 2%, the metal index as well as up close to 100%. Both of them have pulled back this week. So that's where we're seeing these stocks doing quite well. Emphasis, Oracle, Persistent Systems, all of them up more than 2% in trade. It's a good start. Let's see how we end Friday for the start. It's to the books.
Absolutely. And, so we got about 240 points gains on the Nifty coming through at this stage. And the biggest volume-led gainer is Cochin Shipyard. Cochin Shipyard is up, 5.5% right now. 24.35 on Cochin Shipyard coming through. That's a sectoral sort of snapshot view. I think you've got equal number of sectors in the red and similar number of sectors in the green as well. So metals are lower, FMCG is down, infra is down, energy is down, real estate is down. And of course, autos, I think it's just a rebound because auto sector lost about 8-9%. While the Nifty lost about 4.5% in this recent fall. So there is a bit of a move up on the auto sector. It's up 1.25% this morning. So just to pull back. Otherwise, healthcare is up about 0.8, pharma is up about 1, and financials are up about 0.8% as well. So that's the overall landscape. Let's just tell you a few of these stocks. Cochin Shipyard is the biggest volume-led gainer. It'll come up on your screen. 24.18 on Cochin Shipyard. ONGC is up 3%. It's got very large volumes. Triveni Turbine was a very large mover yesterday. It's coming up with large volumes, 4% in the green. I think Nigel mentioned ITD, big move over the last 2 or 3 days now. 572 yesterday. Of course, ITD was up, I think, 15%. K Fintech was a very large mover yesterday. That is essentially the mutual fund RTA. So I think a competitor to CAMS. 970 on K Fintech. After the move that we had. So basically, day before yesterday, the stock left off at 840. It's 970 this morning. 2 sessions. Actually, a session in the first few minutes today. You have Oracle Financial Services, 3.5 higher. Emphasis. So yeah, IT is doing well. Mayur Uniquoters is another one. Interesting name there. It's up 6%. The recent low on Mayur Uniquoters was about 580. It's at about 666 this morning. There is FACT, which is up about 2.75%. Cosmo first, I think we mentioned PC Jewelers. I go down the list, but volumes start to thin out a little bit. On the downside, there's not very much. I think Apollo Tyre, maybe 2% down. All these, the PSU names, RVNL, SAIL, IFCI, IRCON, BPCL, HPCL, MTNL. I think that's the only sort of common thread I can find, which is all of them are essentially PSU names, and they're all down between 1 and 3.5%. This morning. Large volumes, of course, on most of these names. Gautam Dugar is with us. He's Head of Research and Institutional Equities at Motilal Oswal Financial Services. Gautam, good morning. Great to have you with us here. So the market, of course, when it sells off like it did on the back of global cues, is indiscriminate. Everything goes down. But then you start to emerge a little bit after the storm has passed and you find opportunities, right? Which could be meaningful because stocks sell off aggressively. So let me start by asking you, are you maybe in a more tactical kind of a way, are there those kind of opportunities in your coverage universe where you think stocks got sold unnecessarily?
Good morning, Prashant. Thanks for having me. Prashant, I don't know if sold off is the right word to use because we are hardly down 600 points on Nifty, right? I think last week at the peak you were 25,000. Now I think we are somewhere about 24,300 or 400, that range. So less than 3-4% correction. Actually, it's not even a correction. If you look at the mid-cap and small-cap indices also, they are down hardly 3 to 4%. The rest of the world markets have gone to levels where they were 1 year back. We haven't even traced back to 1 month old levels, right? The trailing 12-month mid-cap and small-cap indices are still up 50% each, more than 50 actually. And Nifty on a trailing 12-month basis is still up more than 24%. So we haven't actually seen any correction whatsoever yet. We I think discussed defense names, railway names last time when we interacted. Defense market cap, which has gone up from 1 lakh to 11 lakh crore in 3 years, has hardly fallen 10%. So we've not seen any correction, Prashant. And despite having a very muted result season, the market has been very charitable with most of the stocks, right? So this was expected to be a weak result season. It is a weak result season, but market has taken it in its own stride. So yeah, I mean, we have to see a lot more if there is any correction left.
Okay, well, for now, the market is definitely bouncing back. And it just goes to show that this has been an out-and-out buy-on-dips market, right, Gautam? I mean, every problem thrown at it, the market has sort of come out strong. So tell me, what do you do now in terms of the result season is almost behind us? What has been the biggest takeaway for you this result season? Anything that interests you where there is perhaps still a little more valuation and growth headroom?
So, Sonia, yes, there is a growth headroom. Valuation, I suspect there is not much valuation headroom left. Your mid-cap Nifty is trading at 33p, which is at a 60% premium to Nifty. I have not seen such levels of premium in the past. Small cap is at a 40% premium to Nifty. It usually trades at a 20% discount. So absolutely no headroom for mid and small cap indices. Nifty is the only index which is behaving relatively more reasonably, I would say. It is at about 20.5 times on a rolling forward 1 year basis. As far as result season is concerned, we have seen very flattish numbers for the 45 companies which Nifty, where we have seen numbers come through so far. Earnings growth is 4% versus expectation of 2%. And for our broader coverage universe, where 200 plus companies have reported, earnings are down about 1%. We were expecting 2% decline. So absolutely in line. Largely an impact of OMCs. Ex of OMC growth is 10%, which is also in line with expectations. So it's been a mixed bag actually insofar as sectors are concerned. We've seen decent performance coming in once again from auto, which is beaten expectations. Capital goods is in line at about 20% growth. Pharma has been a standout performer for this earnings season. Earnings growth is 26% for our coverage universe, where 15 companies have reported so far. And metals have actually beaten expectations because of some solid outperformance from Coal India and Hindalco. On the downside, you had cement, you had spec chem, you had retail, you had oil and gas, which have disappointed and missed expectation. And then there are biggies like financials and tech, where earnings have been in line. So net we have seen about 1% of a cut for our FY25 and 26 estimates. We are now at 1120 and 1320 as far as EPS is concerned. So muted result season, unexpectedly so. From here, you will see earnings pick up a little bit, and we should end the full year at about 13-14% growth. And so far as sectors are concerned, we had recently upgraded tech and pharma. So there we remain quite constructive. Consumer staples, we had a hope that there will be something coming in budget, which has not come. But monsoon has been good. So maybe given the big underperformance that this space has seen over the last 3-4 years, at least relative risk reward is favorable on consumption side. And financials, while will continue to look relatively cheaper vis-a-vis other sectors, but stocks don't move because there is an overhang of deposit growth now. And best of the earnings, as far as financial is concerned, they've had a rocking 5 years from FY19 to FY24. Now growth is very healthy but moderating, and there are other headwinds emerging. Some of the NBFCs, we have seen asset quality stress emerging. So yeah, I mean, it's very little to choose within the relative context, and it will be good if market were to consolidate and time correct for some time and digest the gains that we've had over the last 12-18 months.
Sure. Gautam, just one follow-up, since we're talking about earnings, right? I wanted your thoughts on autos, because there's such a divergence over there. Some companies like Bharat Forge are de-risking and now, focusing more on the non-auto space, whether it's defense, whether it's aerospace. Clearly, there is a slowdown in the auto sector right now. So what do you do here? If you own auto stocks, do you sort of churn out? What's the best way to approach it?
Yeah, sorry, absolutely. See, we have downgraded auto from overweight to underweight when we did our model portfolio revision at the time of preview about a month back. You have to look at the context for auto between FY21 to FY24, which is a 3-year period. Auto earnings have tripled from 18,000 to 62,000 crores. And I'm only talking about the Nifty auto stocks where there are 6 companies. Now, FY25 and FY26, we are expecting a very tepid 10-12% kind of a growth in auto. So as far as this quarter is concerned, clearly they have outperformed expectations because of the big outperformance of Maruti and some of the other heavyweights. But incrementally, the growth is going to look much more moderate than what one has gotten used to over the last 3 years, which is one of the reasons why we downgraded. As far as our choice is concerned, we prefer M&M still. We have had no Maruti, no model portfolio for the last 3 years now, and we are comfortable holding M&M because tractor is also expected to revive now, given that we've had a good monsoon, plus their SUVs continue to do well, and valuations are still very reasonable in the context of overall market. And then in the two-wheeler, we think Hero can be a tactical bet around monsoon. Very little to choose, actually, Sonia. We got lucky. We had added Motherson, Samvardhana, I think in April. By July, the stock was of 75%. So we removed it, given that such a large cap stock has had such an outstanding performance in 3 months. So auto, incrementally, you would see a lot more consolidation happening because the base is getting very high now in FY24, both on volumes and margins. So volume growth will also taper off, and margins will also look very range-bound now.
I got that. So with auto, let me sort of push that point ahead. With Ola Electric listing today, Gautam, I'm not asking you to tell us whether buy, sell. No, I'm just saying, how do you think about this? Pure play EV electric company, market cap would be about $4 billion. I mean, at least what they sold the issue at. How do you think about this one?
No, it's going to be an interesting listing and very interesting choice for investors in the auto sector. See what is going to happen in auto over a period of time now in the next 2-3 years. You will see divergence of choices emerging. You have Ola now, at some point of time, Hyundai will come. So auto sector, which has not seen much of a listing action on the big names, you are seeing that happening after a long period of time. We had seen similar action happening in financials 3-4 years back when insurance and AMC companies started listing. Similarly, in consumption, you've seen an emergence of variety of categories over the last 5 years. So it offers an interesting choice. One has to be very patient with such kind of names because they're right now not profitable. Plus, there are some headwinds also emerging on the EV volumes. You've seen in the last 2 months, EV volumes tapering off. The support of subsidies slightly tapering away. So in that context, one has to see how the volume trajectory and penetration of overall electric vehicles emerge in India in the next 2-3 years. While the trajectory could be very strong over a period of time, the next 3 to 5 years, but near term, 3-6 months, one will have to see how consumers adjust to the absence of subsidy. But yes, from a stock market point of view, it's a very interesting listing and it offers a wide variety of choices for investors to choose from in an overall very solid sector.
You've explained a lot about the business, but you've not said whether one should buy it or not. So post-listing, I mean, should one buy? Should one wait for profitability or signs of, profitability? What should one do?
Won't be able to comment, Sonia. We don't have a coverage and it's neither part of our model portfolio.
Okay, I understand. All right. Just before we let you go then, any thoughts on, you said that you're getting into the pharma space in a big way. And as we speak, a lot of pharma stocks are actually sitting at fresh highs. Ipca Labs is at a fresh high. Zydus Life, Lupin has done very well, up 2.5%. Ajanta Pharma is at a fresh high. Eris Life Sciences as well. So if someone's missed out on the rally here, is there still more to go? And do you stick to the large caps or do you look at the non-index large caps in pharma?
So pharma, obviously, there is still more to go in my view because the earnings are looking very solid. You've had a very good FY24. You're looking at a strong FY25 as well. And within pharma also, you have a variety of choices. You have US generics, you have domestics, you have healthcare in the form of hospitals and all. So we like both hospitals and US generics, and also some of the India-focused plays like Mankind. So we hold Mankind in our model portfolio. We like Sun Pharma. We like Max and Vedanta, both in the hospital space. I think this sector is going to see good outperformance in the quarters to come, because it's one of the few sectors where if you look at the 8 quarters of earning trajectory, it's been very stable and very healthy. Very few sectors in India right now are offering that kind of consistency on earnings growth, not even consumer. So yeah, I mean, healthcare, I'll be very, very excited to continue to hold.
Gautam, you're talking about Max Health Pharma or
hospitals, yeah.
Hospitals. No, so I have you look? Do you have coverage on Aster DM? I mean, there is this deal brewing. Okay, you don't have coverage with the Care Hospital. So it'll be the number 2 or the number 3 largest hospital player after this transaction goes through. But anyway, for another time.
Prashant, broad point on hospitals is that given the way some of the hospital investments are happening, you're hearing news about Bajaj Group stepping into the hospital space. A lot of private equity players have been very active on the deal side on hospitals, both on the organic and inorganic side. So clearly, the consumption for branded healthcare services post-COVID has gone up, and which is what you're seeing in numbers. There has been a lot of hospitals, companies which have got listed in the last 2.5 years, and suddenly become very important and relevant piece within the overall healthcare allocation that if you look at 4-5 years back, the entire discussion around healthcare will stop at Sun, Reddy, Lupin, and Cipla. Today, you have about 30-35 companies which are investable.
Right, Gautam, thanks a lot for joining in. Wishing you a good day ahead, a good Friday. Already looking quite relaxed, set for the weekend, looks like. Appreciate you joining in and giving us your view on the whole host of sectors as well as on the earnings that went by. But let's focus on the next company, Astral. That's a stock we're looking at. Mr. Sablani, the ED and CFO of the company, joins us on the show. Hi, Mr. Sablani. Good morning, and thanks a lot for speaking to us here on CNBC TV18. Well, for the next few years, you're guiding for mid-teens growth, close to around 15%. First quarter, you've grown by close to around 8%. Is it on expected lines? And do you factor in a much stronger growth in the second half of the year to get to that 15% odd mark? And also give us, how do you see the revenue mix evolving? As of now, you're plumbing that 73% of the business, while 27% is paint and adhesives. How do you see this mix evolving, say, in the next 2 to 3 years?
So I think we have given the guidance of 15% volume, and again that we have delivered the 16% volume. So I think whatever we have guided, we are in line with what we have given the guidance to the street. Similarly, if you see the margin side also, we have given the broader range of 16 to 18% margin in our plumbing business and 14 to 16% in our adhesive business. So overall, the numbers were in line, except our overseas subsidiary UK, which was not able to deliver the growth as well as the margin. So that is where the challenge came in this quarter. Otherwise, I think most of the numbers are in line what we have projected and whatever we have given the guidance to the street.
Your sequentially, your margins have taken a hit because of price volatility. In terms of PVC prices, do you think that could continue to remain volatile for the next few quarters? And what's the outlook there?
So if you see in our industry, normally Q4 is always at the peak and the Q1 is always at the bottom. So this is basically, you can say, seasonality of the business. And that is not today, it is from last 10 years, it is the same trend. Q1 is always the low, where your top line will be low and your expenses will be high. So because of that, always the pressure on the EBITDA margin. But the moment you turn to the Q4, the volumes are very high in the Q4. So that always give you the better margin and the better top line. So sequentially, if you see, yes, you are right, absolutely, it will be low. But that is the nature of the industry. And we are working in that kind of thing since so many years.
All right, no, got that. So, and we'll remember that Q4 peak, Q1 usually bottom. For the full year, 15% revenue growth, you'd stick with that, Mr. Sablani?
Revenue depends on how the polymer is going to behave. Like in the month of June, polymer shoot up very fast. But unfortunately, it was not able to pass through the market. And we all were expecting that from July onward, we will pass on to the market. And then again, the polymer started falling very sharply in the month of July. So because of that, the pass-through, which was everyone was expecting to happen, but was not able to pass through. So I think it is very, very difficult to predict the value growth because it is going to be volatile. If the polymer again goes up, yes, definitely, there will not be a challenge. And secondly, our peak quarters are yet to come. So in peak quarter, if we perform reasonably better, then I think Q1 little bit loss will not going to affect the overall number of the business. So we are confident.
So then let's talk about volume growth for both piping and adhesives. What should we expect for the full year 25?
So I think we have given the guidance of 15% plus. So right now we are 16 at first quarter end. So we will monitor the things, how the market is going to behave. Normally what happens that whenever the price rise take place, everybody rush for the inventory stocking by dealer, distributor. And whenever price fall, they destock the thing. So that is why volatility will be there. But on a full year basis, this number even out. So we are of the view that still we are maintaining our guidance of 15%. If any change will be there in the market, we will upgrade the guidance or we can downgrade the guidance depending on the first year half performance. Last year also we guided 15% volume growth. Then half yearly we revised the guidance to 20% volume. And ultimately we ended the year with 25% volume. So it is very difficult to say at this stage, but right now we are sticking to our 15% volume guidance.
All right, Mr. Savlani, so 15% volume growth, and on margins you said plumbing business will be 16 to 18% and adhesives will be that 14 to 16%. Is that correct?
Correct.
Got it. Okay, let's talk about a couple of new segments. How do you see the paint business scaling up? If you could give us a few numbers. And also your bathware business, very, very small right now, but it's doing close to 25 crores on a quarterly basis. For the year, do you have a number in mind?
So like coming to the first bathware, we have said that we are targeting to double the revenue this year. And if you see the first quarter, we have delivered close to about 90% kind of growth. So we are in line what we have projected. But of course, the base is very low. On low base, if you are doubling the revenue, it's not that high also, looking to the opportunity available in the market. But yeah, we are very, very positive on the bathware and we are going on the track. Now, as far as the paint is concerned, I think in the last quarter of June, we have launched the paint in Gujarat and Gujarat and Karnataka for Astral paint. So I think that number will start flowing from the Q2 little bit. And from Q3 onward, we are expecting that we should be delivering the good number into the paint also.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and speaking to us about your business, maintaining the guidance of an overall 15% volume growth in Astral there. We'll step into a quick break. On the other side of the break, Mayank Singhal, the Vice Chairman and Managing Director at PI Industries, will join in for their Q1 earnings. Stay tuned. Welcome back. Well, it's still looking really strong for the market. We're almost ready to hit a 1,000-point rally on the Sensex. And the Nifty is back above 24,400. The good part is we haven't seen any volatility up until now. And there's so much buying in individual stocks. Autos are topping the charts this morning. Eicher Motors is your top gainer, up 4%. Tata Motors, M&M are all leading from the front. And then you have IT stocks as well. Apart from that, you have large, percentage gainers as well in the non-index space. So let's take a quick look at that. ITD cementation is up almost 8% and it's been gaining a lot of ground actually. This week it's up about 11%. ITD cementation is the one I'm talking about. Just Dial, Cera sanitary ware, just look at that, 20% up move in just a week and it's up almost 40% for the year. A fresh high on Cera sanitary ware. The market cap almost now at 15,000 crores. So, these are some of these companies that are benefiting from this move from unorganized to the organized sector in this home building, etc., this theme. Affle India is also doing pretty well this morning, up almost about 4%. And real estate continues to, power through. Macrotech Developers is the one that's up almost 4% this morning.
All right, let's get to the next company then. PI Industries reported a good set of numbers. We have with us the company's Vice Chairman and MD, Mr. Mayank Singhal, who joins us on the show. Hi, Mr. Singhal. Good morning and thanks a lot for joining in. Well, congrats on a good showing. You're growing while most of the industry has been degrowing in the last couple of years. Now you're guiding for a 15% revenue growth. Could you break it up for us? What is the growth you're factoring in your mainstay CSM business, which has grown quite well? Also, your domestic market, well, it degrew for the past quarter at least, but monsoons have picked up. So split it up for us, this 15% growth that you're talking about between both these two segments.
Yeah, hi, morning. When I look at the situation today, yes, the global ag market is a bit challenged, but there are green shoots which are coming out indicating the growth specifically in the innovator space where we belong. Clearly, these growths are coming from both the engines, while in the first quarter is usually the placement time and the seasons got delayed. But as you rightly said, for the domestic business, with the rains and I hope with no more climatical disorders, but we see a positive growth coming from the domestic business. At the same time, the CSM business is also showing us the growth rate. So I would say they're equally balanced between the two engines.
Okay. All right. But, don't you want to up that guidance of around that 15%? Because both the segments are going to fire. CSM has been doing phenomenally well and domestic recovers. Are you being a little bit cautious on that 15% mark? And also margins for the past quarter, was there any kind of one-off in it? And what should the margin band be from here on?
Well, let's be honest, what we've indicated earlier, the margin still stays to that. I think quarter on quarter would be the wrong way to look at it because there are different product mixes, different approaches, and obviously as we are scaling up, the operating leverage is also coming in. So what is the initially indicated margins will continue. On a quarter-to-quarter basis, they could vary depending on the product mix, market mix, yeah?
So 15% growth and 26% margins, is that correct?
Yeah, that's what we would now.
Mayank, we come back to that sort of blockbuster product, very important product, pyroxasulfone. And here, I believe that, and we reported this earlier, Kumai has received favorable rulings over process patent protection in Australia and China, which reduces the chances of competing products. So in a way, good for you. Could you contextualize this? How would you view this? You've always, of course, maintained that even if some of the competition does come through, it doesn't impact you that much. But this at the margin should be viewed as positive?
Well, as I said, this would be wrong for me to comment. It's a Kumai product and Kumai strategy. And obviously you can appreciate that being in the IP space, these are tactful moves and tactical approaches. So it will not be fair for me to comment. But clearly, yes, we are in the back end of the manufacturing space. Product continues to grow. The brand markets for these products are strong. Kumai has been heavily investing to grow business and creating differentiated strategies. So as I see in the mid to long, not much impact for PI.
Okay. You are one of the two suppliers to FMC for fluindapyr. The sales for this fungicide is expected to increase 10 times over the next 5 years. I just want to understand how big is this as an opportunity for you?
Well, I would not get into product-specific discussions here, sorry, because, we are in the contract manufacturing business, and I don't know whether the 10 or 5 where it's coming from because we are tied by confidentiality, being in the space, and I hope you appreciate that. But yes, the new products are there. It is a good product which is performing for them. Obviously, based on that, being a strategic supplier, we will definitely see how that shapes up for us.
But is this a very big opportunity for you in the sense, would this reduce your dependency on pyroxasulfone?
I would not answer that to one product. I think overall, if you see, PI has got a bunch of new products which have been coming into our fold for manufacturing over the last 4 or 5 years. and there are further new products coming into the fold. So obviously, over the next 2 to 3 years, you will see the change of this pie shape in a very different manner. Already in the first quarter, growth has come from new products, which is 20%.
Okay, all right. So talking about how the pie is going to shape up, let's talk about the pharma business. The first quarter was subdued for a whole host of factors. How do you see the pharma business ramp up from year on? It did only 25 crores in the first quarter. So what should you end this year with? And also the newly acquired entity, PHC. You've been bullish on the prospects. The street believes that it's going to grow big time as well. Last year, I think it did close to around $11 million. What is the target year on, say in the next 2 to 3 years at least?
Okay, I think there are two questions there. Looking at the pharma business, clearly, as you know, we have acquired these various assets with various capabilities. Further to that, we've been augmenting and also adding to these assets to grow the technical capabilities and also building the regulatory framework around them. The objective here is again to play a differentiated game. Clearly, the current revenues which are there in the system will continue, but the long-term differentiated approach will be seen in the next couple of years as we continue to build on our capabilities and move into the different direction of the differentiated business offerings that we'll be doing in the pharma assets. So if I was to answer, I would very clearly say that PI is pretty satisfied with what's happened so far, and I'm pretty confident by the end of the year, we will be in a position to be really moving up in our strategy.
Okay. And on the acquired asset, you want to tell us that? PHC?
Yes, PHC I think is still in the process of acquisition. We have actually, there's an interesting asset, there's an interesting biological asset which has distribution setups in the US, Mexico and Brazil and also in Europe. There's a unique platform of peptides which is now, which we do believe is coming into shape with some products which are showing good performance and indicators in some of these markets. We are acquiring this platform of peptides, which I hope we will be able to, over again, a few years of time, develop new products in the biological space and create a differentiator. And further, with these capabilities and reaches, we will be able to add more biological solutions and really answer our purpose of reimagining a healthier planet.
All right, you're avoiding any numbers there, Mayank. But final question before we let you go, as you've mentioned numerous times, there are various assets that you've acquired in the last few years. You're sitting on cash of a couple of thousand crores as well. More acquisitions in the pipeline?
So just to give you, I'm avoiding the numbers, not really, because the numbers are not significant to the bigger picture of PI on one hand.
Okay.
So I'll get that very straight. On the other one, yes, we are sitting with about 4,500 odd crores of free cash in the balance sheet. Clearly, the company has always looked at the right way of investing money, which is a value accretive rather than scale and size. So we're looking for smart moves. And obviously, we continue to evaluate opportunities as we go ahead.
Okay. Mayank, we'll let you go on that note. Thanks a lot for joining in and all the best for the quarters to come. That's PI Industries. Revenue growth of 15% is what they're going to stick to for the full year. And Q1 was very strong for them and hence the stock is up about 2.5%. Let's focus on Bharat Forge now. The company reported a good set of numbers. The defense revenue has surged 147%. Margins have expanded and the management expects continued positive momentum in Q2. Baba Kalyani, the Chairman and Managing Director of Bharat Forge, joins us now on the phone line. Dr. Kalyani, good morning and thank you for joining us and taking the time out to speak to CNBC TV18. I want to first start with the non-auto. Good morning, sir. The non-auto business, right? Defense has been a big growth driver for you. It currently represents about 16% of your top line. Just trying to understand how much can this contribution go up by over the next, say, 1 to 2 years? And out of this order book of 5,400 crores in the defense vertical, how much will you be executing over the next 1 to 2 years?
You see, last year we executed roughly about 1,200, 1,300 crores, something like that. That was our first year of our defense business in terms of execution, large execution. This year we should be roughly about 2,200, something like that. And a large part of this defense business that we have and the order book that we have is all exports. And, that's the unique part of our defense business. The reason for that is all the products are designed and developed by us with our own IP, which is very unique in the whole industry in this country. The domestic defense business will hopefully start towards the end of the year when a couple of large contracts will get negotiated and finalized. So we see a continued momentum in the defense business. We have more than 30 to 40 products that we are going to launch, or let's say in the process of launching. So we are very confident about it.
Okay, so you're saying you have more than 30 to 40 products that are in the process of launching, and you will execute 2,200 crores of defense orders this year, which is in FY25. So currently your defense revenues, right? You're sitting on around 650 crores of defense revenues. What is the kind of growth, realistic quarterly growth that we can expect in the defense top line?
Yeah, in the defense business, it's very difficult to give you a quarterly growth because it's a bulky business. You get an order and then you finish it. By the time you get the next contract, it takes a little time. But if you take it over a period of, let's say, 3 years, I think one should expect at least doubling of the defense business.
So, Mr. Kalyani, in 3 years, doubling of defense revenues.
Yes.
So FY28, basically?
Yes, I think one should look at if you are a good defense company, you should, in the current environment, be able to double your defense revenues at least in the next 3 years. So if we are going to do 2,000 crores now, we should be able to do 4,000 in FY28.
Okay, got it. And of course, defense spending around the world is at an all-time high. So point taken, sir. And this would overall, I mean, would India business, the domestic business, by that time be a significant portion? I mean, you spoke about some of those large orders coming through by the end of this year.
We are currently on 4 or 5 major programs which are under finalization by the Ministry of Defense. Hopefully, they will get finalized towards the end of the year, and we would see execution of that in, let's say, beginning of next year.
Hi, Mr. Kalyani. Good morning, and thanks a lot for speaking to us here on CNBC TV18. The board has taken approval of 2,000 crores of fundraise. By when do you raise this money? And for what do you require this money? I mean, is there some inorganic plan that you have in the past? A couple of those government assets is what you're looking at. Has there been any progress? And is this fundraise for that?
Largely, we want to expand our Indian manufacturing. That is the whole idea of the fundraise. We believe there is a huge opportunity to increase Indian manufacturing. So we want to increase our manufacturing footprint in different states in India. There's a lot of opportunity. There's a lot of growth potential within the country, and a lot of, let's say, business that will come from places like Europe and North America into India. So we need to create much more capacity, and a lot of this is in different kind of products. You know, Bharat Forge was known as a forging company for many years, for almost, let's say, 40, 50 years. You know, today we have 5 different verticals. And clearly, we have developed multiple technologies to execute businesses in this vertical. Now, this allows us to create far more opportunities going forward.
So by when do you raise this money, sir? And is there a possibility that BEML, a stake, are you still interested in it? Has there been any move? We've asked you quite a few times, but has there been any movement there?
No, not yet.
And by when do you raise this money, 2,000 crores?
I think, we have taken an approval of the board to raise money. We now need to figure out how to raise it, in what form to raise it. But hopefully in the next few months, we will do it.
Okay.
We don't have so much need for money right now. We have almost 2,500, 3,000 crores on our balance sheet.
So you'd safe to assume you'll do it, I mean, opportunistically, when you need it, when you see something fructifying.
Exactly. We are working on multiple, let's say, manufacturing footprints to be developed within India, because we want to grow our Indian manufacturing, grow it, multiple times of what we are in the next 7, 8 years.
Dr. Kalyani, I must say that it is really commendable. I mean, you were talking about how you started off 30, 40 years back as a forging company, and then you transitioned so seamlessly into some of these fast-growing sectors, whether it's aerospace, whether it's defense. So hats off to you for that. But I want to talk a little bit about the traditional business, right? Because there is a clear slowdown. I mean, I was looking at your own numbers as well. In the CV business, the revenues have been under a bit of pressure. In fact, there's a loss of market share as well in the CV business. What's happening in the industry now, and do you think it could get worse before it gets better?
first of all, we are only gaining market share in the CV business worldwide, including India. Okay? Yes, the CV business by itself is a little slow because of all the headwinds that you see in Europe and beginning to see in the United States. But overall, I think next 2 years, the CV business will bounce back because that is when the emission change will happen and there'll be a lot of pre-buy. So we expect next year and year after next to be a boom year in this business and with higher market shares.
Okay, so you're saying that right now it's a bit slow because of headwinds in Europe and even the US, but next year will be better. Your overseas subsidies, since we're talking about Europe and the US, your overseas subsidies made an EBITDA profit this time of around 90 crores. I think that was because of what we've seen, in terms of a recovery in Europe. Can we expect the subsidies to be profitable by the end of the year, by the end of FY25? And, what could be the trajectory?
I think you will see the subsidies to be profitable next year. Okay. We will continue to make progress, so you will see continued progress quarter on quarter on these subsidies. It's a difficult business that we are dealing with. It's a highly technology-oriented business. It's not just pure metal forming. It's aluminum components made for the electric and hybrid vehicle that are produced in Europe and the US. But we are very confident that by the end of next year, we will have these businesses running profitably.
Okay, so overseas subsidies will be profitable annually by the end of next year. Got that. That's important. And, just before we let you go, once again, coming back to the new verticals, right? Defense, aerospace, it's now contributing a larger chunk to your business than a couple of years ago. What is the plan? How much will non-auto contribute compared to auto, say, over the next 3 to 5 years?
See, we have now 5 divisions in our company. We have our component division, which is the old forging company, which is what you described, CV and Pascar and all those kind of things. We have an industrial division, which is a new division where we now have 3 foundries in Coimbatore. And this is currently, the foundries are about at the level of 600 odd crores. And then we have an industrial forging business, which is about a little more than 1,000 crores. So we expect that this whole industrial business will double itself in the next 3 years. So we see a lot of traction happening in this business. So we have a lot of opportunities. We have opportunities in defense. We have opportunities in the industrial. We have opportunities in our existing component business. And as a combination of all this business, we are developing, electronics is very central to defense. It is very central to electric mobility. So, we are also developing that capability. Hopefully, in the next few years, you will see something happening out of that.
All right, Dr. Kalyani, thank you so much for joining us. Appreciate your time here on CNBC TV18 and have a great weekend. By the way, that is Bhavish Agarwal, all set for the Ola Electric listing. Remember, it is India's largest EV two-wheeler manufacturer that will be hitting Dalal Street. It is also the first ever Indian EV two-wheeler to list on the exchanges. And this entire industry, right, the electric two-wheeler industry is expected to grow at a compounded rate of 11%. Over the next couple of years. It's expected to reach a size of $35 to $45 billion. So this is a big listing that we're just about to see in a while from now. Big day for Bhavish Agarwal and the entire team at Ola Electric. So let's try and get the first tick on your screen. Ola Electric is pretty much harnessing India's EV revolution, right? It is the market leader. And there you have it, 2.5% higher. So decent listing there. Volumes also picking up at 77.7. That is a 2.5% gain. There are, of course, some issues that Ola Electric has been facing. It is loss-making for the last 3 years. It reported a loss of almost 1,600 crores in FY24. And, there are, of course, other issues that the company is facing in terms of operations, etc. But if you look at the overall industry, it is a fast-growing, high-interest industry. And Ola Electric is the market leader over there. It's sitting on about 46% market share as of June 2024. And the second player is far behind. I mean, TVS Motor is the second largest player with 17% market share. So if this industry grows, then Ola Electric grows with it. But of course, it comes with its own fair share of problems.
You know, listings always are fascinating, right?
Yeah.
I mean, because, you know, you've got a private business and suddenly one day you've got a quote which tells you, you know, what the business is worth. I mean, you know, it's just, not Ola specific, but I mean,
and it's an emotional time as well for, you know, these founders. Yeah,
absolutely. And, you know, it's so a 76 rupees listing. So a listing basically at the issue price. Now moving up a little bit, about 4% higher, 3 rupees. That's about 79 on Ola Electric. Look at the volumes, of course. It's a household name in that sense, right? And it's now part of the public market. So expect a lot of activity around this as we go along. So these are the first rates and the first moments, the first pictures which are coming in. Bhavish Aggarwal there and some of the top Ola management team. A congratulatory mood. Walking down steps after ringing the bell, and we'll have, of course, we'll be playing out our sort of excerpts out of that interview with Bhavish as we will through the course of the day. But first rates on your screen at about 79-ish right now.
Also, you know, this is one sector, right? Electric two-wheelers, which is highly underpenetrated.
Yeah.
Only 5% of the two-wheeler market comes from EVs.
Yeah.
So the scope of growth is immense over the next many years.
Yeah.
Of course, Ola is facing its own challenges in terms of losses, etc. But you know, the widening of this industry is something that the street is perhaps betting on.
I mean, there is no doubt, right? I mean, there's a long runway of growth, but it's just, you know, you got to. Who's going to come out on top? Because you got your Bajajes and you got TVSs and all of them, of course, lining up products, big launches, etc. But Ola's got the first mover advantage. Although Bhavish told me earlier that, well, I'm not the first mover.
No.
I looked at TVS and others who had already come to the market and learned from their mistakes, and then I launched my products. But at scale, he's got the first mover advantage.
And he's a pure play EV maker, right? I mean, the others have the IC engines, etc. So
I think there is a little more traction now coming through, right? 5.5% higher on Ola, at about 80-ish at this point. So it's not a bad listing for, of course, I mean, you know, $4 billion plus market cap company. One of the larger, of course, larger of the companies which has come to the market in the recent past. Prakash Diwan, I think, is with us. Maybe we can go across to him for a quick word. Prakash, how would you look at the listing and what from here?
Good morning, Prashant. So I think the listing is definitely far better than what personally I had anticipated. There was a little bit of that softness that was expected given the large float and the response that it got in the IPO. But, you know, I do agree this is going to be a bellwether name in that sense. For anybody who wants to have an allocation directly into the EV space, I don't think there's any better bet than this in terms of composition. But remember, you know, it's just about a few percentages of the overall two-wheeler market. As Sonia said, 5%. I thought my number was about 3.5%, and out of which they have a lion's share. So it's still a very small, you know, percentage in terms of the overall scheme of things. But as you rightly said, EV is likely to be here. You know, by the way, China has got 51% new vehicle registrations come from EVs last month. So that's the kind of change we are moving towards, hopefully. So great name, good setup, everything's fine, but very, very difficult to kind of sustain growth at these rates in this business. So I would like to look at this once it turns profitable, and there's still a long way to go for that. So, you know, wait for that, because we've done that mistake in some of these new age companies as well. This is not new age in that sense, but in terms of behavior, it could be very similar to all the Zomatos and Paytms and Nykas and deliveries of the world.
In this space, how are you feeling about the, you know, Ola versus the other players? Because, I mean, it's not an apples to apples comparison because the others have IC engines as well, TVS and Bajaj. But they're picking up too. Bajaj Chetak has been doing pretty well. TVS, of course, as we know, has, you know, cracked the code in this electric space. So if you had to choose, what would your pecking order look like now?
So, Sonia, that's a very valid question. Just because Ola has got listed doesn't mean that you need to kind of load up. TVS Motors has been probably the most balanced in terms of when it comes to IC and EVs. And remember, all of them, whether it's TVS, whether it's Ather through Hero through Ather, or whether it's Bajaj, they have a huge distribution setup, which is going to be extremely difficult for Ola to compete with. Right now, the novelty value is superseded anything else. But at some point in time, I think TVS and Bajaj will also start scoring very well on the EV. So as Bhavish said, they've learned from the mistakes that TVS made. Somebody else will learn from Ola's mistakes as well, right? So this is an evolution which is fairly evident and rapid. I would believe TVS would probably be far better placed in that sense from a more equilibrium balanced kind of a allocation rather than Ola. This is probably fancy on the listing side. So there will be some takers who want it, but I don't know how long this sustains.
Okay, thanks a lot for that. So that's Ola Electric, decent listing there, 6% higher now on the stock at 80 rupees currently. You will of course keep hearing more about this listing over the course of the next few days, but the debutant Ola Electric now 6% higher. Let's slip into a quick break. On the other side, we'll get you a lot of stock related news. Stay tuned.
Right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. So it's a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it. Right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen, learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my clan to go to university. So when he first came to campus and, I took him to the library, the Vijay Kelkar library there, I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like I was better than the player that I played against, but I lost. And I think that was my first.
Welcome back. Well, for now, let's focus on some stocks around the move. ABB is the one we're looking at. Vamakshi is here with more on that. Vamakshi, over to you.
Well, this stock is surely surging on the back of a good set of numbers. Revenue came in nearly, saw an uptick of almost 13%. It was a miss as far as the polls are concerned by almost 8%. And it is the motion, electrification and process automation business that is driving this growth. Robotics and discrete automation, however, saw a nearly 31% dip as far as the revenues are concerned. But the margins are the ones to watch out for this time around. And that is because the margins continue to be at a record high for the company. EBITDA margins have expanded by almost 526 basis points and have come in nearly 225 basis points higher as compared to our poll. Positive price movement, cost optimization and steady material costs supported this improvement. When we look at the segment-wise margins as well, we're seeing an improvement across the board, and this improvement is largely being led by the motion business followed by electrification. EBITDA resultantly came in nearly 56% higher, 4% higher as compared to the poll, and the net profit was up nearly 50%, nearly 3% higher as compared to the poll. The ordering activity, however, was a bit subdued. Order inflow dipped by around 5% and order backlog growth was rather muted at around 7%. The company also announced plans for CapEx. They will be expanding process automation as well as the electrification businesses. They've already secured a land on lease of almost 6.41 acres and they will be making an investment of up to 85 crores. So overall, good numbers coming in from ABB. They're expanding their capacity, bodes well for the company. As a result, the stock is trading higher today.
Okay, well, thanks a lot for that. The stock to watch right now is the new listing. Ola is up 11%. So big move coming in over there. Remember, the valuations were also brought down for Ola Electric. So there was quite a bit of pessimism on the stock. In that sense, there's a bit of a relief that you're seeing right now. 9% higher on Ola Electric as we speak, 83 rupees on that one. So decent listing coming in there for India's largest electric two-wheeler manufacturer that has now hit Dalal Street. But let's step into a quick break. On the other side, Lata will be joined by Shriram, Investment Director at Enam Holdings, to discuss Q1 earnings and the market outlook post the monetary policy decisions. Stay tuned.
Lesson that I learned, which is that you might be better, but sometimes your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus,
we have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what you did that all under 30.
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CI, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Hi there. If there is a medal for resilience at the Paris Olympics, I think the Indian stock markets may rightly claim the gold in this category. Just look at what the markets have taken on in just the past, say, 2 weeks. a budget which raised capital gains taxes on stocks and on other investments like real estate. A monetary policy that was a little more hawkish than the market expected. And a global rout that up until Wednesday had taken away over trillions of dollars in market cap. And yet today, where is the Nifty standing? It's only 2.72% off its peak and is still nearly 25% higher year on year. How do we chart this market here on and pick winners from what looks like an expensive market? I have with me a market master who has a record of spotting trends ahead of the curve. Think PSUs, think defense stocks. I have with me Shriram, the investment director at Enam Holdings.
Thank you, Lata, for inviting me.
Well, Shriram, first up is the market. I mean, it's very nice to say the Nifty is up 25%, but that also is a bit of a fear. Do you think we should worry too much about valuations now?
No, we should. I think on a broad basis, we think that we could either see a correction or we could see a sort of a time correction, which is the market stays in a range for a while, absorbs the earnings, absorbs the, a lot of the negative news that we are getting globally.
Yeah.
We could see interest rates hike in the US, which was earlier seeming like a very benign thing. Now it could be even 100, 150 basis points just in the next 6 months. Yeah. So I think those are the things the market has to absorb. So we are a bit cautious at this stage. There are pockets where we like stocks, so it's more stock specific bottom up. But on a top down basis, we are a bit more cautious right now.
Okay. So you think the global shudder that we got is not done?
My personal view is it's not done. These are too complex, monsters to actually analyze. I mean, think about yen as a currency, it's corrected 10%, and then from there it has, gone up again by about maybe 1 or 2%. The markets, the Japanese market is down 25%. Nasdaq has seen a 10% correction. So we've had multiple, activities in the last, say, I would say 10 days. Exactly. And within that, I guess, as you said, India has been very resilient, 1 or 2% correction on a net basis. Currency, I think India has been one of the most stable currency. Look at, Korea, Taiwan, Indonesia, and I'm leaving aside the Latin American currency, which have literally collapsed. All these are down 5-6%. Our currency is barely down 1%. So I think we've been very stable. Our macro looks reasonably stable. I mean, you look at the commentary yesterday and the macro looks very stable. So I don't think the worry is more from India. The worry is what is happening globally, and we haven't even spoken about geopolitical events which are all over.
Oh yes.
So I think that is the worry more than what is happening in India.
Yeah, geopolitical worry. Let's not forget November can mean a Republican victory also.
Exactly.
And then things can turn. But yeah, we still have to pick from the current basket. Let's look at the earnings season. What did you take away, say, from the financials? That, I guess, was the mediocre show.
Yeah, so I think we were expecting that credit cost will normalize. Most of the large banks had very low credit cost. Some of the PSU banks had 15-20 basis points of credit cost. Large private banks were in the 50 basis points range. And our expectation for the current year is that credit cost will go up in some cases by 50-60 basis points. In most cases, on an average, at least by 25-30 basis points. So that itself puts a pressure on the net earnings that they will report. On top of that, we are seeing the crunch on deposit, which basically means that you're paying more for deposits and you're not able to increase the loan rates for various other reasons because of competition. And plus, Reserve Bank is, pounding on top, saying, look at the risks.
Loans yesterday, Khara was on the channel after the policy. He said, many of my loans, corporate loans, are tied to T-bills. So I can't raise that. Yeah. But deposits are expensive.
So we think that earnings for this year for financials will be muted at best 8-10% growth. But having said that, a lot of it is priced in and the valuations look attractive in a market where we are finding difficult to find, value. We think that we could ride, 1 or 2 quarters of underperformance, but this looks a space which is reasonable if I take, say, a year or a 18 months view.
Yeah, in the long run,
yes.
This is still a safe sector, a good sector. Okay, let's come to Ola. Ola's listing. How do you look at as a concept stock almost the only?
So I'll not talk on individual stocks. But on EVs in general, I think it's too early to make a prediction or to give a verdict on who will be the winner or who will be the loser. But if I look at disruptions across the globe and across other sectors, it's generally been that non-incumbent has always been a winner when there is a disruption. So you can go back to the cameras, you can go back to what happened to messaging, WhatsApp.
Phones.
I mean, there are exactly. I mean, you can go back in history and check that disruptions are the winners are normally non-incumbent. We are seeing that with, say, a Tesla in the US. So I would, if I was a betting man,
would you worry about autos generally? Are you an investor?
I would be worried because the traditional auto companies are the ones who are getting disrupted, but they are fighting a battle where they also want to be in the EV space, and that's not a profitable venture for them. It's a Me Too product for them, and we are seeing across the globe that companies, especially in the auto space, are cutting back because they're facing a lot of loss, and the adoption at the high price is becoming lesser. So I think this is a moving story. At this stage, it's too early, and we don't need to participate in every disruption at the early stage.
Exactly.
So we are watching from the sideline.
Okay. Well, you were famous in CNBC studios, definitely, and definitely among our viewers, for spotting the PSU curve ahead of times and for getting out of many of them also ahead of the crowd. Now, how do you look at the PSU space? Is there still anything to pick up?
So we still like a few of the PSU banks where we think that the credit cost normalization is still happening. Many of them have already normalized, so for them it will go up. There are a few where the credit cost is still coming down. As I said, on the operating level, I don't see banks growing more than 8-10%. But as credit costs normalize, you get a significant bump up in the profits.
Yeah.
And a
PSU
few
banks.
more here and there in the utility space.
That's what I was coming to.
Yeah,
Power.
Exactly. So power is a space that we are in general bullish. I think India is underinvested in power. We will, double our power capacity in thermal and in wind in the next 2-3 years. We will be adding, say, 70-80 gigawatts in the thermal space over the next 4-5 years. So we are very bullish on the power equipment space. The entire eco chain will do well. And
yeah, that's what you don't talk stocks, unfortunately. But if you can guide us, see, there are power financiers. There are the REC, PFC variety. There is the power generators, the Tata Power, Jindal variety. And then there is the equipment guys. Where would you
I think the entire ecosystem will do well, right from the utility. Obviously, their returns are controlled, but you have open access. So there are percentage of the power that you actually don't sell in the controlled market. You are selling in the open access market where you can get 6, 7 rupees or 8 rupees, whatever is the demand, and the demand is very high today. Then you have the REC PFCs of the world or the power financiers of the world. Their demand is going up also, so they also would do well. I'm not suggesting that they are a buy. I'm just
saying that they do well in the.
Do well. And the equipment guys, they are in the best sweet spot right now. So if you see margins for almost all the companies are going up 100, 200 basis points because they also haven't created capacity because there was a lull in the last 4-5 years, and suddenly you're seeing huge order books. They're setting up capacity. The demand is very good. So I think it's for individuals to figure out, which part of the value chain they want to play. A lot of the stocks have rallied, but the earnings are also growing at 30-40%. So it is a space worth keeping a watch, especially you get corrections every now and then, and that's the time
equipment guys get paid by the power generators because the power generators are disciplined stocks, but the power generators don't get paid by the discoms because their buyers are not very disciplined.
A lot of the power addition is also happening in the private sector, which is even corporates are setting up smaller power plants for their usage, internal usage. So I think there's a multiple play here. You can also play the solar, wind. There are multiple plays available here. I leave that to individuals to figure out what they want.
That is something
as a theme. It's a space that that it is going to grow. We've underinvested. And keep in mind that globally people are underinvested. With AI, with data center, the power requirement goes up multifold. So I think we haven't even spoken about that. A lot of data centers are relocating in India. You spoke about EV. EV needs a lot of power if you want to charge. Even a manufacturing of EV, which is the battery itself, to charge that itself, you need a lot of power. So I think this is a moving story where the demand for power is going to be there, not only in India, globally. And the options to play are multiple, but a lot of them have moved up. So I think it's worth, keeping an eye on them on corrections.
One of your ahead of the curve themes was also EMS,
yes.
The electronic manufacturing companies. Are you still, what is there, Dixon, Keynes, Myrna, Amber?
Yeah, so it has become a very stock-specific story there because as the sector is evolving, you're seeing the margins are very thin here. So unless you're very efficient,
yes.
You would take a hit. We're still bullish on an overall space, but it has become a very stock-specific story. But over the next, if you take a 5-year story, I think all of them will do well as they evolve because you need electronics in almost every space that we touch today. And you need the manufacturing of that. And with all the PLI benefits that the government is giving, they're all investing in this space. So eventually they'll all do well. There was a period where they had gone ahead of their time in terms of earnings to where the stocks were. A lot of that is correcting
yes.
now. So it's worth looking at it again.
Okay. The other theme that was extremely popular 2 years ago, when they listed Nykaa, Zomato, PB Fintech, the entire e-commerce space, irrespective of the field. And then they had this huge downturn, which was led by Paytm. But everybody saw that now has that space become attractive again? Zomato again is expensive. But
yeah. So it has become, in fact, a year back itself, when we spoke, I had highlighted that we didn't participate in any of those IPOs in 21 because we found that there was no path to profitability, and then eventually these stocks corrected and the management also started to talk about profitability. That's something which we understand. It's very difficult to, take a call on stocks just based on the sales number. So it's far easier now to, take a call. So we are invested in a few of them and we like, but it's very stock specific. Each of them have their own dynamics. It's not a, generic portfolio where you can say, oh, all this will do well. So we are invested in a few of them.
Okay, I always make the mistake of suggesting themes. You tell me what have we not discussed and what you would think stands out for you.
No, I think the only other thing that I can say is that, the fact that Reserve Bank has been highlighting about this NPAs in the unsecured, and I've been very vocal about MFI as a business where we are seeing a lot of...
Yes, we saw the fusion results.
Exactly, a lot of NPAs coming there. And, in the quest to grow the loans faster, we are seeing many banks not adhering to, credit standards. I was surprised to see in one of the conference calls, the management mentioned that there are individuals who have 3 to 5 loans, 6 loans, and somebody from the market told me there are people who have 10 or 15 loans also from banks. I wonder how banks are giving so many loans to an individual. But I think the fact that yesterday Reserve Bank governor also sounded out some caution, especially on top of loans.
Actually, they have told banks now they have to report to the CIBIL every 15 days.
Yeah, so I think
hopefully they will catch the guys who are taking money.
Those are steps in the right direction. Some caution is warranted. You make most of your mistakes in good times.
Yes.
So I guess this is the time to be cautious.
No, actually, there's never enough time to discuss with you. We haven't still discussed the capex cycle, cement stocks, but we have to postpone that for another day.
Sure.
Sridhar, Shriram, pleasure. Thank you very much for
Thanks
dropping
for inviting
by
me, Lata.
Studio. Okay, that's still a lot of caution, but stock-specific picks are still available if you do your homework. Wrap up on Bazaar on that cautious optimism. Chartbusters coming up.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally.
The Indian market opened sharply higher following a recovery on Wall Street overnight. Key indices are almost 1% higher, with the Nifty firmly above that 24,300 mark. All sectors trade in the green. Banks are the relative underperformers by gaining 0.75% as against the others at 1%.
Well, Eicher Motors is thumping ahead with a 4% gain on the back of the company's first quarter numbers. Revenue rises 10% on a year-on-year basis. Net profit too surges by 20%. Goldman Sachs, they raised the target price to 5,600 rupees a share.
Biocon earnings missed street expectations in the first quarter. Management in the conference call says Q2 will also be relatively muted and some momentum will be seen only in the second half of this year. The stock under pressure in an otherwise strong market.
Kochi Shipyard surges more than 5% after reporting a strong quarter led by the company's ship repair segment. The revenues rise 62% on a year-on-year basis. Margins as well expand. The stock up 4%.
Ola Electric makes its debut on the exchanges. The stock lists on the NSE at the issue price of 76. Thereafter sees a rally of 15%, currently at 87.
Hello and welcome to Chartbusters. I'm National Souza. Joining me as always is Mangala Malu. It's a Friday morning. It could be a freaky one for the starters, though the first start of trade has gone to the bulls. We're still up close to around 200 points, coming off a little bit from the top. The ingredients are in place to have a good session. Let's hope, getting into the weekend, the bulls can fight back, because otherwise the bears, throughout the trading sessions that we've seen on a day-to-day basis, markets start off in the green, but the bears do fight back at some point of time. Manglam, interesting times.
Interesting times. It's exactly the good length balls that we keep talking about, Nigel. You know, you don't know whether you're going to go front or go backwards on that one, because where the Nifty is at right now, 24,324. Over the last 4 trading sessions, it's faced supply at exactly these pretty levels, 24,350 to 24,400 thereabouts. Let's see where it goes from here. But a lot of individual stocks on our radar this morning. We have Alembic Pharma reported a slightly muted set this quarter, led by weakness that we saw in their API business along with the rest of the world business as well. We do have with us Pranav Amin, who's the managing director of the company, joining in. The stock lower by about 1.5% in an otherwise strong market. Thanks a lot, Pranav, for joining in. Just a couple of questions first. US, you had a target of close to around 25 ANDAs to be launched for this year. How many have you launched in the first quarter? What's pending for the remainders? And this quarter saw weakness because of API and the rest of the world business. Where do you see pickup here? And on the back of that, what's your overall prognosis?
Sure, yeah. Good morning. I thought actually it was a pretty good quarter. I think the 2 large markets that we operate in, the India business and the US business, both had pretty good growth. I think net revenue increased 5%, but between the 2 of them, the US grew 18% and the India market grew 9%. So those are the 2 big markets. The API business has been muted, and I said last year that it will be muted for a couple of quarters. This is largely transactionary in nature. And I do believe that the API business, which we've been growing at at least a 10 to 15% CAGR over the last couple of years, will continue that growth by the end of this year. The ROW business has also been like a 25% growth kind of a CAGR for us over the last 5-7 years. And that too is on a good wicket. There's a huge order book. The only reason for this is down is we've just had too many orders, and we just couldn't ship out due to supply constraints. I expect that by the second half of the year, we'll be back to this kind of growth that we've been seeing.
All right. Hi, good morning. Thanks a lot for joining in. On the US business itself, I recall earlier you had said that you were looking to grow in double digits. This time around, you've grown by close to 18%. So what kind of a number should we work with for the year? And also that pricing erosion pressures, that seems to be abating quite a bit.
Yeah, so I'll take the US business. Actually, you also asked me about the launches. We had guided for 20 plus launches in this financial year. I think we're on the track for that. The first quarter, we just did 2 launches, but we did receive 11 approvals. So I think we're on track. I think next quarter, we'll launch another 10, 12 products at least, and then we'll catch up by the end of the year. So there's a whole pipeline of launches coming. So that's one aspect of it. Pricing erosion continues to remain in the US market. We do see double-digit erosion in the market. Is it a little better than it was a couple of years back? Yeah, maybe. But of course, we've come off a higher base. So pricing erosion is there. It's just a matter of being there. You have to be compliant. We recently had an FDA audit at our facility, also at our main formulation facility F1, which was passed without any observation. So that is a good sign for us. And in terms of the growth, the last quarter was a good growth in the US market. It was a little lumpy in terms of there were a few exceptional items that we received. We got some orders. But on a steady state, I'd said that we should grow the US business at least 10 to 15% this year.
All right, 10 to 15% for the US business this year. First quarter, 18% because of some lumpiness. Pranav, I wanted your thoughts on your animal healthcare business as well. It's a business that has been growing upwards of 20-25% odd. You had guided for that 20-30% sort of range in the next couple of years as well. Are you on track for that? How did that business perform in the first quarter? And what's the prognosis here again?
Yes, absolutely. I think the animal business has been it's a really well-run business for us. I think it's one of the better-run animal health businesses in India. And it's been doing pretty well. If you see, that's got a CAGR of about 28% over the last 5-7 years. Keeping up with that trend, the animal business grew by 23% in this quarter as well. And we hope to keep growing that business. We're adding more products and we're adding more field force on that as well.
So 20 to 30% was your range. For the end of this year, you will be closer to 20 or closer to 30?
Let's see how it goes. I think it's, if you see historically, it's been upwards of 20%. It's been closer, actually over 25. But I think as we go, the base is getting bigger. I hope to grow it at least more than 20%.
We focus a lot on the top line, Pranav. Then now let's get to the profitability. Margins, I recall you telling us that in the next few years, you see that moving to higher double-digit margins and then breaking to the 20% mark. However, in the first quarter, it came up to close to 200 basis points on a sequential basis. For the year, what's the number we should be guiding for? And from year on, do you expect an improvement for the remainder of this year?
Yeah. So we don't give a guidance on our margins for the year, but you're right. I'm quite clear that over the next couple of years, we will see our EBITDA margins, which were down actually more, to go back up to the 18, 19, 20% kind of levels in the next couple of years. And a few reasons why this will happen. One, our R&D spend, which used to be about 14, 15%, is now down at about 7 to 8%. And I think it will stay in that level. Number two is we have a lot of these new facilities, the new capabilities that we've created, which are creating a little bit of a drag on the margins. But as we start ramping these up, which will happen in the next couple of quarters, you'll see an automatic improvement in the EBITDA. Compared to last year, where we had a bit of just, I think, shade under 15 or close to 15%, we'll do much better this year. The first quarter compared to the sequential quarter was lower because Q4 was little lumpy in nature because we had some PLI benefits and some other stuff. But moving forward, the goal is there that we should get to the 18 to 20% EBITDA in the next couple of years.
All right, 18 to 20% by when? Because, I'm looking at a brokerage note and they expect 18% in FY26. Do you think you can outpace that, get to 20% by FY26, FY27?
Well, internally, yes, we'd have. We don't give a guidance, but we aspire to have.
No, your internal targets, basically. We're not looking for a guidance for the street.
And Pranav, you have an aspiration, right? We can term it as an aspiration.
Absolutely. Aspiration is always the aspiration. You want to do well. But a few things which are out of our control are the price erosion in the US market and how it pans out. So I think we'd rather grow it consistently and have a more sustainable business rather than a one up, one down.
All right, just a final question before we let you go. The Entresto generic, you had a settlement with the innovator out there. You are hoping for some sort of clarity coming in the next couple of weeks. Just wanted to understand what happens once you get some clarity. Either way, whether you are allowed to launch it or not. We just want to understand both the scenarios here.
So I think, Entresto is one of the bigger launches that is coming up in the market. We will not be in the first wave. We will be there at some point as per the terms of our settlement, which I can't disclose. But it's an interesting market, and we're looking forward to seeing how it pans out. I think the next couple of weeks, next 3-4 weeks, we'll get a lot more clarity how the market's going to go, and we'll decide our strategy based on that.
Okay, all right, Pranav, appreciate you joining in and giving us those details. You're optimistic about growth in various segments, including animal as well as the US business. Margins should be headed towards 18 to 20%, either in the next few months or the next few years. We'll track that. Appreciate you joining in. Well, time to move on then, and time to get you some ideas for profit from Money Control Pro. We have an idea that's coming in for our ideas for profit from Neha Dave. Let's go across to her. Neha, take it away.
Today's stock idea is the CSB Bank. CSB Bank posted a muted performance in Q1 FY25. While the bank reported a strong loan growth, profitability was dragged down by a sharp fall in margins and higher operating expenses. The key question is then, why should investor consider CSB Bank? While the bank's return on asset has declined to 1.3% in Q1 FY25, management's guidance is very encouraging. Management has guided for improvement in margins, asset quality and cost-to-income ratio going forward. The bank is confident of achieving return on asset between 1.5 to 1.8% in FY25. While the guidance is positive, the real reason to consider CSB Bank is because of its gold loan portfolio, which constitutes around 50% of the bank's loan book as of June end. Thanks to high yields on gold loans, the bank could maintain the net interest margin above 4% in Q1 FY25 despite the rise in cost of funds. The bank's credit cost is also on the lower side because of the gold loans. While capital is not a concern for the bank because of the strong parentage of Fairfax Group, and as the capital adequacy ratio is comfortably about 20%, lending against gold helps the bank to conserve capital due to lower risk weight on the gold loans. Overall, the bank benefits immensely because of its gold loan portfolio that generates higher yields, has lower credit cost and a lower risk weights. Now, talking about the valuation, CSB Bank is trading at around 1.2 times the book value estimated for FY26. The valuation is attractive given the guidance on improvement in return ratios and a huge growth potential on a small balance sheet. Though the execution risk remains, the valuation re-rating along with the earnings growth can drive the stock upside. That said, the speculation about a potential merger with IDBI Bank can weigh on the stock performance in the near to medium term, and hence only long-term investors should consider this stock.
All right, that's about an idea for profit. Take a short break, come back. On the other side, we have another management joining in. Pankaj Poddar, the Group CEO of Cosmo First, joins in to discuss the company's quarter gone by.
Much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first.
Welcome back. Well, keep an eye on a couple of stocks in the broader markets. Gujarat Gas has suddenly moved to the low point of the day, so we'll try to find out what's gone on there. But for the time being, it's a sharp decline. The stock from the green has moved into the red, so that one comes up for you on the screen. NMDC has been reeling under pricing pressure cuts, so that one as well is a little bit lower. But stocks that are taking off actually, NBCC, big spike out there on that one. And Oil India, Sonal had told us earlier today that those numbers are quite good. The stock is holding with a gain of around 5.5%, Mangalam.
A couple of these cash market stocks doing extremely well as well, Nigel. You know, I'm looking at Godfrey Phillips. Yesterday, post-market, they reported their presentation, and that indicated there was a 26% volume growth in their cigarette business. And that compared to ITC of about 2.5%. And over the last 6 quarters, you know, Godfrey's volume growth has actually been outpacing ITC over the last 5 out of 6 quarters. That tells you that they are gaining market share. And on top of that, the trigger of them selling their retail business is also something, you know, we'll keep an eye out on. And keeping an eye out on another retail player as well, Spencer's Retail. We've heard from, you know, the RPSG group on the growth prospects of the company, etc. They have been acquisitive in nature. Spencer's Retail. So you have a retail asset on the block. Will this one be, you know, interested in buying that or not? Just a point that we put on the table. That stock is up around 10.5%. We'll keep an eye out on how that pans out. Take a short break. Come back, get you more on the markets and get you the promised conversation with the management of Cosmo first.
Of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Assuming a normal monsoon and taking into account the 4.9% inflation print, which has already come out so far as Q1 is concerned, CPI inflation for the current financial year, that is 2024-25, is projected at 4.5%, with Q2 at 4.4%, Q3 at 4.7%, and Q4 at 4.3%. CPI inflation for the first quarter of next financial year, that is Q1 2025-26, is projected at 4.4%. The risks are evenly balanced. First and foremost is the fact that our target is the headline inflation, where food inflation has a weight of about 46%. With this high share of food in the consumption basket, food inflation pressures cannot be ignored. Further, public at large understands inflation more in terms of food inflation than the other components of headline inflation. Therefore, we cannot and should not become complacent merely because core inflation has fallen considerably. Second, and equally important, is the reality that high food inflation adversely affects household inflation expectations, which have a significant impact on future trajectory of inflation. The Monetary Policy Committee met on 6th, 7th and 8th August.
Welcome back. You're watching us here on Chartbusters. Let's talk about Cosmo first. The company posted a 121% rise in profit after tax on a year-on-year basis, led by an EBITDA jump of almost 50% as well. Pankaj Poddar, the Group CEO of the company, joining in to discuss the earnings further. Thanks a lot for joining in. It's been a strong start. You're off to the Flyers in the first quarter of this year. So the natural question that one asks is that what's your target for the entire year, at least on the revenue, volume, margin front?
Yeah, hi everyone. So on the revenue side, we feel that we have already done close to 690, and we feel we should be around 3,000 crores for this year. And as far as the EBITDA numbers are also concerned, things are looking good from here. So we have done around 12% EBITDA in this quarter, and we do expect that things should get better from the current quarter numbers.
How much better?
It's difficult to predict, but it should be better than the first quarter.
All right. Hi, Pankaj. Congratulations on a good showing in the past quarter. So good on you. Let's get a couple of numbers going. Could you tell us how much did injection molding contribute to revenues in the first quarter? And how do you see this number scale up?
So see, the Cosmo Plastic, the rigid packaging business is new for us. It's hardly a few quarters old. Injection molding has just started in the last quarter. The run rate, we closed, I would say, June month at 3 crores, in July at 3.5 crores. So month on month, it's going up. And it will continue to grow because right now we are hardly 20-25% utilized. So as we move along, capacity utilization will get better.
Got it. What about specialty sales as a percentage of the volumes in quarter one? I think was around 69%. Where does this number head? Because that's what will help margins, right?
Absolutely. And this, I would say that last year was not great for us, especially because of whatever was going on in Europe and America. So those markets are recovering well. And, vis-a-vis last year, we have grown by 5% from 64 to 69. And in fact, July, we did even much better. We crossed 70. And we expect that by the year end, it should at least touch 75, if not more.
Okay. What about the smaller part of your business? You're saying you're looking at consolidation of Ziggly. What's the current run rate out there? Small, but tremendous potential.
Yes, so Ziggly, we have been consolidating in the last quarter, I would say. We have been able to now bring down our losses very significantly. We were operating at close to 3.7 crores monthly EBITDA loss, and we have now brought it down to 2.5 crores through taking a lot of rationalization in the measures. The other good thing is that the same store sales growth is growing at a very nice pace. We are growing close to 6 to 7% month over month when it comes to same store sales growth. So we expect that within this year, we should be close to doubling our retail revenue from 23 stores that we had opened till March. We're also in, opening more stores now. So you will start seeing more stores growing. Right now we are at 24. And by the year end, we expect that we should be close to 40 number when it comes to the entire Ziggly. The other thing that we are doing in Ziggly is that one side, we have put a lot of emphasis on the vet care practice now, where we are doing complicated surgeries. So vet care as a practice. So we are one company which is giving the entire ecosystem to the customer, whether it's grooming, it's vet care, as well as the products. Similarly, we've started launching a lot of private labels and signature range, which has been loved by the customers very nicely. Yeah.
So what is the average throughput per store, if you could give us a sense currently? You said that SSSG is about 6 to 7%, but if you just look at a per store sort of revenue, what is it right now?
Yeah, so at a GMV level, it's close to 11 lakhs.
11 lakhs per store. So by the end of this year with 40 stores, you should be closer to around 4 crore in terms of GMV, right? 4.5 crores.
Yeah.
The other thing that I wanted to know in the pet care business itself is that, a lot of large entrants are making their announcements. Yesterday itself, we had Godrej Consumer saying that they are eyeing the pet nutrition business. So you're just a retailer here, right? There's no competition from new entrants who would come into this space. Just wanted to understand your right to win.
Yeah, so right now there are, I would say from retailer perspective, there are 3 players. And again, omni-channel, I would say we are the right fit because we are the only company which is offering complete ecosystem, both digitally and in retail space. And that way we feel our model is very strong and we continue to grow very nicely month over month. So whether it's our online where we are very focused on making sure that we only sell high margin products so that it can become a profitable business for us in the times to come. And similarly in the retail space where we are focusing on the right areas. And we feel that our service mix could go as high as 55 to 60% in the times to come. We are already hovering at 45% and services are actually growing faster for us. So we should be doing well there.
And the demerger happens when? At 100 stores or at 150?
Difficult to give any date at this stage. Definitely, we have to do the demerger. We have already set up a new legal entity, which is Ziggly Vet Ventures Private Limited. We made the announcement a few months back for that. But demerger will take some time. We have to decide on the right time, but it's not going to be too long. It should be within the next couple of years.
Okay, all right, Pankaj, appreciate you joining in, sounding reasonably optimistic about prospects of business. We'll hold you to these numbers, wishing you a good day and looking forward to chatting up with you at the end of this quarter. Well, for the time being, we have done on Chartbusters. That's it from Mangala, myself and the entire team that put this show together. Trading hours waiting for you on the other side. Don't go anywhere.
A detailed assessment of the evolving macroeconomic and financial conditions and the overall outlook, it decided by a majority of 4:2 members to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%.
Free speech, and yet the need to ensure that there is moderation and there are guidelines and it is a safe space. What's been the experience on that front today? I mean, I remember you saying that whatever's happening in the world is happening on YouTube, and we have active wars currently on in the world at this point in time. We've got situations that have just taken place over the last few days where there is an active call inciting violence, for instance, in different parts of the world. Do you believe that there is a need to perhaps review the moderation community guidelines, the moderation policy? Is there a need to engage actively with regulators, with governments at this point in time around the world? I mean, how do you see the road ahead on this front going forward?
I mean, I think you encapsulated it quite well. I do think what happens in the world happens on YouTube, and what happens on YouTube does influence what happens in the world. And that's why living up to our responsibility here in India, but really globally everywhere that we operate around the world, is my top priority. It's what I will prioritize above everything else because it is the right thing for us to do, but it is also the basis of the business opportunities, the creator economy, everything that we've talked about. And so we work very closely with our partners in government here in India, but really all throughout the world. And I would say that we have a clear set of community guidelines that we have invested in very heavily over the years. In many ways, we have learned through trial by fire over the years to understand sort of how those community guidelines could be written, how they should be clear. But they are always up for being modified, It's important for us to have clear principles, but then also to be flexible in terms of how we adjust them. Because as you rightly point out, what's happening in the world is changing on a regular basis. And so that's really how I've approached the space. And it's something that's near and dear to my heart. It used to be what I was responsible for even as a chief product officer before I took over as CEO. And it's something, as I said, that I'm going to prioritize both in terms of my time, but also resources at the company before anything else.
My wife.
Good morning. Welcome to Trading Hour. It's a Friday morning. I'm Reema Tendulkar. With me is Hormuz Fatakia, and markets are trading firm. There has been a global rebound. Indian markets are currently up close to about 1%. And so far, the first 2 hours of trade have been very, very steady. We haven't seen any dip, nor have we seen a big, push up. Markets had a gap up opening. We've largely held on to all those gains. Midcaps moving in step with the frontliners. Midcap index a gain of 1%. Good advanced decline ratio also to back it.
Indeed, it's a good start as of now. The bulls were needing that kind of a start after the kind of week that they've had. But then again, the question is very important. The Nifty is at exactly that level where it has been getting a lot of supply all through the week, which is 24,350. And the question is, will that level sustain as we go into the day? We are slightly off the highs of the day. We were up over 24,400 at one point of time. But now we have gotten below that mark. And now we are at 24,350, which is that very decisive level for the Nifty. Well, we were down 2.5% this week, and it is possibly likely that we will end lower for the week, but the only question is how lower can we end?
So far at least, I think the benchmark indices are down 1.5% for the week. So 1.5% on the Nifty down for the week. The midcap index is down 1.1% for the entire week. The midcap, the banking index will also come up, and that's seen a cut of about 1.5%, a little more than that. So week to date, we are likely to end with a bit of a correction, but the durability of the pullback is going to be watched very closely in the second half. But let's begin our show with a corporate conversation. VA Tech Vabag, the company has seen a top-line growth of 13%. Profits have gone up 10% on a year-on-year basis. Skanand Prasad Sitaraman, CFO of the company, is now with us on the show. Sir, thank you very much for joining in. Starting with your top-line growth of about 13%, your long-term guidance is getting a 15 to 20% kind of growth year after year for the next 3 to 5 years. So in that context, Q1 is 13%. So are you confident that for the full year, things will pick up and you will end the year within that guided band of 15 to 20%? And was Q1 slower than your expectations?
Hi, good morning. Thank you very much for having us on your show, and greetings from Vienna. We did our first celebration of the centenary because we are celebrating 100 years this year. So
congratulations.
Congratulations, yeah. Thank you. And yes, it's also a good occasion to start the year with a successful quarter. We have grown year over year by 13%. Till the last year, there was this realignment of our business based on the strategy in terms of reducing our European exposure, improving our EP share of business, going more towards industrial. All of those are largely done. And now we are seeing, like we guided during the year end, the growth has started now, seeing in the top line. And we are confident that we will be in this medium-term outlook band of 15 to 20% going forward.
For the year, 15 to 20% on the top line is likely?
Yes, 15 to 20% is a band that we have given, and we are confident that we can achieve that.
For this year. Was Q1 slower than what you were anticipating? And what's the mix between international and domestic going forward? And even in a word on margins, because again, it's coming at the lower end of your guided band.
See, it's always a mix of projects that drives the margins, and we had guided a 13 to 15%. As the volumes improve, you will see that the margins also reflect the kind of projects that we are doing. From a growth perspective, usually the first half starts slow, but towards the second half, you will see the growth coming, and that's why we had given a more medium-term outlook instead of a quarter-over-quarter outlook.
Mr. Sitaraman, good morning. Thank you so much for joining in, and many congratulations on the century as well for your company. I wanted to ask you about your order book, sir. You've spoken about your current order book being around 10,700 crores. What was the current order book in the first quarter? What was the order inflow that you received in the first quarter? The guidance was around 4,500 to 5,000 crores, if I'm not wrong.
See, we had also mentioned during our year end that we are confident of growing our order book in a very strong way through this year. And here we are happy to see that we are already a preferred bidder in projects of over 6,000 crores, driven by the Middle East and Africa region and also the India region. All these are advanced technology jobs in desalination, in wastewater, both from municipal and industrial marquee clients. So we are seeing these orders coming through, and you will see in the next 2 to 4 months that we will start also getting these orders, and we will be able to announce them. But today we have also said it in our investor presentation that we are a preferred bidder in projects worth over 6,000 crores.
And what do you plan on ending the year with, sir?
We gave a 16 to 17,000 crore kind of guidance on the order book, and at the moment, with the kind of orders that are coming, with the pipeline that we are seeing, the strong outlook that we are seeing, we are confident of being in that range.
This 6,000 crore being a preferred bidder is an international, or is it a mix?
It is a mix, but largely driven by international.
Okay, and you're confident that you will end the year with an order book of 16 to 17,000 crore rupees.
Correct.
Right?
We are well on track towards that.
All right. Between international and domestic, where do you enjoy higher margins?
See, margin is very project specific, but yes, the international part gives us better margins because of the specs, because of the technology appreciation, and also the fact that we are able to do more EP projects. So a very plain vanilla answer, the international projects are usually better than the domestic projects, but it's very project specific and what kind of technology that we deploy.
Mr. Sitaraman, in your previous earnings call, you had mentioned that you have a very strong pipeline in the Gulf region. The issues that are prevailing currently in the Middle East, are you facing any sort of impact because of that? Or is the pipeline still continuing to remain very strong? And if you could quantify that for us as well.
See, we've already said a good amount of the close to $1 billion of bids that we had done was mainly driven by the Middle East region. And more importantly, Saudi Arabia, where we are seeing desalination being a major traction, and also the rest of Middle East and Africa. Till now, we have seen this region being strong, and we expect it continue to be strong. Also, the preferred bidder status, which I mentioned, has a good chunk of orders from this region. So we are very bullish about the Middle East. We don't at the moment see any issues around the robustness of the pipeline. But yes, we will keep a watch on the geopolitical movements. But at the moment, we don't see any difficulty in this region. We are executing a few projects, and they are all going well.
Thank you very much for joining in. That's Viatech Wabak for you, maintaining their medium-term guidance of 15 to 20% on the top line, likely to achieve it this year too. Margins will stay between 13 to 15%. Typically, work picks up in the second half of the year. So as volume growth picks up, they expect margins too to trend up with that. The company is a preferred bidder in orders worth 6,000 crore rupees, and they're likely to end the year with an order book of 16 to 17,000 crore rupees. So those were some key numbers from the management. Get into a break. On the other side, we'll put the spotlight on Ola Electric, which made its D Street debut today.
And she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to to, without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked, my kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X.
Back with us here on Trading Hour. On to the big listing of the day, that is Ola Electric. The stock listed at its issue price of 76 rupees, but since then has seen a very strong response from that. 16% higher now from its issue price. Sonia is joining in with the details. Sonia, a very strong listing.
Absolutely, very strong debut coming in from Ola Electric. As you rightly pointed out, 16% higher right now. It listed at 76 rupees a share versus the issue price, which was 76. And then post-listing, the rise started for Ola Electric. Now, Ola, as we know, is India's largest electric two-wheeler manufacturer. It has the highest market share in the EV space currently. Its market share as on June stood at 46.2%, and the second closest peer, TVS Motors, way behind at around 17%. If you look at the financials of Ola Electric as well, the revenue growth has been very strong over the last couple of years. In fact, in FY24, the revenue growth was 88.4%. The company, though, has been posting losses for the last 3 years, but has suggested that they are on track to break even. It reported a loss of 1,584 crores in FY24 versus a loss of 1,472 crores in FY23. Now, the company intends to utilize 1,600 crores of the funds raised for investment into research and development. They are looking to expand their product portfolio into electric motorbikes next year, and they are likely to unveil a plan on the 15th of August itself. The big story here, or the bigger story rather, is the growing electric vehicle industry. The Indian electric two-wheeler industry is expected to grow at a compounded rate of 11% over the next couple of years to reach a size of $35 to $45 billion, and Ola Electric is at the forefront of that EV adoption. The company is now focusing on cost saving as well by producing lithium-ion cells in-house. That has been the biggest cost for the company. Bhavish Agarwal in the recent interview did mention that by manufacturing these cells internally, the company aims to eliminate 25 to 30% margins charged by external suppliers for lithium cells. So on the profitability front, the work is on. They're reducing costs as well. And of course, it's been a very strong listing for Ola Electric. Back to you.
Thank you very much for that. Earlier this week, we also chatted with the chairman and managing director, Bhavish Agarwal, and asked him about the EV maker's path to profitability. Listen in to what he had to say.
Just wait for our Q1 results, which will be out soon after the listing on 9th August, and you will get to see the financials then. But thematically, if I tell you, if you look at our business in FY24 over FY23, we grew revenue 90%. And our revenue in FY24 ended up at around 5,300 crores. So this shows you the kind of improvement the financials already in the public domain showcase. And this is because, in manufacturing businesses, there are two themes I want to leave with your viewers here. In manufacturing businesses, as you grow scale, and you've seen very significant volume and revenue growth, your cost structure, the factory investments, etc., don't scale linearly with it. In the EV era, the cell is the heart of the vehicle. And hence, 4 years ago, when we began this company, we decided to focus on making our cell in-house. And if you look at the amount of cost contributed by the cell, if a vehicle costs 100 rupees, the cell costs about 30 or 35 out of that. This is like an average across multiple companies. The entire margin that global cell companies make, as well as a 5% duty that cells have when they come into India, all of that money we will save when we start using our own cell in our vehicles. Step by step, all that margin on 30% cost, assume saving 20-30% margin, all of that will eventually come into our books. Overall, scooters today is about, let's say, 1/3 of the two-wheeler market. The two-wheeler market is 20 million. The scooters is 7 million. So if you say in 2 years, 30% is electric. So that's about 2 to 3 million in just scooters. Motorbikes will begin their journey when we launch our products later this year because there are no other good quality products in the market.
The management, Bhavish Agarwal there of Ola Electric, 16% higher from its issue price on its Dalal Street debut, extending gains now 17.5% higher, nearing the price of 90 rupees. By the way, the Nifty continues to remain near that mark of 24,350, but the IT index has staged a bit of a comeback in today's session. That is the top sectoral gainer in today's trading session. 1.5% higher is the Nifty IT index, and after 6 straight weeks of up move, the index was down 3% last week. It was down 3% this week as well so far until Thursday's closing, and now it's clawing back some of those losses. 1.6% higher on the IT index, and some flashes on your screen as well with the Oil India management in its con call saying that it is on track to achieve its guidance on the oil and gas production, and it's showing up on the stock price as well. Remember, the earnings came out last evening. At the highest point of the day is Oil India, 6.5% higher at 650 rupees. Time for a short break here on Trading Hour. Up next, Mitesh Thakkar joins in with some technical ideas and his views on the index as well. Stay tuned, back on the other side.
Executive Director. I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis. But I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do. And I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya. And you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was a amazing.
Not
journey
just
for me.
actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. You know, I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, you know, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have, I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that that talent takes is remarkable.
Welcome back. Oil India is one of the big movers of the day, 6.5%. Remember, it rallied even on Wednesday, reacting to ONGC's strong numbers. But today, Oil India, after the Q1 numbers, which were good, and plus even in the conference call, which started at 11 o'clock, the company said they're on track to achieve their guidance on oil and gas production. So firm commentary, and the stock continues with its up move. It's now up 160% year to date. You know, Cochin Shipyard is another one where the earnings have been strong, perhaps justifying the kind of rally that we've seen. So Cochin Shipyard has reported about a 60% jump in revenues and a 76% jump in the company's profitability. This is a stock which you can see is up 250% since the beginning of the year. But on the way down, Lemon Tree gets hit again. So Lemon Tree is down another 4.5%. Remember, it was under pressure yesterday also. It's weak. RVNL was disappointing set of numbers, came out with results in the last 1 hour of trade. The stock tanked and it's fallen another 4%. And then you've got a few oil marketing companies like HPCL under pressure. Apollo Tyres is weak in trade. But Ola Electric has been a big mover. And you were even talking about KFin Tech, which has gained another 8%.
Among the top gainers on the Nifty 500 is KFin Tech, and all of these stocks, be it KFin Tech, be it CDSL, all of them have seen sharp moves over the last 2 to 3 sessions. And I'd also like to mention that Cochin Shipyard, even after correcting almost 30% from its peak, it's seeing that bit of a relief in today's trading session after the numbers. But RVNL's numbers were, of course, disappointing. The stock fell yesterday and it's declined today as well. And along with it, it has taken most of the other railway peers as well. Ircon's numbers were not great either. That stock is down today as well. And in reaction to that, even stocks like IRFC, which have seen a very sharp move all through the year, are also trading lower in today's trading session. But good time to get in Mitesh Thakkar for a quick technical check of the markets. Mitesh, still 24,350 remaining that big hurdle for the index. Do you think that we'll end the week at least above these levels, or do you see more supply coming in at that level?
Yeah. So Hormuz, I think 24,400, 350 zone is the first area, because one, the gap starts there, two, the retracement and the intraday moving averages coming over there. I'm also waiting if we will be able to clear this. One, my view is that we might not be able to do that because the structure is negative. Even if we do that, then the upper end of the gap will come into play, which is 24,650, 670, 686 zone. So I think we might get a further 180, 200 point kind of a pullback in case this level is captured. But for the time being, while we haven't got a reversal signal of this bounce back, which has started today morning, but there is some, lack of strength around these levels of 24,400. So let's see, in case we start getting past 24,400, then you wait for this bounce back to continue and extend on the upside, and then take a look for some kind of weakness around 24,650, 700 to take a short trend. But otherwise, wait and watch mode for the time being.
Do you have any stock calls that you would advise?
Yes, I think the trading, on stock specific basis is much easier, because one, you have a lot of stocks to track, and something or the other is happening as an event on the chart. So BSE, I think, has given a strong reversal today. That's a buy with a stop at 2640. Look for a target of around 2750. And the other one which I like is Shriram Finance. I think, that's another stock which has done well. In fact, it has not participated in the falling market, and now is again showing good traction on the intraday charts. So buy here with a stop below 2,900 for targets of 30.50.
Anything, since you mentioned BSE, Mitesh, anything on its peers as well, be it CDSL or KFin Tech? Both of them have seen some very sharp moves this week.
CDSL, I do like. I've not been taking KFin Tech, but CDSL, I think, a good breakout today. Just nearly making a fresh highs, or rather touching the last week, the earlier highs. My sense is that I think, once this 2580, 2600 level, there's a mild pivot over there on intraday charts. If that is cleared, I think the stock can head towards 2800 plus levels to maintain a very positive bias.
CAMS is another one in the entire capital marketplace, which is also up 3.5%. But Mitesh, thank you very much for that. Let's get our viewers some opinion now. Earlier today, we had a chat with Gautam Dugar, Head of Research, Institutional Equities at Motilal Oswal Financial Services. He spoke about market fundamentals, his top sectoral picks. Listen in.
So we've not seen any correction. Then despite having a very muted result season, the market has been very charitable with most of the stocks. Yes, there is a growth headroom. Valuation, I suspect there is not much valuation headroom left. Your mid-cap Nifty is trading at 33p, which is at a 60% premium to Nifty. I have not seen such levels of premium in the past. Small cap is at a 40% premium to Nifty. It usually trades at a 20% discount. So absolutely no headroom for mid and small cap indices. Pharma has been a standout performer for this earnings season. Earnings growth is 26% for our coverage universe, where 15 companies have reported so far. And metals have actually beaten expectations because of some solid outperformance from Coal India and Hindalco.
Gautam Dugar there, no valuation headroom for mid and small caps. I guess we've been saying this for a very long time, but the indices are in a world of their own. But that is how the market has been. Time for a short break here on Trading Hour. Alok Sehgal of Nuvama joins us on the other side to discuss the company's new expansion plans. Stay tuned, we'll be right back.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters. Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back. Now, Nuvama Private has announced the launch of its operations in the Dubai International Financial Center, and they also have plans to expand their business to Singapore in the next quarter. Now, Alok Sehgal of Nuvama is joining us now to discuss this further. Alok, good morning. Thank you so much for joining in. But first up, would like to ask you about the rationale behind expanding into the Dubai market. What are your expectations from this move? And if you can also couple that up with telling us how big is this private business as of now and what rate is it growing at?
Sure. Thank you so much for having me. Let me start with a quick background on the Nuvama Private business. So today overall, and we recently reported our results. So Nuvama Private overall AUM is now 1,90,000 crores, and Nuvama Group AUM is closer to now 4 lakh crores, making us one of the largest wealth managers in India today. And one of the recent trends that we have been witnessing is that Indian families are looking to for diversification, set up a base outside India. And two favorable destinations that Indians are preferring. One is Dubai and the other is Singapore. And there is also a very large interest that is coming from global Indians, NRIs, who want to participate in the India growth story. So we being India specialists, we want to offer India solutions to this diverse set of clients. And therefore, Dubai and Singapore both offer us great destinations. We've gone live in the IFC with a Category 3C license, which allows us a full wealth management operations in Dubai. And similarly, in Singapore, we received the wealth management license. We've become operational in Dubai. We have now a team in Dubai. Our office is in place and we're ready for business. Singapore, we should be ready by the end of next quarter, and hiring is going on there.
Alok, congratulations on that. Just getting some numbers in. You said the AUM is about 1.9 lakh crore. When you reported your Q1 numbers, Nuvama Private reported a revenue 131 crore rupees, a growth of about 11%. How large is the India private wealth market, and what would your market share be?
So if you see, there is data which is reported in terms of the number of HNIs, ultra HNIs, and we can keep on talking about that. But roughly, if you see the overall HNI wealth in India is, as per various reports, which are in public domain, is between 1,70,000 crores to 170 lakh crores to around 200 lakh crores. Is the overall HNI, ultra HNI wealth in India. That is the rough size of the market. And today, if you see, the entire wealth management industry is managing close to, roughly 15 to 20% of this business. So the organized wealth of this pool is only 15 to 20%. And of that organized wealth, we are amongst the top players. So the size of the opportunity in India and the growth that is happening in India today, both through new entrepreneurs coming on board, existing entrepreneurs, some of them exiting their businesses, and new capital coming in. This market itself is growing at a compounded rate of 15 to 20%. And that is where the size of the opportunity makes it very large. And for the larger players or all established players, actually the macro opportunity is very, very large. So that is something that, I would look at that. I would look at it from that lens.
So Alok, with this expansion in Dubai today and eventually even Singapore, where you are planning to set up shop, what would your total addressable market increase to? Do you have some, when you set up a shop somewhere, you would have certain internal estimates of the kind of growth you will be able to achieve, the penetration. Can you share some of that working behind this move?
So I'll give you one small data point. If I look at the entire, just the GCC population, when I say the GCC, it's the Middle East population, has 3.2 million addressable NRIs for us. And that population today, as per our estimates and as per our own internal research, today does not have too much access to Indian ideas and Indian products, because a lot of these people have moved there 30 years, 40 years ago, and maybe 20 years ago. So while they still hold, because in GCC you don't get the local passports, they still hold Indian passports, but their connection to India is actually just the travel. And this population is looking at a very serious now opportunities to put money in India. And with the opening of the GIFT City allows us to have manufacturing at the GIFT City level, which we can offer them products and ideas to this population. So first question is, there's 3.2 million NRIs. The second bifurcation of that is that if I look at the ultra HNIs and, the family offices based in the GCC region, there is at least, as per our research, there is a number of 1,500 to 2,000 absolutely large ultra HNI base that is there. And we estimate that the entire international business for us over the next 3 to 4 years should start contributing at least 20 to 25% of both revenue and PAT. We feel that the PAT contribution will be higher from offshore because one, while the costs are higher there, the actual margins available also in offshore are higher. So that will actually balance out the cost. And we are confident of at least a 20-25% top line growth from the offshore business for us.
As you mentioned ultra HNIs, Alok, would your target market only be ultra HNIs or the NRIs or the persons of Indian origin, or you'd be targeting those of other nationalities as well? And what about the product suite? How is that going to look like?
So I'll address the target market first. We will look at NRIs, people of Indian origin, HNIs and ultra HNIs. So you have a large, significant expat CXO population there, which is also somebody who are professionals there. So private equity managers, entrepreneurs also are somebody we want to target. And then there are obviously the HNIs and ultra HNIs and family offices. So that is something that we want to target. And the product suite is obviously, we are tying up with the local banks there in terms of the dollar ideas and dollar products. But the other idea is that we also are beginning to offer them India alternatives, India strategies, both public markets and private markets, both in rupee and dollar. Because, rupee, obviously, we have the entire product suite ready in India, and that is just business as usual for us. But also we are building out a very strong dollar platform. We've already launched 2 ideas on the dollar side from Nuvama Asset Management. One is a long-short strategy on Indian markets, and the other is a pre-IPO private equity strategy that we have launched. So we have started with 2 strategies. We intend to also do real estate and credit strategies going forward, because we are seeing a lot of demand for these sort of opportunities in global markets as well, especially investing in India for these opportunities. So that is our day 1 product suite. And but day 2, as you rightly asked, that are we looking at other nationalities? The answer is yes, because as we are starting to operate and we are also hiring bankers, a lot of these bankers have clients from who are Emirati or locals, and they're also seeking to invest in India. We've in fact been approached by certain family offices of the GCC region who want to work with us and partner in accessing India. And we are seeing that also as a large opportunity. And that is something that progressively we will build at. But our day one plan is NRIs and Indians. And this is our, step 2 or day 2 strategy, if I can say that.
Alok, we leave the conversation here for now. July mutual fund data numbers are out. It looks like another month of stable equity inflows. 37,000 crore of equity inflows in the month of July versus 40,000 in the month of June. The breakup is also available for you on your screen. Largely steady. July was also the budget month, so there were lots of events that the markets were grappling with. We'll slip into a very short break. We'll come back and analyze these numbers in greater detail.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the
Welcome back. You're still tuned into Trading Hour, and the important numbers that are flashing for you on the screen, the July mutual fund data that we are talking about. If we talk about all the numbers, in fact, the breakup suggests that yes, while the numbers look stable on a month-on-month basis, it's a slight decline that we are seeing in terms of equity inflows in the month of July. They've come in at 37,000 crore rupees, which compares with the record high numbers that we saw in the month of June. And that's why also this was something which was expected. A lot of events in the month of July, as Rima was mentioning earlier, budget being the biggest one of them. There was a lot of volatility in the markets that we saw as well. Large cap funds, that is something that we should be looking at. It was 970 crores in the month of June. This has come off from those levels to levels of 670 crore rupees. And even in the small cap and the mid cap space, we have seen these flows ebb a bit in the month of July. Now do remember, we saw that massive recovery from election date levels, and from those levels we were expecting these numbers to come off anyway, and that has been the case again. Small cap funds, 2100 crore rupees are the inflows, which compares with 2200 crore rupees on a month-on-month basis. This number is largely stable this time around. If you look at the other numbers as well, something like a mid-cap fund, that should also come off you on the screen. That is where we have seen a bigger fall. So it's around 1600 crore rupees, which compares with 2500 crore rupees, and this is at a 4-month low. In fact, we are joined by Swaroop Mohanty from Mirae Asset Management. Swaroop, good morning. Thank you so much for joining in. Well, the basic numbers, equity inflows at 37,000 crore rupees, large cap inflows at 690 crore rupees. We have mid caps at around 1700 crore rupees. It is all a fall versus the month of June. But what do you make of these numbers?
Yeah, so interesting. No, it's a very interesting time to understand the change in probably the investor psyche, moving out of the core allocation and moving now to probably sectoral or the what we call the satellite side of the portfolio, or it could be just blatant return chasing. Time will tell what it is, but clearly we are seeing an underlying change in the mood of investors, and they're shifting out from what used to be the core side of the portfolio and looking at adding tactical side much more. This we saw for the last 2 years in the form of the small cap funds, which are slowly tapering now, and that's kind of shifted to side, and these are interesting changes and shows either the change of the present investors' mood or the new demography of India coming in and the risk-taking ability changing. In 2016, mid-cap investment was considered risky. Today we are looking at bulk of investments in sectoral. So that's a sea change in the way investors perceived equity investing is my submission.
Yes, and Swaroop, you speak about sectoral funds. This time around as well, it's around 18,000 crores coming in just from the sectoral funds. We had 15 NFOs as well this month, which compares with 17, of course. So do you think it's largely led by these newer funds that we are talking about and not the existing flows? Swaroop, can you hear me? Okay, looks like we are not able to hear Swaroop for now. Swaroop, can you hear me? Okay, we'll just try connecting with you again, but just to give you a sense of the number of NFOs, in the month of July, there were 15 NFOs, and if we talk about the funds raised via them, it's around 16,565 crore rupees, which compares with 17 NFOs in the month of June, which raised around 15,277 crore rupees. So definitely a bulk of this money is also coming in from NFOs, out of which we had multi-cap funds in terms of NFOs, which garnered around 3,945 crore rupees, sectoral and thematic funds, which garnered around 9,790 crore rupees. This is all, of course, via NFOs, and in total, sectoral funds are again at 18,000 crore rupees, which compares with the 22,000 crore number that we saw in the previous month. Of course, the SIP number will be very important to track because while on the gross number, we are seeing record high numbers. The net numbers have shown that there has been a decline. The hybrid fund data also suggests that there's a big increase in hybrid fund flows. And of course, we've been seeing those changes because of a lot of changes in taxes as well. We'll do one thing. We will slip into a break for now. We'll analyze the numbers again and get you more conversations on the other side.
That drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Assuming a normal monsoon and taking into account the 4.9% inflation print, which has already come out so far as Q1 is concerned, CPI inflation for the current financial year, that is 2024-25, is projected at 4.5%, with Q2 at 4.4%, Q3 at 4.7%, and Q4 at 4.3%. CPI inflation for the first quarter of next financial year, that is Q1 2025-26, is projected at 4.4%. The risks are evenly balanced. First and foremost is the fact that our target is the headline inflation, where food inflation has a weight of about 46%. With this high share of food in the consumption basket, food inflation pressures cannot be ignored. Further, public at large understands inflation more in terms of food inflation than the other components of headline inflation. Therefore, we cannot and should not become complacent merely because core inflation has fallen considerably. Second, and equally important, is the reality that high food inflation adversely affects household inflation expectations, which have a significant impact on future trajectory of inflation. The monitor
Welcome back, and the management of Gateway Distriparks now joins us to discuss the quarter gone by. It was a slightly subdued quarter for them in volume terms. The Red Sea conflict, the freight rates and container shortages have impacted their volumes. Now we have Prem Kishan Gupta, the chairman and managing director of the company, joining in to talk more about the road ahead for the company. Mr. Gupta, good morning. Thank you so much for joining in. Your volumes for the quarter were slightly subdued, if I can say that. The railway volumes were down around 8.8%. Have you seen volumes pick up in the current quarter, and what do you expect the year to end the year with in terms of volume growth?
Yeah, good morning and thanks for having me on the show. Yes, the volumes have come down in Q1 and there are various reasons. Everyone knows the Red Sea conflict is snowballing into shortage of ships and containers. So the imports are less, and the other thing is that the freight rates have gone up so much that the low value cargo like scrap and waste paper, their volumes have come down, their imports have come down. So all these put together, Q1 was a little subdued, but we can see some slight improvement in this quarter and hope that the macros improve. Q1 was an election period also, so it was a little bit slow. But now we see some volumes coming in.
So for the month of July, sir, can you tell us, or even in the first half of August, what were the volumes?
See, July was better than June. And so far, August is concerned, it is again slightly better than July. So, as I said, things are improving. Even exports, which had a lull period, is now picking up. And we can see some exports also going out of India. So that overall position will increase our throughput. And imbalance that we have, because when the imbalance is there, we run empties or the double stacking is less, and that affects our margins in that.
So then for the full year, sir, what would CFS volumes look like and rail volumes?
See, CFS volumes in Q1 have remained stable, and even the margin has picked up a little bit. However, the rail volumes dipped in the first quarter, so we will try to make it up in this quarter by having some additional volumes. So overall, CFS, it seems the activity has picked up, and we have done some good volumes in the month of July also.
So what about margins then, Mr. Gupta? Your volume margins for the current quarter were around 24%. Do you expect to end the year with this kind of a run rate? Or maybe let's just talk about the first half for now. What do you expect to end the first half with? And do you expect the second half to be better than the first? And also give us some color on the EBITDA per unit as well.
See, we will have some increased EBITDA in this quarter. As I said, the double stack volumes have come down in Q1. And that has impacted our margin in the rail business, whereas in CFS it has gone up. For the first half, you see, last year first half was very strong. So we do not expect it to be that strong in the first half, and second half it is too early to say. EBITDA per TU in the rail business is something around 9,400 rupees per TU, whereas on the CFS side, which has dipped to 3 digits, is now back into 4 digits at about 1,350 per TU.
What's the margin outlook for the full year in Q3, Q4?
Margins will definitely be over 25%. So we'll pick up from the present 24% that.
And what will drive that improve from 24 to 25% plus?
Additional volumes and the double stacking on the rail.
Got it.
Mr. Gupta, you are also in talks with operators to sell some of your CFS assets, and the value of your business currently is around 1,000 crores. If you can share any updates on that, is there been any progress on that front?
Yes, we are progressing, and we will be sharing some data with potential investors. So depending on the appetite of the new new players who want to enter the CFS business or who have captive business. Valuation, it is difficult to say now, but in that ballpark or even higher than that.
Where have talks reached with potential buyers?
No, we have not yet reached, but we are in the process of, preparing an IM, and we are in the process of shortlisting the investment banker also.
By when do you expect to complete the process, Mr. Gupta?
Well, as I said, the valuation should be right for us to exit this business, and so it all depends. We should be talking to the potential investors somewhere later this quarter or early in the next quarter.
What about the land that you have, Mr. Gupta? How are you planning on utilizing that? So around 500 acres, if I'm correct.
See, most of that land is in the rail business, but in CFS, yes, we have some prime land, and so when we prepare the IM, there will be a value attached to the assets that we have, the land and the warehouse and other, construction that we have done on that. Then there is a value for the business, and then someone who wants 5 CFS at a go, I mean a running business, so we want a premium on that. So it all depends, how the valuation is looked at upon by the potential buyers.
Thank you very much, sir, for joining in. And those of you who don't know what IM means, it's basically information memorandum, which gives investors a comprehensive overview of the business that Mr. Gupta is looking to sell. So they've started preparing the IM. They're looking to hire investment bankers. And once they agree on the valuation, that's when they'll seek out potential buyers. The stock is down 1.5%, muted Q1 volumes, but the management is confident that things will pick up. July has already been better than June. We will wrap up on Trading Hour from the entire team. Thank you for watching. Don't go anywhere because Halftime Report is up next.
Met on 6th, 7th and 8th August. After a detailed assessment of the evolving macroeconomic and financial conditions and the overall outlook, it decided by a majority of 4:2 members to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%.
Free speech, and yet the need to ensure that there is moderation and there are guidelines and it is a safe space. What's been the experience on that front today? I mean, I remember you saying that whatever's happening in the world is happening on YouTube, and we have active wars currently on in the world at this point in time. We've got situations that have just taken place over the last few days where there is an active call inciting violence, for instance, in different parts of the world. Do you believe that there is a need to perhaps review the moderation community guidelines, the moderation policy? Is there a need to engage actively with regulators, with governments at this point in time around the world? I mean, how do you see the road ahead on this front going forward?
I mean, I think you encapsulated it quite well. I do think what happens in the world happens on YouTube, and what happens on YouTube does influence what happens in the world, and that's why living up to our responsibility here in India, but really globally everywhere that we operate around the world, is my top priority. It's what I will prioritize above everything else, because it is the right thing for us to do, but it is also the basis of the business opportunities, the creator economy, everything that we've talked about. And so we work very closely with our partners in government here in India, but really all throughout the world. And I would say that we have a clear set of community guidelines that we have invested in very heavily over the years. In many ways, we have learned through trial by fire over the years to understand sort of how those community guidelines could be written, how they should be clear. But they are always up for being modified. It's important for us to have clear principles, but then also to be flexible in terms of how we adjust them, because as you rightly point out, what's happening in the world is changing on a regular basis. And so that's really how I've approached the space. And you know, it's something that's near and dear to my heart. It used to be what I was responsible for even as a chief product officer before I took over as CEO. And it's something, as I said, that I'm going to prioritize both in terms of my time, but also resources at the company before anything else.
My wife, for instance, you know, and she's been...
A surge in US equities overnight powers up Indian stocks. Realty and IT lead the charge, while FMCG and healthcare lag. Mid-caps underperform.
Eicher Motors revs past Q1 revenue margins and profit expectations, riding on the success of its new model. The stock gains even as analysts remain divided on its prospects.
Bharat Forge is likely to raise 2,000 crore rupees within the next few months to grow its manufacturing footprint multifold, even as it eyes doubling of its defense vertical in the next 3 years, says the chairman.
And Ola Electric debuts with gains on the bourses, making it the only listed pure EV two-wheeler company. The street now looks forward to the unveiling of its e-bike on the August 15th.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Sonia Shenoy. Well, it's turning out to be a session where we are seeing gains coming in from the US because the weekly jobless claims were not as bad as expected. So maybe there is some amount of assuaging of concerns coming in from the US, at least on the macros for the interim. So that's playing well for us. Who would have thought that we started off the week on such a weak note, but have managed to recover with the Nifty at around 24,367, mid-cap index up around 525 points today. Hi, Sonia.
Hi, Ekta. Well, turning out to be really good, right? I mean, in terms of trade, and just look at that, 24,300 is holding at the moment. In terms of individual stocks, it's largely the frontliners, which are the large caps, which are making sure that the going is good. In fact, the auto stocks are the big movers right now. Eicher Motors is your top gainer, up almost about 5% post its numbers. Tata Motors and a couple of others like M&M are also leading from the front. And then you have some of these IT companies, so HCL Tech, TCS, LTI Mindtree are your top movers as well. But Ola Electric has made its debut, and it's a strong debut at that. The stock listed on the NSE at 76 rupees. Do note this makes Ola the only listed pure electric vehicle two-wheeler company. My colleague Ritu Singh caught up with Bhavish Agarwal, the chairman and managing director, to talk about the new listing and their business outlook. Listen in.
It's very exciting to see the investors put their faith in us. When we did the listing and we did the pricing and the IPO, we wanted to price it in a way that enough investors see value and join the journey for the long term. Because as I've said, this is this Ola Electric story is a story of India's future. We are building India's future supply chains, India's manufacturing, India's future products, and our ambition and mission is to really build India's leadership on the global stage. So the fact that the street has liked our story and liked what we do, like the price, is a very strong positive. Price will move up and down. I'm learning the ways of the market, and we will keep doing our work. We'll keep focusing on building good business, building strong products, good products, building a sustainable business also, and hopefully creating wealth for investors in the long term.
So far in your very fast pace of growth that you've seen, while revenues are now crossing 5,000 odd crores, losses have also been expanding to about 1,500. So I just wanted to understand if that now starts to change as your responsibility as a public listed entity that is looking to return some value to its investors and stakeholders. How soon do we see that start to change?
Well, Ritu, like we saw in the numbers that we published in our prospectus, our revenue grew up in FY24 by 90%, almost 5,300 crores. And our EBITDA margins also improved from negative 43% to negative 19%, so about a 24-point jump. And that is actually the direction we have been working on already for a while, to build a sustainable business in terms of healthy, good, profitable business. We're not there yet. It's a journey. It's a very young company. It's about a 4-year-old company in operations. Our focus will be to build profitable growth for investors to also feel that there is a long-term profitability journey here also. Now, in our business, there are two themes which I want to communicate to your viewers about how profitability will come across. Firstly, this is a manufacturing business. And in manufacturing businesses, once you invest into your factories, into your technology, and then you sweat the asset more as volume goes up. That's what's been happening already. You can see that's why FY24 numbers were 24 points better on the bottom line. And you can just extrapolate where that curve becomes positive. Our Q1 results will be in the near term. You will see a certain movement in that direction in Q1 because the volumes in Q1 already were higher over last year. These are all public data in Vahan. So as we continue to grow into the capacity that we've already installed, margins will keep improving. The second important theme is the vertical integration of the core EV-centric components, especially the cell. Now the cell costs about 1/3 or the 30% of the whole vehicle. And all these cells are today imported from large global companies which charge you a bomb. And then you have to pay duty bringing it into India. As we bring our cell into commercial production next year, we will save all that margin and that duty. So that will also further improve our gross margin and hence our bottom line. So we're very focused on building in this direction. I can't share numbers, but this is the direction in which we will go along. And our focus is to build profitable growth as we go along.
Well, can you share a direction in terms of sales as well in the context of what's happening with the FAME subsidies tapering off in the last 2 years in a sustained manner? You've also heavily, been following this discounting strategy. I know you said it's tactical, targeted, etc. Is that going to be the strategy going ahead? Do you hope to exceed those numbers, or do you think sales will take, some sort of a beating or some sort of a slowdown with these subsidies going away?
Ritu, I think the broader story that's playing out here is the penetration story of electrification of EVs in India. 3 years ago when we started, almost to the day, EV penetration in two-wheelers was almost zero. Now it is 6-7% overall, and within scooters, where all the action has been over the last 2 years, it is 15+%. And the scooter penetration month on month is only going up. 2 years ago, the government used to give 60,000 rupees in FAME subsidy. Now they give 10,000. And the industry, not just us, but the whole industry has adjusted very well. They've rejigged the cost structures, and the industry continues to grow with reduced FAME. I believe this is the way of the future. Slowly, the incentives will taper down as companies become more stronger in their supply chain and their cost structures to be able to deliver profit margins with probably no subsidies in the future. So that's been our focus on discounting. Like you said, there are tactical discounts that all companies do. We also do that. But once you see our financial results, you will be able to see how that plays into the broader strategic theme of investing into creating supply chains and vertical manufacturing, which lowers our margin, which lowers our cost structurally.
No, but the headline number, let's say you sold more than 3 lakh scooters last year. Will that kind of a number continue or even grow in this year, you think?
Well, if you see our July numbers in Vahan, we sold 40,000 odd, maybe more than 40,000, 41,000 or something. Yeah, so if you multiply 41,000 by 12.
Sure. Well, let me quickly also, before we let you go, ask you about this question which has been raised by several, industry watchers about you as a founder being very heavily involved in the company, and you as a founder not just being involved in Ola Electric, but you also have Ola Cabs, you have Krutrim, you have food delivery with ONGC, and now we're hearing you're looking to foray into quick commerce. How is your attention going to be divided across these?
See, we as a group have 3 companies. There might be different business units in each, but there are 3 companies. There is the Ola consumer business, which has the cabs, the financial services, the commerce, whatever we're doing. There's the Ola Electric business, and there's Krutrim. Now, each company is in a different stage of its evolution. Ola Electric is in a very aggressive growth phase and a phase where we are investing for future growth. A very large majority of my time, and my time is not 8 hours a day, you know that. My time is, I don't want to say it, people will say, he works too much, but I work more than 100 hours a week probably. So my time is very largely devoted to Ola Electric's journey, and I am involved in all other businesses at a strategic level. We have very strong teams in Ola Electric and across our other companies also, which manage every operational detail. But for those who know my style as a founder, I like to look at the detail in everything that we do. So we make sure there is no stone left unturned to deliver a good execution in the end.
Okay, 100 hours a week is what he works. So that's the word coming in. That's what you need to put in, and attention to detail. So that's Ola Electric. After a flat listing today, it has picked up pace. So at the high point, up around 19%. Issue price was 76 odd rupees, currently trading at over 90 odd rupees. We'll take a short break. We'll connect with the management of Kaplan Point Labs to discuss their Q1 numbers. Stay tuned.
Contributor in what I have become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or some, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked, my kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for Inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing.
Welcome back. Well, let's get talking to a couple of companies then. Kaplan Point reported what was a good set of Q1 numbers. Revenue grew in double digits. Margins came in steady at 33%. Q1 numbers were aided by new launches. To discuss this and more, we have Vivek P., who's the COO of Kaplan Point Labs, joining in. Vivek, hi. Thank you very much for taking the time out. Well, let's start with your revenue breakup. You get majority of your revenues from Latin America. But give us a sense in terms of how exactly did the Latin America geography do for you, as well as the US, which is basically Kaplan Steriles.
Yeah. So our base business in LATAM grew well. We're already at a certainly large number at this point compared to other companies that have businesses in LATAM. So At this point, the split is around 82% of our revenues coming in from LATAM. But the US is really picking up pace in recent quarters, and from what it was a few years ago, which was less than 5-6%, today it is close to around 18-19%. So we're happy with the growth at both the markets. Yes.
But could you quantify the growth for us? How much did each geography grow for you this quarter? How much business did you generate in terms of EBITDA from both of the geographies as well?
Yeah, so obviously coming off a smaller base, I think the US grew close to 70%, 69-70%. And the base LATAM business is in around very early teens. I would say that this year the outlook also will be something similar to what we are seeing this quarter. But yeah, I think so far what we've given guidance out is that we should be comfortably crossing last year, and the US is obviously of a lower base coming in at a higher number.
From ophthalmic products, what is the kind of growth that you're looking at? Any further approvals that we can expect?
Yeah, so we are looking at 2 more approvals, hopefully before the end of the year. The ophthalmic is quite niche as we speak. When it comes to sterile product manufacturing, both injectables and ophthalmics are pretty much in the same manner. And for us, we not really focus too much on the retail space, which is where the ophthalmic part is. But now, with a bunch of approvals under our belt, we might be relooking at that part right now. Actually speaking, we are setting up our own front end with the US, where the focus maximum is going to be on promoting our own label, which is very similar to what we do in Latin America. And I feel ophthalmic is going to augment that piece as well.
Okay. I just wanted to touch upon that plan about starting your front-end business. You have indicated, and correct me if I'm wrong, but you would be looking to source products from CMOs in India and basically start marketing it in the US as well. It would be sourced from wholesalers in the US as well. So your primary aim is to actually become a brand in the US. Why is that so important for you? And in the near term, because of that plan, which is expected to be executed by October to November this year, will it impact your margins?
Look, we've always seen ourselves as much more of a distribution and marketing company with a strong back end. And if you look at our Latin American business, only around 55-60% of the products that we market in LATAM is manufactured in-house. The rest of it is all outsourced, mostly out of China, from very highly quality conscious companies, and also in India. So taking a leaf out of that book, we want to try and replicate the same thing in the US. For us, we feel commerce is commerce, regardless of which market you're in. So a differentiated business model is more important than anything that is coming out of technology. But in terms of near-term margins, we expect margins to go up because, as you can see, we're still in consolidation phase when it comes to the oncology facility. We're still in consolidation when it comes to API. The US has turned around well, but going forward, when each of them start to break even on their own, we expect fiscal discipline to be maintained at all the units. We expect margins to increase. But I don't have an exact timeline as to when that will happen. But for us, consistency has always been key. And this quarter is no different.
Okay, consistency is key and this quarter is no different. So you want to leave us with, you said the US grew by 70% in this quarter and looking at 2 more approvals by the end of the year. So what does this mean in terms of overall growth for the US, both for FY25 and 26?
Yeah, we'll do well. Without giving numbers away, I'm sure we'll do well. The only thing I would say is when it comes to sterile product manufacturing, especially for a gold standard market like US, you don't want to be focusing on productivity alone. For us, we have 4 pillars in our company, which we call it as integrity, quality, safety, and productivity. So you want no sort of imbalance in any of that at all. But again, long story short, I'd say we'll do well over the next few years, no doubt.
Just quickly, before we let you go, just a one-word answer. When you said that you expect your margins to move up, any figure that you're targeting, 33% goes to what? 35%? Does it sustain at these levels? Give us an exact figure or a range that we can expect in FY25.
We will be a little bit better than where we are today, but significantly better probably in about 2 years down the line.
Okay, we'll do one thing. We will thank you on that note. Thanks for joining in and speaking to us on CNBC TV18. Let's take a short break. More on the markets and stock-specific action when we return.
experience. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CI, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters. Welcome back to Halftime Report on CNBC TV18. Well, the hospital company HCG's sale process is in the final lap. Sources tell CNBC TV18 that promoter CVC Capital received 2 binding offers. Nisha Podar joins in with exclusive details. Nisha, over to you.
Thanks for that, Sonia. Yes, sources with direct knowledge of this large sale process in the hospital sector have shared with CNBC TV18 that Healthcare Global has attracted 2 bidders. And what we gather from sources is that Bain Capital, the large private equity firm, as well as the strategic Abu Dhabi-based hospital company Burjeel, these are the 2 suitors who have already submitted submitted their binding bids for buying out CVC Capital's stake in Healthcare Global. Now remember that CVC Capital is the promoter of this company and owns 60.38% stake. And since a majority control deal is getting struck as part of this process, if the binding bids are accepted and a final offer is accepted by CVC Capital, then this will also trigger an open offer. So all including the 60% stake from CVC Capital as well as the open offer, and if open offer fully subscribed, the total deal size could be about 5,000 odd crore rupees for Healthcare Global is what we gather from sources with direct knowledge. So this particular transaction coming to the final stages after due diligence process has been concluded and final bids have been attracted. Now remember that the founder of the company, who's also a co-promoter, is Ajay Kumar, and he and his family own a little over 10% stake in HCG.
Okay, all right, Nisha. Thanks very much for that important story, which is brewing for a long time now. So let's see whether this deal happens or not. But nonetheless, if in case the deal does happen, even at the current market price, that 60% that CVC holds in HCG will be worth around 2,986 odd crores. And to put it into perspective, they bought around 59% stake, which is majority stake in 2020 for around 1,100 crores. So that's an appreciation of 1.7 times in terms of the PE's holding in HCG, which is a largely oncology-focused hospital. Well, we take a short break, but up next we'll connect with Biocon Biologics to discuss their Q1 numbers. Stay tuned.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the large street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's
Welcome back. Well, let's talk about Biocon, which was in focus because it reported what was a mixed set of Q1 numbers. Revenue came in flat, margins declined, but it was aided overall by a one-off in terms of sales from the HDFC Life deal this quarter. I did catch up with Shrihas Tambe, who's the MD and CEO of Biocon Biologics, and began by asking him about the quarter gone by in the biologics business and the growth they see going ahead.
On a reported basis, the numbers may look that we've had a 3% growth, but you're right, on a like-to-like basis, there's been a substantial change, and that change is 11% on account of the discontinued branded formulations business that, if you recollect, we had in the past monetized through a strategic alliance that we signed up with HDFC Life Sciences. So that, if you account for that, that brings the growth to 11%. But what I also want to point out to you is last year's similar quarter also had a very substantial licensing income that we had posted, which is a part of our business. But this quarter, we've seen the growth on the back of very strong product sales and market shares that we won. So if you look at that part, the growth is actually 19% over a similar quarter last year. So I would say we've had a very strong beginning to fiscal year 25.
Okay. Now your Malaysian plant where insulin aspart has been filed from, it was classified as OAI, official action indicated, in October of 2023. What is the current status of remediation? How much, when do you probably expect a re-inspection and possible approval of insulin aspart?
Yeah, and that's an important point because, as you rightly said, we have already responded to the OAI and the commitments that we had made to the FDA on the CAPAs that we had committed to, which is the corrective and preventive actions that we had proposed in response to the observations that the FDA had made. As you know, there are no outstanding questions on the science, so the product can get approved the moment we've got the OAI status clarified and settled. So we are in the process of having that dialogue. We did engage with the agency, and once they are able to schedule an inspection on site, we're very confident that that will be behind us. What is important for your viewers to also know is that the same site, including the aspart product, has been approved by the European authorities and several other authorities across the world. So we feel very confident about the GMP status and about the product as a whole.
Okay. Bevacizumab, that's filed from your Bengaluru facilities. Status on that?
So we did have an inspection at the site. It was a very large inspection, and it's not just for bevacizumab. In Bangalore, if you know, we have a very large manufacturing site. It has 6 different manufacturing units. So when the agency came with the intent to optimize and bring efficiency to their inspections, they have done a GMP inspection and a pre-licensing inspection, or a pre-approval inspection, as we call it. And they have completed the inspection for bevacizumab and ustekinumab both as pre-licensing, as well as the GMP inspection for the rest of our facilities. So at the end of it, they did issue a Form 483, and there were 10 observations that we received across these 6 manufacturing sites, which we're very confident of responding to in a timely manner.
Okay. So as of now, the bevacizumab approval depends on the remediation of those 10 observations in the Bengaluru facility.
It requires bevacizumab. Right now, again, there are no questions on the science, so the dossier is ready to be approved. but it does require the resolution of the CAPAs. And once you have an inspection, which we have had, it is in a very timely manner that we've actually had the inspection, that the agency will make a determination on the new application we've made for the product. I should remind you that we continue to supply a lot of product to the United States from the very same facilities for trastuzumab and pegfilgrastim that we just talked about.
Okay. Can you tell us about aflibercept? There's a litigation pending there, as well as adalimumab. How is it picked up? You launched it in July of 2023 in the US.
Yeah, aflibercept is a very large asset in terms of its revenues. It's over $10 billion in innovator sales that were posted last year. So it's clearly a very interesting asset. And we have had the opportunity to be the first to file when we acquired it from Viatris. And now, we've recently been the first to be approved in the US as an interchangeable. We've also had approvals in the past in Europe, in Canada, and in the UK. So we feel that the uncertainty around this product are behind us. Now it's the question of launching this product commercially. We have reached a settlement on the patent with Regeneron and their partners in Canada, where we will be launching the product mid of next year. So that has been cleared. We will be talking to them in other territories, and then of course in the US we are in a litigation. So once we have a clarity on how that's going, we should be talking about when to commercialize this product and bring it to patients in the United States.
Okay. Well, there were a lot of questions about debt on Biocon Biologics books as well as the consolidated entity. It stands at around $1.2 billion currently for Biocon Biologics. The company has said that it remains a priority to reduce. But what are the measures that we can expect and the timeline of reduction in FY25? And what is the targeted debt figure that the company will be comfortable with?
I think the first thing that we need to look at is what is the intent and what are the actions that the company has taken. I've said on your channel in the past too that we're very committed to addressing the debt position. Historically, Biocon Group has never been in a position where we've been in a leveraged position here. This is a transformational acquisition, and we've incurred this debt only to make sure that we do this in a manner that transforms Biocon Biologics to a very different league. Having said that, if you see the actions we've taken, we have prepaid part of the loan, 200 million of that, in fact, ahead of time, December of last year. And then early this year, we paid down another 50 million, which is way ahead of time, which clearly shows our intent and action that we are committed to debt reduction. In terms of what would be our comfortable position in terms of debt to equity or debt to EBITDA ratios, I think we should look back in terms of what it has been in the past. That would be a good indicator to see historically how risk averse the group has been. So we expect to move in a direction which will be healthy.
Okay.
And risk balance.
But are you looking to probably get an investor on board when it comes to Biocon Biologics? Maybe the likes of Shriram increasing stake, private equity money coming in?
Yeah, I mean, Shriram is already an investor in Biocon Biologics. If you know that they have invested in us to the extent of 150 million before and another 150 million later. So we believe that they've been with us for a long time and a very strong investor with us. But there are obviously all the time there is an interest in investors wanting to come in. It's important for us to look at this in terms of how can each of them add value to us strategically. I should also tell you that beyond Biocon Biologics, we are a part of Biocon Limited, which is a very large and strong group in terms of its capabilities and has several options at its disposal to see how we can work on paring down debt. And we are working closely with them to seeing how we can deploy any or all of them.
Okay, let's do one thing. Let's take a short commercial break on that note. Lots more coming up on the other side. Stay tuned.
on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Assuming a normal monsoon and taking into account the 4.9% inflation print which has already come out so far as Q1 is concerned, CPI inflation for the current financial year, that is 2024-25, is projected at 4.5%, with Q2 at 4.4%, Q3 at 4.7% and Q4 at 4.3%. CPI inflation for the first quarter of next financial year, that is Q1 2025-26, is projected at 4.4%. The risks are evenly balanced. First and foremost is the fact that our target is the headline inflation, where food inflation has a weight of about 46%. With this high share of food in the consumption basket, food inflation pressures cannot be ignored. Further, public at large understands inflation more in terms of food inflation than the other components of headline inflation. Therefore, we cannot and should not become complacent merely because core inflation.
Welcome back to Halftime Report on CNBC TV18. Those are trends numbers, by the way, looking very good. EBITDA coming in higher than what the poll is suggesting at 612 crores. The margins are quite stable as well. And the stock is now about 3% It has been one of the, the darlings of the stock market in the last 1 to 2 years. And net profits, revenues higher than expectations as well. Looking pretty good on trend. But the other stock that's doing well this afternoon is Eicher Motors. So let me just take you through the numbers and what brokerages are saying. Decent set of numbers coming in from Eicher Motors. Revenue growth of 10.5% is what the company has clocked in at 4,390 odd crores. The EBITDA has gone up 14.5% as well. The margins have increased to 26.5% and the net profits are up 20%. In fact, Goldman Sachs has raised their target price on the stock. They said that Eicher Motors has reported a Q1 beat in performance. They've raised the 12-month target price to 5,600 rupees. They talk about how there is a 20% upside potential in the price, and the new Gorilla 450 that was launched has already done 6,500 units of dispatches since the 17 July launch. So they like that. Investec, though, has maintained a sell. They talk about how the valuations appear rich now for the stock at 26 times forward, and the volume growth is expected to moderate going forwards. But that is really the big mover. But it has trend for company now. That stock as well is reacting to a good set of numbers. Let's dip into a quick break. On the other side, we'll connect with Chandrasekhar Nopani, the chairman of Birla Sugar, to discuss more on the Indian sugar demand. Stay tuned.
Considerably. Second, and equally important, is the reality that high food inflation adversely affects household inflation expectations, which have a significant impact on future trajectory of inflation. The Monetary Policy Committee met on 6th, 7th and 8th August. After a detailed assessment of the evolving macroeconomic and financial conditions and the overall outlook, it decided by a majority of 4:2 members to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%.
Free speech, and yet the need to ensure that there is moderation and there are guidelines and it is a safe space. What's been the experience on that front today? I mean, I remember you saying that whatever's happening in the world is happening on YouTube, and we have active wars currently on in the world at this point in time. We've got situations that have just taken place over the last few days where there is an active call inciting violence, for instance, in different parts of the world. Do you believe that there is a need to perhaps review the moderation community guidelines, the moderation policy? Is there a need to engage actively with regulators, with governments at this point in time around the world? I mean, how do you see the road ahead on this front going forward?
I mean, I think you encapsulated it quite well. I do think what happens in the world happens on YouTube, and what happens on YouTube does influence what happens in the world, and that's why living up to our responsibility here in India, but really globally everywhere that we operate around the world, is my top priority. It's what I will prioritize above everything else, because it is the right thing for us to do, but it is also the basis of the business opportunities, the creator economy, everything that we've talked about. And so we work very closely with our partners in government here in India, but really all throughout the world. And I would say that we have a clear set of community guidelines that we have invested in very heavily over the years. In many ways, we have learned through trial by fire over the years to understand sort of how those community guidelines could be written, how they should be clear, but they are always up for being modified. It's important for us to have clear principles, but then also to be flexible in terms of how we adjust them, because as you rightly point out, what's happening in the world is changing on a regular basis. And so that's really how I've approached the space, and it's something that's near and dear to my heart. It used to be what I was responsible for even as a chief product officer before I took over as CEO, and it's something, as I said, that I'm
so really the stock to watch right now is Trent. It's now, gaining further ground, almost 6% higher. And, as we were saying, the numbers are, the consolidated net profits at 390 crores is much higher than what they did same time last year and higher than the poll as well. If you look at that big surge in profitability for Trent, of course, we do know that some of its brands like Zudio have been doing very well. The revenue growth is also 56% for Trent right now at 4,100 crores. That's really, if you pull up a one-year chart, right, you'll know that, you'll see the kind of trajectory the Trent has had. It's been a phenomenal run, really. Look at that, 12 months, 250% move on Trent and going steady as we speak. But ethanol prices should be hiked, says Chandrasekhar Nopani, the chairman of Birla Sugar. Also, Manisha Gupta spoke to him about the poor state of the textile industry in the country and the need for long-term ethanol blending. Listen in.
I think as far as this sector is concerned, we have now come to a situation where there is a good balance as far as the raw materials is concerned. You would have noticed that earlier that every year the sugar industry has been a glut-like situation. Now I think we have come to a fair balance, and I think going forward, a kind of a predictable policy is set out which can help everybody plan properly. as to how they want the industry to grow. Ethanol has come in a big way right now, and ethanol, I think the target by the government is to come to 20% blending by 2025. I think we're hitting a figure of 13.5% now. Hopefully next year, once they are able to allow us to produce more ethanol, we should hit 15 to 18%. But I think, laying out a plan that, okay, you want us to come to this kind of a level, so let's say 25% blending or 20% blending, then set up a roadmap for it. And I think that is what the industry is looking for.
And do you think 20% is doable by next year?
I think it would be a little bit of a challenge because a lot would depend upon the kind of sugar production which we're looking at this season. We are just in the month of July, ending July at the moment. We've still got August and September of the rainy months to go by. And one thing which I think all of us need to appreciate, and that's where the government role comes in, is that sugar is a staple essential product and we can't be short of it. So looking at that, I think the government policies would depend to a large extent on what kind of sugar production we're looking at in the country. The general expectation is that this year we are going to have enough stocks, so there should be no restriction as far as the government is concerned to come back to the policy of allowing us to make ethanol from B-heavy and even possibly looking at exports again. So let's see, I think probably after a month or two we'll get a better idea.
So, the concern about the industry right now is that the policies tend to change season by season, and that also is because one year you're having a good sugar year, the second year you're perhaps not having that. So are you looking at a kind of policy which doesn't change by season but is slightly more longer?
I wish it was possible, but the sugar industry is one industry which is plagued by so many variables. And variables which are beyond the control of human beings, like climatic conditions, floods happens, drought happens, what's happening in Brazil, what's happening here. So a whole lot of factors come into play. So I don't think you can have a static policy. But what we would like to see is a predictability that the government will see, all right, we are looking at this. So, give us information well in advance after years, so that then one can adapt accordingly.
So that's about sugar, which really seems to be having a conversation with the government right now. What about textiles? Because this is another area that you look at. And, I was reading a data some time back that there are 4,000 perhaps ginning mills and 3,000 spinning mills in India, and not all of them are making profit and not all of them are getting their margins in. And then, of course, we've seen a huge price crash. This is another area where we've seen price volatility very, very huge. And if you look at the latest sowing numbers as well, they actually show you the farmer's dilemma.
Why is spinning or textiles in a difficult quandary today? It's simply because of global uncertainty. You've got a war in Ukraine, you've got the Israel-Hamas war happening over there. China has stopped by, and that has kind of, the uncertainty which has happened has reduced the buying, whether it's in Europe, whether it's in America and the other countries. And India being a large producer and a large exporter, we now have a situation where our exports is down. I'll give you a simple data that, for example, in dyed and spun yarn, for exports, we were down last year on 40% as an industry as a whole. And that is no small. And so what happens to that product? Either you dump it in the Indian market and prices collapse, or you shut down spindles. And that's what's basically happened. Some sectors of textiles are reasonably well placed because they have, they're able to make fabrics and export to certain countries. So, but that is only a few. But overall, I think quite a few of the textile players are struggling. And I think,
and what is the way forward then?
It's uncertainty. There is a lot of uncertainty here.
But what are the conversations with policymakers?
So, see, as far as the policymakers are concerned, I think Government of India has very limited incentives or taxes as far as the textile sector is concerned. It is basically a demand crunch which has taken place. There is a demand destruction which has happened. And I think once, hopefully, we are now seeing that there is some kind of stability coming around in the world. Once buying takes off as far as the international markets are concerned, which we are already started seeing a little bit of green shoots coming in. So hopefully by this third quarter of this year, we should start seeing an improvement.
So it is a wait and watch until then.
I think it's a wait and watch here.
How about fertilizers? That's another thing that you look at. So while the budget did talk about natural farming, we didn't hear too much about on this subject.
So I think fertilizer is again a very subsidy-based kind of product as far as India is concerned. And here, again, it is very, very finely controlled by the government. I think they're doing a pretty good job as far as managing it at the moment. There was a bit of shortage last year, and so the government has been able to import. There are budget constraints within the government as well. So, but I think they'll be able to tide over the current situation. But
with the budget now done, and we know what's coming in, and of course, there's going to be a lot of conversations until we see all of that implemented. But what do you see a couple of things that can happen outside budget?
So I think outside budget, I think more capacities are definitely needed within India. So a lot of plans are being there. I mean, whether you take phosphatic fertilizers, we are importing fertilizers today. And a lot depends again on the international scenario, and international prices continue to be firm. China, again, there was a lot of volatility in prices here as well. In fact, China was earlier in the market, then they've gone out of the market, which created, again, a lot of topsy-turviness. So again, here it's a policy which I think the government will has to wait and watch and see at what appropriate time when to buy. Because, see, it's a large outgo as far as the government of India is concerned, as far as the fertilizer subsidy is concerned. So, and you can't have a situation when there's going to be shortage in India. So it's going to be a tough act for the government to sort out. But I think they will come out with some policy now. Now that the budget is done, I expect they'll come out with some policy.
All right. So a lot of wait and watch here for a couple of sectors at least, that's as far as agriculture is concerned. But thank you, Mr. Nopani, so much for joining us today.
Thank you so much. Pleasure being here.
Okay, that is on the agriculture space. But getting back to the markets, it's been a really good day so far. So the Nifty is now up 230 odd points. The Sensex is up 750 points. And lots of big movers in trade. Eicher Motors is now up almost 6%. And you have plenty of stocks hitting fresh 52-week highs as well. Ola Electric, by the way, is up 20%. It's an upper circuit and a fabulous start to, on Dalal Street for Ola Electric. So 20% higher than 91 rupees on that stock. A good opening there. And, now I think about huge volumes, over 5 crore shares actually being traded in Ola Electric as we speak. Affle India is the other one that's hit a fresh 52-week high today. Lupin is at a fresh 52-week high. Trent, by the way, after its strong set of numbers, is at a fresh high. So keep an eye out on that. 6,000 rupees now on Trent. But on that note, it is a wrap on Halftime Report. Business Lunch will take all the action ahead.
Both in terms of my time, but also resources at the company before anything else.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, So I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for Inter-IIT. So I remember this campus especially, because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing. And
a surge in US equities overnight powers up Indian stocks today. Real estate as well as IT lead the charge, while FMCG and healthcare lag. Mid-caps underperformed today.
Eicher Motors revs past in the first quarter. Revenue and margins along with profit expectations riding on the success of its new models. The stock gains even as analysts remain divided on its prospects.
Bharat Forge is likely to raise 2,000 crore rupees within the next few months to grow its manufacturing footprint, also multifold, even as it eyes doubling of its defense vertical in the next 3 years, says the chairman, Baba Kalyani.
And Ola Electric debuts with gains on the bourses, making it the only listed pure-play EV two-wheeler company. The street now looks forward to the unveil of its e-bike plan on the 15th of August.
Hello and welcome to Business Lunch. I'm Nisha. With me as always is Hormaz. So Hormaz, there is some relief coming in after expiry is over, and also the global market is buoying our own Indian market. So let's take a look at the Indian equities at lunch hour, and it's a steady gain on Nifty 50 and the key indices, 1% almost gain on Nifty 50, clocking around 24,340 odd levels with over 200 points gain. Sensex 2 is gaining almost 750 points at lunch hour. Bank Nifty is showing slight underperformance, but we can't complain. It's a gain of over 0.6% on Bank Nifty as well. And mid-caps too in line with the key indices, 0.8% up in trade. Slight underperformance. So the key indices definitely scoring better than the wider pocket, and therefore the advanced decline ratio higher by a small margin compared to the decline, by a higher margin compared to the declines. There you go. There is a good amount of gap, and therefore the market strength is visible. On the downside, BPCL, remember, had gained a lot on the news as well as results impact, and that is now seeing some bit of profit booking. So that's the biggest laggard, but there are only a handful of shares which are really losing in trade when we talk about Nifty 50 components. On the gaining front, some of the motor companies, like Eicher Motors, Tata Motors, are the ones which are gaining the most, along with IT as well as metals. So all around, we are seeing buying momentum today, Hormaz.
Gains across the board, and the bulls would want to end the week on a high, but then the question always is that the Nifty has been struggling around that 24,350 mark, and that is where exactly the index has been over the last couple of hours. It's not moving lower, but it's not moving higher either. So it's almost stagnant, and we still remain down for the week around 1.5%. So it's going to be another down week for the Nifty and the Nifty Bank as well. All the sectoral indices are in the green, be it auto, realty. IT is making a comeback today after the rally that we saw on the Nasdaq overnight. But a couple of stocks that I wanted to pull up, one of them was Trent, and numbers just came out a few minutes ago. A very strong quarter coming in for the company, and that stock has now hit a record high after the numbers. Now 8.5% higher, growing as we speak. 6128 on Trent. The stock now back above 2 lakh crore in market cap. Very strong numbers from the Tata Group company. That was one of them. Oil India is the other one. Positive commentary there coming in from the management as well in the earnings call. The stock is doing well for itself, slightly off the highs of the day, but still trading with gains of around 4%. And lastly, RVNL. The numbers came in during market hours yesterday. The numbers were disappointing. The stock fell yesterday and continues to see further selling pressure now. 4% lower for RVNL, almost 30% now of the record highs that the stock had made. But the focus is on the new listing, and that is Ola Electric, that made its debut on the exchanges today. The stock listed on the NSE at an issue price of 76 rupees. Sonia is here with more details. Sonia.
Well, thanks a lot for that. It has indeed been a very strong listing for Ola Electric. Debuted at 76 rupees. Now it's 20% higher. As we know, Ola Electric is India's largest electric two-wheeler manufacturer and has now hit Dalal Street, which means it is India's only pure-play electric two-wheeler manufacturer to be listed on the exchanges. Now, Ola has the highest market share currently in the space. Its market share as of June 2024 is 46.2%, which is much higher than the second best player, which is TVS Motor, that enjoys a market share at 17%. If you look at the financials as well, Ola Electric has seen a good growth in the last couple of years on the top line. The revenues have grown 88.4% in FY24, standing at a little over 5,240 crores. The company is yet to make a profit or a break-even, so the company has reported losses for the last 3 years. Specifically in FY24, the losses have been to the tune of 1,580 crores compared to 1,472 crores in FY23. Now, with this IPO and listing, the company intends to use 1,600 crores of the net proceeds for investment into research and development purposes. It's looking to expand its product portfolio, move from scooters to electric bikes as well, and it may unveil a plan of its electric bike on the 15th of August. The bigger story here is this, that the electric two-wheeler industry in India is very underpenetrated at the moment. Barely 5% of the two-wheeler market is electric currently, so the scope of growth is large. Even if you look at it, the two-wheeler industry growth-wise is expected to grow at a compounded rate of 11% over the next couple of years and expected to hit a target of $35 to $45 billion by FY28. The management is also focusing on cost cutting. In the recent interviews, Bhavish Agarwal has talked about how they are producing lithium cells in-house in order to cut their costs, and he mentioned that by manufacturing these cells internally, the company aims to eliminate 25 to 30% margin charged by external suppliers for lithium cells. So good listing coming through. Let's see how the next couple of days pan out.
Thanks for that, Sonia. Yes, a big company, and the pure play two-wheeler EV space, that is now coming to the public market as well, and with the cell manufacturing. So end-to-end captive cell manufacturing is also what the company spoke about. So post the listing, Ola founder Bhavish Agarwal spoke to Ritu Singh on his plans for the company and also the state of EV penetration in India. Take a look.
This Ola Electric story is a story of India's future. We are building India's future supply chains, India's manufacturing, India's future products, and our ambition and mission is to really build India's leadership on the global stage. So the fact that the street has liked our story and liked what we do, like the price, is a very strong positive. Price will move up and down. I'm learning the ways of the market. And we will keep doing our work. We'll keep focusing on building good business, building strong products, good products, building a sustainable business also, and hopefully creating wealth for investors in the long term. The broader story that's playing out here is the penetration story of electrification of EVs in India. 3 years ago, when we started, almost to the day, EV penetration in two-wheelers was almost zero. Now it is 6-7% overall, and within scooters, where all the action has been over the last 2 years, it is 15+%. And the scooter penetration month on month is only going up. 2 years ago, the government used to give 60,000 rupees in FAME subsidy. Now they give 10,000. And the industry, not just us, but the whole industry has adjusted very well. They've rejigged the cost structures, and the industry continues to grow with reduced FAME. I believe this is the way of the future. Slowly, the incentives will taper down as companies become more stronger in their supply chain and their cost structures to be able to deliver profit margins with probably no subsidies in the future.
Bhavesh Agarwal there speaking to CNBC TV18. Moving on then, mutual fund data for the month of July saw net equity inflows at 37,000 crore rupees compared to 40,000 crores last month. Sonal is joining us now to give us a breakdown of all the data. Sonal, record SIP numbers.
They are, but those are the gross SIP numbers. We need to understand what the net numbers are to understand what the flows in the market have really been like. But of course, the equity fund inflows, that has ebbed a bit in the month of July. Understandable, there was a lot of volatility. We had big events like budget and the start of earnings season as well. So 37,000 crore rupees, that is the number for the month of July. Now, interestingly, the equity fund AUM, it has come in at 29.33 lakh crore rupees. And sectoral funds AUM is the highest this time around, forming the biggest chunk of the overall equity funds AUM. Sectoral funds is 14% of equity fund AUM at 4.21 lakh crore rupees. So that just shows how much interest is there in sectoral funds this time around as well again. Because remember, if you look at the flows for sectoral and thematic funds, it is coming at 18,386 crore rupees, which compares with the record high number that we saw in the previous month at 22,351 crore rupees. There is a continuous interest in sectoral funds and a lot of NFOs in this space as well. So if you look at the NFO number now, in the month of July, we saw 15 NFOs which garnered 16,565 crore rupees, which compares with 17 NFOs in the month of June garnering 15,227 crore rupees. And if you look at the trajectory in terms of flows via NFOs, it has just been increasing. And multi-cap and sectoral funds, they garnered 13,735 crore rupees this time via just NFOs. So a lot of focus again on the sectoral funds. That is again something that a lot of experts are worried about as well. Let's talk about the other numbers. Large cap funds, they have seen an ebbing of flows, came in at 670 crore rupees versus 970 crore rupees. Mid caps have also seen that, 1644 crores versus 2528 crore rupees. Small caps are largely similar, so 2100 crore rupees compares with around 2300 crore rupees. The gross SIP number, it is at a record high, 23,332 crore rupees. But as I said, the net number has been very different because redemptions have been very high as well. Hybrid funds, they have seen a big increase. There, the flows have come at 17,436 crore rupees this time around.
That's right. Sonal, thanks so much for giving us the entire lowdown of the mutual fund inflows. Now, one of the reasons why markets sold off after the US jobs data was what was called the SAM rule, which said that if the latest 3-month average of US unemployment is 50 basis points higher than the 12-month low, that means that US is in a recession. Now, the news is that Claudia Sam, the author of this rule, is herself saying that her rule may not apply to the current situation. Lata Venkatesh is here to explain all of that. Tell us, Lata.
Well, the markets have recovered also because of good jobs data. The the weekly jobless claims came lower than expected. But this Claudia Sam herself denying the rule is important. First, let us see what her rule is. US stocks tanked on Friday last and on Monday. Friday, why? Because that day the US jobs data came out and it said that the unemployment is 4.3%, and everybody started quoting the SAM rule. What does the SAM rule say? Claudia Sam says that when you take the 3-month average, that this would be July, June and May, the 3-month average, if that average is 50 basis points above the unemployment low that you saw in the last 12 months, then the country is already in a recession. So what is the numbers? The 3-month average of May, June, July was 4.15 and the low was 3.6% unemployment. So clearly it's about 55 basis points or 53 basis points above the low. And so, you know, when the market tanked, everyone said, oh, we're already in a recession. Now, Claudia Sam wrote on her Twitter line on August 8th, that is yesterday. Now, she's important. She's a former Fed economist, now, of course, working privately. And she's the author of this rule. She says that it may be different this time. And I'm quoting her. SAM rule triggers are there, but with no recession. The SAM rule does not account for labor supply increases. She said when she enunciated the rule, it was when job openings fell, that is labor demand fell. When unemployment is because of fall in labor demand, then the rule is triggered. But there are times when labor supply increases, and now she says that is the case. There are many new entrants into the labor force market, and that was there even in the labor data. The labor force participation went up. that's also because of the increase in the number of immigrants. In fact, she says in the current unemployment data, 50% of the unemployment is because of the rise in supply and not because of the fall in demand. And that is why this rule may not apply much. But let's not get carried away that this is a bullish statement, because Sam, at the end of the article, she's written a piece as well in Bloomberg, argues that that is only part of the reason. Part of the reason is a fall in demand of 50%. And therefore, the US economy is past its normal and uncomfortably close to a recession. So while it may be true it's not in a recession, Sam herself says that it may be close to a recession.
Interesting times we live in, people quoting a rule and the author says, no, that's not the case, but then puts a caveat at the end as well. Thank you, Lata, for that explanation. We'll take a short break here. When we return, we get you the latest on the Delhi excise policy scam as Aam Aadmi Party leader Manish Sisodia gets bail. Stay tuned, back on the other side.
And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do. And I think coming back to this campus...
We have to correct that. We have to give her a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Back with us here on Business Lunch. Now, in a huge relief for Aam Aadmi Party leader Manish Sisodia, the Supreme Court has granted him bail in the corruption and money laundering cases linked to the alleged Delhi excise policy scam. Now, the senior Aam Aadmi Party leader will be walking out of jail after 17 months. Ashmit Kumar is joining us for more on this. Tell us more, Ashmit.
Well, let's bear in mind that it was in the month of February of last year, 2023, when he was arrested by the CBI. He's been incarcerated, he's been behind bars, and that is something that weighed on the mind of the apex court. The Supreme Court said that keeping him inside the jail for an unlimited period of time is not something that is tenable, is not something that the apex court can gloss over. The Supreme Court said the fact that the bail is a right, that bail is the norm and that not grant of bail is rather the exception. The fact that he's been incarcerated for 17 years and the fact that trial has not even begun. These are sufficient grounds, the Apex Court believe, for granting him bail and for granting immediate release of Manish Sisodia. Not just that, the Apex Court was also critical of the conduct of the ED as well as the CBI. The Supreme Court noted that in October of 2023, they had said that the investigation will be completed in about 7 to 8 months' time. They had assured that the trial would begin, but the trial has not even begun. The Apex Court also noted that far from beginning of the trial, given the fact the large volume of documents in play, there are over 1 lakh digitized documents, there are nearly 500 witnesses. Given the scope of this trial, the Supreme Court said that there's not even the remotest possibility of the trial concluding anytime soon. Not just that, the Apex Court also said that the alternative, which is to send him to the trial court for granting bail, would be akin to making Manish Sisodia play a game of snakes and ladders, and that is not something that the Apex Court will allow, that would be a travesty of justice. And with these observations, the Apex Court granting immediate release of Manish Sisodia. There are, of course, a few riders. He has to surrender his passport. There'll be limitations in terms of his movement. But the big story, of course, is that after 17 months of incarceration, the former Deputy Chief Minister of Delhi is set to walk out of Tihar jail.
All right, what a relief coming in for Manish Sisodia. Thank you so much, Ashmit, for getting us all those important details. With that, we'll slip into a short breather on Business Lunch. But on the other side, remember, we get you excerpts from our conversation with Olympian Abhinav Bindra on the other side, straight from Paris. Stay tuned.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation.
Welcome back. You're watching Business Lunch, and now let's get you news from the world of sports. The Olympics that is underway in Paris saw India shine, bringing home 7 medals so far. Now, our colleague Shriram is in Paris and met with the former Olympian and also gold medalist Abhinav Bindra and asked him about the Team India's performance this time around. Take a listen.
Let's start with Manu Bhaker and what a spectacular run she's had.
Yes, absolutely amazing. I mean, to go back home with 2 bronze medals and a 4th place finish, it's been an incredible achievement for her. I'm so inspired and simply proud of her. I mean, from how she finished in Tokyo, to show the resilience, to show the character that she's displayed, to keep at it, to not give up, is an inspiring story for generations of Indians to come.
You know, let's talk about the big heartbreak for India, and that is what happened as far as Vinesh Phogat is concerned. And you went and met her, you had a conversation with her. You know, while the post-mortem is underway on what happened, what could have been done differently, what went wrong, what wasn't done, and so on and so forth, from an athlete's perspective, from her perspective, and someone who's dealt with adversity and someone who's you know, hit rock bottom and sort of risen up, what do you see her mental state at this point in time?
Obviously, she's devastated. I can fully empathize with her. I can't even imagine what she would be going through. You know, I had heartbreaks in my sports career, but you know what she's gone through, I can't even understand. I met her, but I didn't even know what to tell her.
What did she say to you?
No, I mean, it was just general talk on you know on life, on how life can be unfair, and you know, sport sometimes can be brutal.
Did she have an assessment of what went wrong?
Oh, we didn't even get into that. But I just went to
offer your
support to her and to be there for her, and I think that's what she needs at the moment, and I think the country must rally behind her in these difficult times. It's a very difficult period for her. Sport is hard. It's very hard, and that's why, you know, India must look at failure very differently. I think society on its whole looks down on failure in India, and I think it's high time that, you know, society and the youth of the country become more sporting in nature.
You know, so as we look at possibly India 2036, which is the ambition and the aspiration that the government is working towards, but what you said, you know, that economic success is linked to the aspiration of a nation becoming a sporting powerhouse.
I said it the other way, by the way.
I know you said it the other way. I'm linking the two. You know, some of the measures that have already been taken, some of the reforms that have already happened, but what more do you believe needs to be done by the government, by the corporate sector, by civil society to ensure that we do emerge as not just a host possibly of the Olympics, but truly as a sporting powerhouse?
I think we need more young kids to play sport. I think we're a 1.4 billion population, but let's ask ourselves the question, how much of these 1.4 billion actually play sport? And if we come to that number, we're actually not doing that badly. So we need to give more opportunities to young people to just play sport for the sheer joy of playing sport, for us to become a healthier society. We're the youngest demographic in the world, but we also need to ensure that we are we have a healthy population, and sport can play a very important role. When you get more people to play sport, when sport becomes a culture, then performances at the elite level will become a byproduct.
India's OG golden boy Abhinav Bindra there in conversation with CNBC TV18. But that is a wrap on this edition of Business Lunch from Nishami and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Assuming
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. It is a day where we are seeing green across our screen, something that we saw in the global markets as well. So this was expected. A lot of earnings and the reactions have been very sharp as well. We'll discuss all that on the show today.
You're absolutely right. Earnings coming in thick and fast, and that's keeping the markets very, very active. But quite a lot lined up on the show. Let's start off with the top headlines. A surge in US equities overnight powers up Indian stocks. Realty, auto and IT lead the charge, while FMCG lags. Banks are the relative underperformers.
NBCC gains after winning a 15,000 crore rupee order for development of satellite township in Jammu and Kashmir from Srinagar Development Authority. The stock is up nearly 8%.
Trend surges over 10% to a record high on strong Q1 earnings performance. Revenues rises 56% on a year-on-year basis, while margins expand to 15%.
Godfrey Phillips shares gain over 6% after Q1 cigarette volumes grew by 26.2% from last year, which is higher than peers. ITC and VST Industries revenues also rise 12%.
Ola Electric debuts with gains, making it the only listed pure EV two-wheeler company. The street now looks forward to the unveiling of its e-bike plan on August 15th. The management tells CNBC TV18 that focus is to build profitable growth.
Okay, it is a day of a lot of firsts. As Vivek just said, Ola Electric listed on the exchanges, the first EV maker to do so. A lot of reactions to earnings as well. The Midcap index is doing well. So we have the Midcaps up around 0.9%. It's in line with what the benchmarks are doing as well. So the Nifty is up around 250 points. The advance decline ratio in favor of the advances as well. A lot of earnings related reaction that we are seeing right now, and we are towards the fag end of the earnings season as well. Nifty Auto seeing big gains, and almost all the sectoral indices are in the green today, so that is the kind of market that we are looking at. However, that gap between advances and declines, that's narrowed down a bit. But so far, nothing to worry, but we'll have to see whether we see these levels stabilizing in the last 1 hour of trade as well.
That's right. Hoping to end the week with gains. It's been a very volatile trading week. Couple of stocks to just have a look, the companies that just delivered their numbers. First on the list is Trent. The stock has gained 10% after declaring a very strong set of numbers. HDFC Life Sciences is the other stock that's done very well after its results. And Alchem Labs seen a very volatile move after just declaring its results a couple of minutes ago. But this is our special segment, Midcap Movers, where Hormas is at the wall to take us through the midcaps that are moving around in the session.
Would definitely look to end the week on a high are the bulls, and it is showing up on the screen as well. A lot of stocks advancing compared to those on the losing end. So we'll start off with some of the gainers today. Affle India among the top gainers today, 5.5% higher, as is Oil India. Positive commentary post earnings. Oracle Financial market cap nearing 1 lakh crore, and Suzlon third day of gains and market cap crossing 1 lakh crore in today's trading session. So 76 on the screen now for Suzlon. Earnings reactions continue. We are at the fag end of the earnings season, as you mentioned. Trent, of course, the stock of the day, preferably very strong numbers, 10% higher now, record high for the stock as well, market cap back above 2 lakh crore. But RVNL and SAIL, disappointing results, seeing some bit of cuts. RVNL saw cuts yesterday as well, and Page Industries, after some negative brokerage commentary, seeing some bit of pressure in today's session. The shrimp feed stocks have come up again in today's session. Avanti Feeds is up 11% now at the highest point of the day, nearing 750. Waterbase and Apex Frozen Foods also seeing healthy gains in today's session. And lastly, stocks that are doing well on the back of volumes. KFin Technologies, now the stock is set for its best week of 2024. It's up already 18% so far this week. Bombay Burma and NBCC, after that order win, is also seeing healthy gains on the back of very strong volumes. Back to you guys.
Thank you, Hormas, for joining us with that list. As always, hope you have a great Friday ahead. That's the Midcap Movers list. But as we've been talking about a lot of earnings coming in, Greaves Cotton is one of them, reported a good set of Q1 numbers. If we talk about the consolidated numbers, growth came in double digits, losses narrowed. The automotive engines business saw decent growth as well. The company has spoken about higher market share in the automotive business as well. To discuss this and more, we have Akhila Balchandar, the CFO at Greaves Cotton, joining us now to take a few questions. Ms. Balchandar, thank you so much for joining us today. And we are talking to you on a day where we have a pure play EV player getting listed on the exchanges as well. The electronic or the EV business is around 20% of your overall revenues. Wanted to understand what are the plans here with respect to growth? What is the annual run rate that you're looking at? When will you see it turning into black? And any more capex that you're planning here? Ma'am, I think you're on mute. Can you unmute yourself, please?
Yeah, thanks so much. Thanks for having me on this day when one of the EV players is getting listed, and that too at a nice premium. We have done a lot of work in the last year, and I think the results are now playing out. If you remember, we started last year with some concerns. Over the year, we have addressed all the concerns of the MHI. We have worked with the government, and yesterday we have been happy to share that MHI has communicated that our two-wheeler electric vehicles are eligible to be tested. So this gives us a lot of cheer. On the demand incentive side, our three-wheelers were already under the incentive scheme, and all this has played into our turnaround story. So I think this has been a wonderful quarter, both from a standalone and the consolidated performance, and we should take it forward from here.
Right, ma'am. Ma'am, one thing we want to understand, you said that, the EV business and the EV vehicles from your stable are eligible. Are they eligible for the FAME subsidy? And number two, have you applied for a PLI in this particular segment? And, one question that investors have been asking, will you look to demerge this particular business at some point of time?
Let me take third one first. And yesterday we had a board meeting, and the boards of both the companies have discussed and deliberated this in detail. And as and when any further decisions are made, we will keep the exchanges informed. On the subsidy front, as I said, on the three-wheelers, our Ultra City Passenger and Ultra Cargo are already eligible under the MHI scheme. And yesterday we have received the communication that our two-wheeler vehicles, including the newly launched vehicles, are all eligible to be tested. So as and when we get the further information, we will continue to share with the exchanges and the investors.
Oh. Okay, all right, we get that. So what are the growth prospects for the overall business looking like this year itself, Ms. Balchandar? You spoke about market share rising to around 57%. Volume growth, barring the e-mobility business, has been higher across businesses. What do you plan to end the year with? And in the standalone business, the margins are around 11%. Do you think you'll do better than that, or is that the number that you're aiming?
In terms of growth, if you take our performance over the last 3 to 4 years, we have been growing at a healthy pace. Year on year, we have grown at 12%. And from an organizational perspective, we are working, if you look back at our transformation strategy, we have been putting a lot of effort on diversifying our product portfolio, the application portfolio, and also the geographical spread of the company. All this is playing out, and this process is an ongoing one, and we hope to keep momentum in the journey.
And what about the margins? So you're saying 12% growth, that is something that you will continue in FY25 as well. And what happens with margins?
Margin improvement has again been a very strong focus that we have been working on. Again, if you see the journey compared to last year and the year before, we've consistently improved our margins. And this has been on account of a lot of focus on improving our product mix, our diversification strategy, and internal operational efficiencies. Yes, we will target to maintain our margins in the region of 11 to 13%. And this is what we have consistently communicated and we are working towards.
Okay, so 11 to 13% is where you see that particular margin band at. Now, the next question is very interestingly, yesterday in your presentation, you said that you have introduced CPCB4 compliant, deal gensets. So what is the kind of growth trajectory you see over there, given the fact that there has been significant pre-buy already as far as the previous gensets were concerned? What is the kind of guidance you can give us over there? And number two, as far as the demerger of the EV mobility business is concerned, any timelines that you are looking at?
Okay, let me take the first question. In terms of the gensets, it's a good market and the industry overall has also been growing. And in terms of applications, today, most of the industries, there is a need for the gensets. The infrastructure program of the government, including the railways program, that requires a good demand. So there we are very comfortable. And we will hope to capitalize on the momentum in the industry as well.
Any internal targets you're working with? For the genset bill?
Of course, yes. We do have a very robust internal target. We have a plan set out. As a company, we will not be able to give the guidance. In terms of the demerger of the EV business, again, as I said, this is something being discussed and deliberated by the boards. And as and when any firm decisions are taken, we will definitely share with the investors.
And just following up on my colleagues' questions as well, any timeline for the demerger? You deliberated on it. We are asking about it because the street is very bullish about the e-mobility business and they just want to understand the company's plans with this one.
I will not be able to comment. As I said, we will need, the board will definitely take a decision at the time. What I would like to share is, as a group, we are very focused on building profitable and sustainable business. The EV business, given last year's journey, we're very focused to bring it back on its path to profitability. The traction is there. We are sharing those results on a quarterly basis with all the investors, and the board will definitely take the right time when they believe that it's...
Ma'am, I want to squeeze in one more quick question. We got that, we got your plans as far as the EV business is concerned. Ma'am, retail appears to have contributed. What is it that you're looking from the retail business? Could you quickly share some financial parameters you've set for yourself in terms of guidance for FY25?
Retail is again another business that is core to our diversification strategy. There we are now focused on the parts, not just for our own products, but also for EV spare part.
Okay, all right. Looks like there is some technical glitch. We were looking forward to that answer, but thank you, Ms. Balachandra, for joining us today and patiently answering all those questions. That's the word coming in from Greaves Cotton. We'll have to slip into a short break. When we come back, we'll discuss the market technicals with Hemant Kapadia of KR Choksi Securities. Stay tuned.
And taking into account the 4.9% inflation print, which has already come out so far as Q1 is concerned, CPI inflation for the current financial year, that is 2024-25, is projected at 4.5%, with Q2 at 4.4%, Q3 at 4.7%, and Q4 at 4.3%. CPI inflation for the first quarter of next financial year, that is Q1 2025-26, is projected at 4.4%. The risks are evenly balanced. First and foremost is the fact that our target is the headline inflation, where food inflation has a weight of about 46%. With this high share of food in the consumption basket, food inflation pressures cannot be ignored. Further, public at large understands inflation more in terms of food inflation than the other components of headline inflation. Therefore, we cannot and should not become complacent merely because core inflation has fallen considerably. Second, and equally important, is the reality that high food inflation adversely affects household inflation expectations, which have a significant impact on future trajectory of inflation. The Monetary Policy Committee met on 6th, 7th and 8th August. After a detailed assessment of the evolving macroeconomic and financial conditions and the overall outlook, it decided by a majority of 4:2 members to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%.
Free speech, and yet the need to ensure that there is moderation and there are guidelines and it is a safe space. What's been the experience on that front today? I mean, I remember you saying that whatever's happening in the world is happening on YouTube, and we have active wars currently on in the world at this point in time. We've got situations that have just taken place over the last few days where there is an active call inciting violence, for instance, in different parts of the world. Do you believe that there is a need to perhaps review the moderation community guidelines, the moderation policy? Is there a need to engage actively with regulators, with governments at this point in time around the world? I mean, how do you see the road ahead on this front going forward?
I mean, I think you encapsulated it quite well. I do think what happens in the world happens on YouTube, and what happens on YouTube does influence what happens in the world, and that's why living up to our responsibility here in
Welcome back to Midcap Radar. Let's now welcome Hemant Kapadia from KR Choksi Securities for a technical check on the market. Good afternoon, Hemant. Thank you so much for joining us. What is the market looking at currently, and what are your top picks for the day?
Hello, Vivek. Very good afternoon. Thank you for having me. Such a pleasure. Market's going nowhere. The relative strength, 24,000 breaks. Only and only then do we see downside. Oversold, banks bouncing back. Weeks slowly coming up. So we're trying to cover up the gap. Currently, nothing spectacular, but the downside seemed a bit protected, at least for a few days. And a couple of individual stocks, Vivek, I think, which can sort of outperform or at least do better. Firstly, a buy call on Chambal Fertilizer. We have been corrective for multiple weeks now. Downside appears limited. Mechanical indicators on the daily chart have given a crossover buy. Stocks looks set for a breakout. It hasn't come in yet, but the stage is set. So one can buy Chambal at 518, stop loss 498, target 558. And secondly, a buy call on Mahindra and Mahindra Financial Services Way. Almost same logic. We've been consolidating for multiple weeks, 7-8 weeks or so. Everything is turning positive. 1 year correction coming to an end. So one can buy M&M Financial Services at 298, stop loss 283, and target of 328. Vivek.
Okay, thank you so much, Hemain, for joining us and giving us those levels and technical picks. That's the technical check on the markets. We'll slip into a short break. When we come back, we'll focus on markets and talk about trend. It is buzzing in trade and how the stock is up 12% as we speak on the back of numbers. We'll get the analysis when we come back.
Globally, everywhere that we operate around the world is my top priority. It's what I will prioritize above everything else because it is the right thing for us to do, but it is also the basis of, you know, the business opportunities, the creator economy, everything that we've talked about. And so we work very closely with our partners in government here in India, but really all throughout the world. And I would say that we have a clear set of community guidelines that we have invested in very heavily over the years. In many ways, we have learned through trial by fire over the years to understand sort of how those community guidelines could be written, how they should be clear. But they are always up for being modified. It's important for us to have clear principles, but then also to be flexible in terms of how we adjust them. Because as you rightly point out, what's happening in the world is changing on a regular basis. And so that's really how I've approached the space. And you know, it's something that's near and dear to my heart. It used to be what I was responsible for even as a chief product officer before I took over as CEO. And it's something, as I said, that I'm going to prioritize both in terms of my time, but also resources at the company before anything else.
My wife, for instance, you know, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to you know, without getting sort of stressed, being able to manage many different things. I'll just give you one example. You know, when I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, you know, because they're in a meeting with me, they would be, you know, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so I, you know, because that's exactly what, you know, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My, you know, my kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is
Welcome back. You're still tuned into Midcap Radar. The stock to focus on definitely is Trent. It's firing up in trade after reporting a strong set of Q1 numbers. The stock is up already more than 100% in 2024. Mangalam is joining us with the analysis. Mangalam, what's working for Trent?
Well, Zudio is working for Trent. In the last 6 months, the stock has doubled, but in the previous 6 months also it had doubled. So over the last 1 year, last 12 months, it's actually moved around 3.5 times, and it's a snowball that keeps rolling. If you look at the revenues of the company, 4,100 crores. This compares with the street expectations of 3,800 crores. The EBITDA came in at above 600 crores. The street was working with a number just shy of that 600 crore mark as well. And as a result of which, the net profit too has beat street expectations by a wide margin. But that does not tell you the entire story. In a quarter which was weak for the retail and consumer sentiment itself, year on year, the company's reported 56% jump in the revenue, 66% jump in the EBITDA, 90 basis points improvement in the margin, and wait for it, 135% jump in the profits as well. They are constantly expanding their store footprint, so they've added 6 Westside and 16 Zudio stores. Remember when Zudio started a few years ago, it was much lower in size than Westside, the number of size, but now we have 559 Zudio stores and 228 Westside stores itself, and they have 36 other formats as well. Most notably of them, the one which is on an expansion spree is the food and grocery business. The company said fashion concepts have registered a double-digit like-for-like growth, which is a positive. Beauty, personal care and innerwear, which is their emerging segments, has grown faster, now accounts for nearly 20% of their standalone sales. And add to that, there has been another development as well, which could bring in about 105 crores to their books, which is basically they will tender about 1.4 lakh Inditex shares that they hold. Inditex basically is the joint venture that they have with Zara for a buyback at around 7,500 rupees per share, which gives them about 105 crores. As of the last annual report, they held about 3.17 lakh shares in Inditex itself. The only problem, the valuations. It was expensive 6 months ago, it was expensive 6 years ago, but even now at 120 times, it is not particularly cheap. And the street expects that if the EPS growth continues, then maybe the company will continue to hold on to these valuations. The most important trigger going forward is that there could be a possible Nifty inclusion. With today's up move as well, the stock has hit the market cap of 2 lakh crore. But now as you look at it, from the last close, there have been counter reports telling you that this may be well part of the Nifty in the next inclusion that comes about.
Thank you so much for that, Mangalam, throwing light on what's actually worked for Trent this time around. But another stock on the radar is Zydus Life Sciences, another strong set of numbers from the company. Ekta joins us with more details.
Thanks for that. Well, yes, Zydus is in focus because it came out with a good set of numbers, but it was largely expected. So that's the reason why you're not seeing a huge move in the stock. Now, the reason for that is that the strong quarter was expected to be driven by stable pricing pressure, the contribution of Revlimid generic, and a couple of other drugs, especially the launch of Mybetriq generic, which is used for overactive bladders. So the revenue was up around 20.8% year on year. EBITDA was up to around 2,884 odd crores, which was better than estimates of around 1,600 crores. Margins 33.6% and profit of around 1,419 odd crores. Now, in terms of the key segments, revenue was up 12% in India. It was flat on a Q1Q basis, but up in double digits year on year. Consumer wellness was up around 20.6% year on year. US sales were at $371 million. Compare this to $304 million last quarter and $298 million same time last year. So that was primarily because of the kind of launches that they had in the quarter. Mybetriq generic, for example, they launched in both the strengths and was the only company to do so. So that's the reason why you're seeing such a strong performance come in for Zydus this quarter.
Okay, all right. Thank you so much for that analysis, Ekta. That's Zydus for you. But we have completely run out of time on Midcap Radar today. Stay tuned, your stocks when we return.
Be very, very helpful in as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, So I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for Inter-IIT. So I remember this campus especially, because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we've recouped a lot of the losses that we've seen from Monday. So currently we have the Nifty, which is higher, as well as the Sensex and the other indices. In fact, we have the Midcap index, which is up around 1% at par with what the Nifty is doing today, up around 1%. The advanced decline ratio standing tall at around 2,400 stocks advancing to around 1,651 stocks declining on the Bombay Stock Exchange. We have a lot of queries left to answer, so let's get going with that. We have Richard Jain of 5paisa.com joining in and to answer a couple of your technical questions today. Richard, before we start talking about key queries, wanted your thoughts in terms of the indices, the kind of gains that we've seen in today's trading session. We've recovered from those lows that we saw on Monday.
Yeah, hi, very good afternoon, Ekta. So, Ekta, if you see last 4 trading sessions, in fact, this entire week after that opening with a gap down around 24,300, we have seen the markets consolidating within a broad range where 24,500, 450 now seems to be the resistance, which is the 50% retracement of this entire correction, which we have recently seen. On the other hand, 24,000 is likely to act as a support. So, signs of consolidation in the index is there. I think momentum is more based on the global markets move, because if you look at the derivatives positions also, FIIs have long short ratio of about 51% only. They have trimmed that positions from 67% long short ratio at the start of the series, whereas client section have long short ratio of about 53%. So none of the market participants are looking to build aggressive positions for directional, either on the long side or on the short side. So I think signs are there that we may see some more time-wise correction, probably 24,000 to 24,500. I think this range should continue in the near term.
Okay, all right. Well, just to put it into perspective, the Monday intraday low for the Nifty was around 23,893. So from those levels, the Nifty is up around 477 odd points. But we do have a lot of queries for today. So we have Let's get to the first one. We have Indira, who writes to us from Andhra Pradesh. She holds 10 shares of CCL products, which she's bought at around 593. So she's sitting on a profit. She wants to know what to do, whether to hold or to sell this particular counter. So what would you suggest on the technicals of this one, Richard?
The positional structures look quite positive. We have seen a price up move supported by good volumes, I think, post the quarterly numbers which it posted. But no, technically, also, if you see, then the downside seems to be very limited from here on. 600, 580 is a very good support zone for the stock. Some resistance for the short term is there around 700 mark, but I think once we surpass that 700, then the stock could potentially rally towards 750 to 770 kind of range. So downside seems to be limited from here on. So I would suggest to continue to hold on the positions with a stop loss below 580.
Okay, all right. Fair enough. Well, we have another query now. We have Rahul Jain, who writes to us from Mumbai, holds 30 shares of Power Grid, which is bought at 200. He wants to know what to do with this particular counter. He's sitting on a good profit, wants to know whether he should exit or he should probably stay on in this counter. 30 shares bought of Power Grid. What would you recommend to Rahul, Ruchit? Should he probably take some profits off the table, or do you think that there's more upside for Power Grid?
So one thing I can make out from his buy price that he's a long-term investor. Overall long-term structure for Power Grid still remains positive. If I look at the price volume action, then in last few months when the prices have rallied, the up moves have been supported by good volumes. Whereas on any correction, we have not seen any volume-based selling in the stock. So I think there is a good potential for this uptrend to continue in the near term. Maybe even if we get some corrections, there would be more of a time-wise corrections rather than price-wise corrections in the stock. So I would suggest to continue to hold on to the stock from a bit mid to long-term perspective. If the uptrend continues, then the stock even has potential to rally about towards 380 to 400 kind of range.
Okay, all right. So that's on Power Grid. Just want to point out that now HDFC Life is picking up pace. That stock is at the high point of the day. It's up around 2.5%. So you're seeing some amount of rewards coming through in terms of specific stocks today. So that stock is higher. We have Trent, which is shown a good traction post what was a very healthy set of numbers. So Trent really is one of the stocks of the day. That stock up around 10%. But LIC is the other one that we're following today after it reported what was a mixed set of first quarter numbers. Our colleague Yash Jain spoke to the chairperson of the company, Siddharth Mohanty, and spoke to him about the company's APE growth, value of new business margins, guidance and more. Listen in.
If you see our commitment, past quarter is much more than what we committed, we have delivered. As against 15% AP growth, we have shown 21.28%. And margin, of course, margin if you compare March was a 16.8. This time we have shown 13.9, which is a 20 basis points positive over last year, same quarter, Q1. Correct. So that is also there. And VNB growth also, as against 15% growth, we have shown 23.6% growth we have shown. So we are on track, whatever strategy we adopted and whatever commitment we made.
So are you on track, and do you still stick to the guidance on AP, VNB and margin?
Absolutely.
Okay. Now I want to speak a little in detail about AP and retail AP. As far as AP is concerned, 15% is what you've guided for FY25, which means for the year you will have to get about 66,000 crore in AP for FY25 to achieve that guidance. What I want to understand from you is that in this quarter, of course, you've shown about 21% growth. How does quarter 2 look? What could be the growth rate in your total AP? And H2? Would it be much stronger than H1 in terms of AP? And if yes, then what could be the growth that we could look at for H2?
You see, if you bifurcate AP, group as well as individual. In individual AP growth, we have shown, I think, 13.41%. And in group, we have shown a growth rate of 34.37%. So combined, we have shown 21.28% growth, correct, group as well as individual. So my group is also contributing to substantial part of AP. So my sense is in Q2, because group business will also grow and individual as well. So definitely this position will continue.
Okay. Now let's speak a little about the value of new business. What you had guided for is 300 basis points higher than APE growth. That is about 18%. You've achieved exactly that on a higher level in first quarter because you achieved APE of 21% and 300 basis points higher VNB, that is 24%. Could this 300 basis points incremental growth over APE continue for each quarter of FY25? Do you see that continuing?
That will be sustained. My sense is the way we are approaching at our distribution, particular product mix and all other things, that VNB growth will continue.
Okay.
Along with AP growth already is there and VNB growth also will be there.
About 300, 400 basis.
Around that range, around 200 to 300 range, that will continue.
Let's speak a little about the margins, sir. The margins in this particular quarter, they came down from what the street was anticipating, and they were higher by about 20 basis points on a year-on-year basis. Now, what I want to understand from you is that you've guided for 19 to 20% of the margins in FY25. Is that achievable? Are you still on track towards that? Because in the first quarter, the growth was just about 20 basis points. Second thing, your long-term goal was about 25% VNB margins. The timeline that was spelt out at the start was by FY27. Are you confident of having near 25% VNB margins by FY27?
You see, if you see the margin in Q1, actually for entire industry, all listed players, everything, if you see, there is some pressure on margin.
Yes.
However, LIC has shown some 20 basis points growth as against 13.7, we have achieved 13.9.
Correct.
And major reason I would say, because product mix and product benefit, because we have revised annuity rate upward, many benefits also we have given more, so that has to some extent affected margin.
Okay.
Despite that, we have shown good margin. Though industry as a whole, margin has come down, but LIC has shown. To your question of 20% in the current year, we have already told 200 basis points growth. Already last year we achieved 16.8.
Yes.
So it is coming around 19%.
Correct.
So 19 to 20% current year, that will be our, we'll try for that, and definitely I am hopeful we'll be achieving. And so far as 25% margin, we told 27.
Yes.
But as things move now, much before that, we'll be able to achieve that. That is my sense if things move and
in the same
all those
way.
things.
One final question on the financials. You had of course said that by FY25, our non-par share of individual AP will exceed 20%. You've straight come out and hit the ball for a 6. You've in the first quarter itself, you've achieved about 23%. Now, what I want to ask you is that what is the guidance then that we should assume for FY25? Should we raise it to about 25% of the total individual APE to be non-par products? And second question, 2 years, 3 years down the line, what is the right mix of non-par of individual APE that you see LIC to have?
See, current year, my sense is definitely around 25% or plus. Share of non-par AP will be there in the car because already 24% we have achieved.
Now let's come to a few questions on the regulatory side. Last interview you had said that LIC has started the process to look at its entry in the health insurance space. What I want to understand from you, since 3 months have passed since then, what is the progress on it on 3 important questions. One, have you identified a particular company that you're interested in? Second, would you hold a strategic stake or would you hold a majority stake, which is more than 50%? What would you want to hold? And third one, if composite has to come, let's say over the next 2 to 3 months, after it comes, would you be able to announce this acquisition and take things forward at least in the current calendar year itself?
You see, already we have expressed our intention to be in the health insurance space, indemnity health insurance space. And for LIC, we are now exploring all opportunities, what will be best in the interest of corporation. And now one thing comes to mind is to have stake in some standalone health insurance companies.
Okay.
So that inorganically we can grow. It is a sort of a plug and play. Everything is there. Just I join them, I also sell, and we have a distribution strength. If you see today, most of the health insurance company agents are LIC agents.
Yes.
Our agents are selling health insurance products because we do not have indemnity. So that advantage is already there. So better to acquire a company which is already there, everything is there, and my distribution strength will be added to that. So that company will grow and LIC will also benefit.
There are very few choices that you have, just about 2 to 3 in the standalone health
So
insurance.
that we will examine all
Have
those
you
things.
have you
That
identified?
our team is working on that. When we finalize, we'll come
And this
to you.
calendar year, if composite comes in the next 2 to 3 months,
we are hopeful within this financial year.
The students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, you know, is there anyone in specific that you like to emulate in your style of working?
The one individual that I have, I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2%.
Welcome back. Well, we still have with us Shaina Mukaddam as well as Ruchit Jain to answer all of your stock queries. Well, we do have one query coming in from Shashank, who writes to us from Mumbai. He holds 720 shares of IDFC First Bank at around 80 odd rupees. He's sitting on a loss on this one, so he's asking what he should do with it. Well, Shaina, let's get your take first on this. What would you recommend that one does with IDFC First Bank sitting on a loss right now?
Well, it is not my topic in the sector. At the same time, I believe that, at current levels, it could bottom out, after having, the stock has corrected a lot. And in terms of price to book, it's about 1.7. So it is not overtly expensive and it has potential for growth going forward. So it could bottom out from here. But I think at current levels, if you want to get into a new stock, then private sector, some of the banks like ICICI Bank, etc., which have consolidated for quite some time, look like better bets for the longer term.
Okay, all right. Well, on a year-to-date basis, it's underperformed, Ruchit. IDFC First Bank is down around 17 odd %. Any kind of upside, any target that you would recommend on this?
Well, yes, surely a clear underperformer within the banking space. Even when the Bank Nifty recently had rallied towards new high, I think IDFC First Bank did not participate as well. So the trend still continues to remain down, but it's just because the momentum readings are a bit oversold. Then we can expect some pullback move. But any pullback move towards 78 to 80, I would recommend to take an exit from the stock and switch to some other private sector names. Maybe Federal Bank compared to IDFC Bank, if you look at the chart structure, looks much better from mid to long term perspective. So sell on rise would be the call for IDFC Bank. Pullback towards 78 should be used as an opportunity to exit and shift on to stocks such as Federal Bank.
Okay, all right. Sell on rise is what you'd recommend on IDFC First Bank. Well, we have PC Achaya, who writes to us from Bangalore, holds 60 shares of Asian Paints, which is purchased at around 2,900 odd rupees, and is asking what to do with this particular counter, sitting on a profit as of now at around 4,000 odd rupees. Shaina, let's get to you first. There's competition increasing within the paint segment. Asian Paints, do you think that it would probably continue to be one of the leadership stocks, a blue chip that one should have in their portfolio? What would you recommend?
See, it has been a blue chip stock, but if you see the recent past, we've seen a lot of competition coming in from very strong players. We've seen this impact also in the first quarter. If you see the volumes were just about 5 odd %, if you compare it, which is much lower than the previous years. So to that extent, we're seeing a slowdown. They are trying to take price increases, small ones, and trying to support the growth. But I believe, even in terms of valuation, if it's like 1 year forward, 40 times PE, while it's a great stock to hold in the long-term portfolio, I believe a lot of it is priced into the current price. So, if you're looking at for a 1 year good return to beat the market, then I think one needs to switch from Asian Paints. You can book part profits. Rest you can keep in your long-term portfolio, no issue.
Okay. All right, and Ruchit, what about you? Asian Paints is down over 10% year to date. What would your recommendation be at current levels?
So I think the price-wise downside seems to be very limited from here on. In July 2023, the stock registered a high of around 3,500. And it has already corrected from 3,500 to 2,700. What we are witnessing is in the last 3 months, this price-wise correction has now turned into some time-wise corrective phase. So maybe from a short-term perspective, the stock may remain range-bound. 2850 to 3150, 3200 seems to be the trading range for the stock. But downside seems to be limited from here on. So if you can have some patience and hold for maybe 6 to 9 months, then one can expect a up move in the stock, but not in the near term. So if it's up for mid to long term, then continue to hold on the stock.
Okay, all right. Well, that's on Asian Paints, but we do have an SMS coming in or a query coming in from Madhvi from New Delhi. She holds 450 shares of IRFC, which she's bought at 189. She wants to know what to do, whether to hold or sell this particular counter. Well, a couple of these stocks have corrected, Ruchit. IRFC, for example, is down 6% this month, 7% this month. Do you think that it's probably prudent to take some profits off the table, or are you anticipating a bounce back?
So I think the stocks would go through some consolidation phase. These railway names post-election results till the budget had rallied very significantly compared to the market returns. So I think that outperformance was there, but now the momentum readings were quite overbought post this up move, and these stocks have started correcting. We may see some more correction towards 165, 168 kind of range in the near term. So if it's a short-term position, then can look to exit from this one.
Okay, all right. And what about you, IRFC, Shaina, on the fundamentals?
I would agree. I would believe that, one could book profits, exit at current levels. Basically, the government holds 86% of the equity. And there is a likelihood that, it would tap the markets to, dilute its stake. Given that fact, the valuations are very expensive. If you look at price to book, it's almost about 5 times. So for an NBFC, it is expensive. P is also 35. So the upside from here, how the government can price its issue is likely to keep the stock in, in a consolidation phase. So I believe one should switch.
Okay. All right. So you recommend switching from IRFC. But now we have a question coming in on Indian hotels. We have John, who writes to us from Kerala, holds 500 shares of Indian hotels, which is purchased at 430. Wants to know what to do, whether to hold or sell this particular counter. Sitting on a good profit at this point. Ruchit, do you see further upside? What are the technicals?
Technical structure still remains positive. For last 3 months, although the stock has not moved much, but this just seems to be more of a time-wise correction within an uptrend. The stock has a very strong support base around 540, 550 kind of range positionally. Until these levels are intact, I think any decline if comes in the stock, we would see a strong buying interest over there. So price-wise downside seems to be limited. I think it's just along with the markets, it is showing some time-wise correction. And once this time-wise correction gets over, we could see a resumption of the uptrend and the stock could rally towards 680 to 700 kind of range.
Okay. All right. 680 to 700 is your target. Is that correct, Richard?
Yes, absolutely.
All right. Fundamentally, what would your target be on this one, Shaina, Indian hotels?
Yeah, while I believe, the stock is expensive at current levels, if you look at it, if you look at it 1 year forward, it's almost EV by EBITDA of about 23 times. So it is not cheap. So I would expect, 10 to 15% increase. This is more in line with the growth that is likely to come about in the next 2 to 3 years. They're talking of adding about 10% keys to the existing. They've got almost about 11 or 12,000 keys. So to that extent, there will be growth coming in, and that I think should take the price higher. And also, I think if we saw the first quarter numbers, the remaining part of the year should be better. So it is consolidating a bit, but I think going forward, it's a portfolio stock and one should continue holding it for the longer term.
Okay, well, a bullish call coming in on Indian hotels there, portfolio stock, that's the word coming in from Shaina. But on that note, Shaina, as well as Richard, we're going to thank you. That's all the time that we have in the show. Do remember to email us your questions and we'll address them with our experts. Closing bell to take you through the last hour of trade. Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself.
The Taiwanese index, which is up 3%. We have the Hang Seng, which is higher by 1.6%.
So you got to cross and get past this 24,350 to 24,686 levels one by one.
Decent set of numbers coming through. A revenue growth of 10.5% is what the company has clocked in.
So 24,373 is where the Nifty is starting.
If you look at the mid-cap and small-cap indices also, they are down hardly 3 to 4%.
Big day for Bhavish Agarwal and the entire team at Ola Electric.
We could ride, 1 or 2 quarters of underperformance.
First 2 hours of trade have been very, very steady.
While the numbers look stable on a month-on-month basis, it's a slight decline that we are seeing in terms of equity inflows in the month of July.
Ola Electric story is a story of India's future.
It is a day where we are seeing green across our screen.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar and with me are the boys, Nigel and Mangalam. This is a good Friday, right? It's been a manic week, levels all over, extreme volatility. Sometimes you start higher, but you end lower. But this one's been a steady, strong session. No complaints.
Well, that's right. I think I was breathing a sigh of relief from around 11:30 a.m. Why? Because the Nikkei shut. And the Nikkei shut higher. Okay. And for all the talk about the Nikkei, it ended down a little more than 2%, after being down 12% in the first trading session on. So it wasn't such a bad week at the end of it. The start of the week was really fearful, but all's well that ends well. So hopefully we're on track. Hopefully we're on
Europe, the CAC is down less than 0.1%. The DAX is down less than 0.1% for the week. So for them, it's as if Monday never happened.
And Dow Jones the futures is still higher by about 0.8%. So we'll keep an eye out on that. But the one thing that I looked at from midday sometime around with the Trent numbers, phenomenal numbers. It's a gravy train that continues to move on, right? You look at the Trent stock over the last 1 year, it has doubled, 4 times. It's moved 4 times. The last 6 months, it's doubled, but in the previous 6 months also it's doubled. It's been what a wealth creator.
Indeed. Well, I'll tell you what, we want to know more about Trent. For the time being, let's get Mitesh into the conversation. Hi, Mitesh. Good afternoon. Well, on the entire week, Mitesh, when you've been joining us, I've been saying, Mitesh, the start was in the green, but unfortunately today we're off the high point of the day. Today is a good session. We're virtually at the day's high. What do you think? Are we good for more?
I think today is a good session. Today is also Friday when the week ends. But the question of are we good for more is very important. That evidence is still missing from the setup on the indicators and the charts and the way the moving averages are positioned. I think what we can say is that 24,000, which has a good open interest as well. It's a round number. It's got some good port open interest. I think 42.5 lakhs was there since sometime in the morning when I checked, and maybe some more would have been added. So there is some support coming in over here. But if we don't get past 24,400 and then 24,600, 650 zones, then I think we might come back to test 24,000 and maybe next time break it. But let's see. For the timing, it does look like a market which will see a lot of supply at higher levels. So sell on rallies is the strategy on the index. But on stock side, yes, we've been exploring long positions, even trading with long biases. But, to hedge that, you either buy into put options of the Nifty or sell some out of the money call options. I think that's the way we'll approach it. On the stock side, Bajaj Auto,
Go ahead, Mitesh.
Bajaj Auto could be an interesting bet. I think, it's had a swing pivot of 97, 50, 60 in the last 4 or 5 weeks on multiple occasions. Sorry, it's trading right there. So a break about 97.70 should invite long positions. Then keep a stop at 97.20 and look for targets of 9,900. And Balkrishna Industries also trading at a support level. The structure is weak, so I would look at shorting this in case we see a break below 3090. If that happens, take a stop at 3135 and look for targets of minimum 3000. But I suspect 2930, 2940 is where the stock can head to.
All right, Bajaj Auto and Balkrishna Industries. I wonder what your thoughts on Trent would be. But for that, when we come back to you in about half an hour, just looking at the way the markets move, Nigel, it may appear as if towards this latter half of today's show itself, is there a case for some short covering? Because the FIs have, unwound nearly all the excess longs that were there. It's at an even keel. And next week, Thursday is a holiday. So it's only on Wednesday where you have both the Nifty and the Nifty Bank expiry. So let's see how that pans out.
Well, and the clients have gone net long, right?
Yep.
So that always the swing factor of around 1 lakh contracts from last Friday to this one. So I think for the Nifty Bank, that 50,750, that's the important mark. For the Nifty, we've already almost got past the resistance zone. So if we end around here, and if you have a positive close, I think the Nifty bulls will feel good getting into Monday's trading session. But the Nifty Bank, you'll want to close at around 50,700. But you want to tell us more about Trent?
Let's tell you about Trent. It's a big mover in today's trading session. Up 10% today, but over the last 6 months has doubled. Over the last 1 year has moved 4 times. And it continues to surprise on the upside. Valuation concerns, everything on one side, and you just look at the results. The street was working with a number of 3,800 crores on the top line. The company goes ahead and reports 4,100 crores, so that's a beat out there. The EBITDA comes in at around 612 crores versus expectations of 588 crores. The net profit as well, the street was working with a number of 340 crores. The company is reported around 391 odd crores as well. This does not tell you the entire picture. In a quarter which was weak for consumer sentiment, the revenue has grown 56%, EBITDA has grown 66%, and the net profit 135%. So, if you're looking at a stock which trades over 100 times and the EPS doubles every time, then maybe 1 year forward, it's trading at around 60 times itself. That's what the street is looking at. The like-for-like growth also, a high base. Q1 FY23 was a 63% base. Q1 FY24, 31%. Q1 FY25, like-for-like growth of 22% far exceeds all the other retail companies that have reported their numbers so far. They've added 6 Westside stores, 16 Zudio stores. Their total number right now on Zudio stands at 559. A few years when they started Zudio, it was just an addition to Westside. Now Westside has become the sideshow. Zudio is the main story here. Their fashion concepts registered double-digit LFL growth. Beauty, personal care, innerwear as well as footwear, which are their emerging businesses, are now 20% of their sales. Good margins out there too. Valuations, like I pointed out, 120 times 1 year forward earnings, but if it's growing so fast, we may see rebasing of the earnings expectations and perhaps the valuations hold on. The most important trigger that we'll be watching out for won't be fundamental, but will be technical, which is, does it get included into the Nifty in the next round of announcements that come by for the index inclusion itself? And if it does, then that adds another set of flows that come into Trend. So what a story this has been. I mean, the only thing that rhymes with Trent right now is trend, and it's been a trending stock.
Well, you contributed last quarter?
No, not to the Zudio thing. Maybe a little bit to Westside, but Zudio, unfortunately, the way they are placed, they don't have as many stores.
Basically, it doesn't come in your pin code.
It's not in my pin code, and pin codes around me as well.
I contributed to Westside.
You contributed to Westside,
because
right?
I went for lunch at the Dadar outlet, and I was waiting. So in the meanwhile, went and bought a couple of shares.
I'm sure Rima would have contributed a lot to Inditex, which is the Zara vertical. Out there also, there is another announcement that has come by. So they hold about 3.2 lakh shares of Inditex in the Zara joint venture. Zara guys had asked them for a buyback, whether they want to tender their shares or not. The companies announced that they would tender about 1.5 lakh shares at a price of 7,500 rupees. So basically, through this tendering, they will get additional 105 crores as well. So there you have those graphics up for you. They will tender 1.4 lakh shares of Inditex Trent, which is an associate company, for about 7,500 rupees per share. They held about 3 lakh shares. So needs to know what happens to their stake in the joint venture. But as of now, 105 crores additional coming to them with the growth that the company has been posting. Quite good.
And Trent doesn't sell any other brand clothes, right?
No,
it's only their own. They don't even distribute nothing.
Yeah, because it's not as margin accretive to sell other brands.
So that explains their very high margins.
Supplying, sourcing, etc. And the only difference between Trent and all the other retailers, if I had to sum it up in one line, would be that all the other retailers sell brands that become stores, whereas Trent sells from stores that itself become brands. So, instead of buying a Reebok branded thing from a Reebok store, you buy something from Westside. So you think of stores and not just the brand, and then what you bought from becomes the brand.
Okay, let's ask Gurmeet Chadha. Gurmeet, everyone likes trend, but everyone's waiting for an attractive entry opportunity which doesn't seem to come. This is, a stock which just keeps climbing higher and higher. Current levels, what do you do?
No, I think this one stock has actually defied gravity of valuations, I would say. But also, I think the business performance has been very solid. I was looking at some very interesting stats. If you see, obviously it started off, as Mangalam said, inside that Star Bazaar, right? And at some point of time, it was named Zudio. Today, for example, it's selling almost 90 T-shirts every minute and, almost 20 pairs of jeans every hour. That's some phenomenal number. The brand itself has now grown to upwards of 7,000 crores and it defied whatever even the market was expecting. So somehow seems to just keep, and this is when, we had a heat wave last quarter. We saw the number of Aditya Birla Fashion and other, lifestyle brands, including Bata, etc., although not strictly comparable, creating that impact of last quarter. So I think it's a phenomenal one. But as I said, I agree with you. Any decent correction, the stock is almost more than 100% up already this year YTD, despite valuations being very stretched. I think one category I'm watching out is that while it continues to do well across fashion formats, I think there are a lot of emerging categories like beauty, etc. now, which are now accounting for 20% of the top line. So I think if they can diversify a little more, I think that's when you can start justifying a little bit high valuations, and probably some news of inclusion in Nifty is also, helping its cause.
Right. Gurmeet, what do you think of Ola, the listing today?
As I said, I think here you have to be a little more patient because these new age businesses require very different lens. I maintained this when Zomato came, when a lot of other new age businesses came. I think for it to really get into big numbers, I think you should now start looking at, can it multiply the volumes by 5-6 times? And that's when, some kind of, earning visibility would come. Also, the local ecosystem, right? So, for example, in China, if you see, cattle is 50% battery market share. Even Tesla takes battery from cattle. Today, now GM has signed, right? So, the local EV system in terms of the fuel cell and other needs to be, developed. And it's not just, the electric mobility alone. And I would want to see one full warranty cycle, playing out from the vehicles launched from 21 onwards. And one edge a TVS iQube or a Bajaj Chetak has, if you see TVS iQube is now clocking 2 lakh units a year. Ola is upwards of 3 lakh. Chetak is now also touching about 1.2, 1.3 lakh units. Is that their ability to generate cash flows and deploy here? Ola is a pure play EV. So I think the traditional guys, in my view, with the distribution reach and the cash flows they have, in my view, have a slight advantage over Ola.
The reason why I asked you about Ola and the new age company is because I remember when Zomato listed and there were a lot of other new age companies listing as well, it said that the best way to play this theme is via to have a portfolio of stocks and that hope that some of them actually stand out right, because the business is evolving as the investors are when they look at these businesses. So does Ola fit that little portfolio of new age stocks that you are looking to build?
May not be immediately. I think we got lucky with Zomato. We have Policy Bazaar, which I consider. In fact, if you ask me, Jio is as new age as anyone in terms of Jio Financial and eventual listing of Jio as and when it happens. And we are looking at some of the other names also, but not yet. As I said, I would probably wait for a few quarters and see if this number picks up. So if you see the overall EV sales, even in scooter segment and bike segment, is still less than 10%. So I think the adoption, to me, is the key, and the local ecosystem development is the key.
Gurmeet, do stay on. We just want to quickly get chatting with the management of Info Edge. Now, Info Edge stock price is up close to about 3.5%. The company's top line growth has improved. Revenues on a quarter-on-quarter basis are up 5.2%. This is the highest growth rate that we've seen in the last 8 quarters. That's 2 years. And on a year-on-year basis, the company's revenue growth stands at 9.5%, and standalone billings too have gone up by 10.8%, which suggests that perhaps this 9, 10, 11% kind of revenue growth will sustain in the subsequent quarters. We have with us the management joining in to talk more about how the individual verticals have also fared. Margins, though, remember, have declined a bit on a sequential basis on account of higher ad spends on account of IPL. Hitesh Oberoi, CEO and MD of InfoEdge, is now with us on the show. Hitesh, afternoon. Thank you very much for joining in. Good quarter. There is a recovery seen in your main core business, Naukri, and even the other businesses are doing well. Your cash losses from non-recruitment business have also come down on a year-on-year basis. What can you guide for Q2, Q3, Q4? What is it that you're seeing on the ground?
You're absolutely right. I'm pretty happy with the performance last quarter. Our non-recruitment businesses particularly did very well. So we were able to reduce our cash losses. Growth was also reasonably high. We were able to grow most of them in the mid-teens or more. In the case of the Naukri business, which is our main business and which generates all our EBITDA, growth is slowly coming back. The worst is perhaps behind us. IT hiring, which was very slow for about 5 or 6 quarters, it's slowly beginning to pick up. Some green shoots there. April and May were actually very good, but perhaps there was some uncertainty around the elections in June, which resulted in a slow quarter towards the end. But our Jobs Peak Index, which we publish every month, which talks about how job listings, etc., are doing on the platform, was up in July. So fingers crossed, and let's see how things play out going forward. It will be hard for me to say what will happen next quarter, but clearly we're targeting more growth, higher growth than Q1 in next quarter.
So Q2 growth should be better than Q1. Your cash losses from non-recruitment business are down to 16.5%, down 73% on a year-on-year basis. What are you targeting here, say by the end of FY25, Q4?
We have 3 non-recruitment businesses in our operating portfolio. There's Shiksha, there's Jeevansathi, and there is 99 Acres. Jeevansathi had a particularly good quarter. We were able to get it to near break-even. And this business was losing about 30 crores a quarter 2 years ago. From there to almost breaking even. It's been a very good performance in the matrimony business, and we are hoping to keep it at break-even levels going forward. In Shiksha, growth was very strong, and Shiksha now generates a profit. It generates cash on a quarterly basis, and we are hoping that we can grow it, continue to grow it at least 18-20% going forward. 99 Acres also, we have managed to reduce our burn significantly over the last 18 months. It still loses a little bit of money, but we are growing quarter on quarter. Our traffic share is growing. The usage of the platform is growing. The real estate market continues to be buoyant. Of course, in this business also, we saw some uncertainty in the month of June. Perhaps it had to do something with the elections. But the real estate market continues to be reasonably strong, and we're hoping that growth will, 99 Acres will also grow faster going forward. Let's see, fingers crossed.
Can you turn cash profit from your non-recruitment business by the end of, say, 3 quarters? Is that possible?
Well, I mean, we would want that to happen, but whether we'll be able to make a profit or not will also depend on how aggressively we want to invest in these verticals going forward. Clearly, like I said, we will target break-even in Jeevansathi. We will target to make a profit in Shiksha. But in 99 Acres, a lot will also depend on competition and competitive intensity. And if we see an opportunity, we will not shy away from investing more in the business. And if that means that profitability gets delayed, I mean, that's so be it.
All right, so you are looking to invest in a lot of these businesses, etc. Hitesh, just before we got to you, we were talking about some of these new age companies as well. Zomato was one of those conversations, one of those stocks that came up in the conversation. I'm looking at your market cap. Your holding in Zomato is now nearly 1/3 of your market cap. With the kind of investments that you've lined up for all the other businesses, etc., and the kind of surge that we've seen in Zomato, does it not tempt you to maybe take some money off the table in Zomato, use that to fund these investments? Is that on the cards?
Well, all I can say is if we had taken our money off the table 2 years ago, 3 years ago, 5 years ago, and we've had this discussion several times, then maybe it would not have been such a high percentage of our market cap, right? Because Zomato has, sort of surprised everybody. They have executed to near perfection, and they have a huge opportunity in front of them. And we believe in the management team. They are clear leaders in the markets they operate. So why sell something which is doing so well for you? But having said so, ultimately the board decides, And whatever the board decides is what we will do. But, we don't want Zomato to be 1/3 of our market cap or 30% of our market cap or whatever. We would want to grow the operating businesses much faster. It's not that we want Zomato to go down, but we want the operating business to grow faster so that they can become a large part of our market cap.
No, the reason why I ask this is I'm not saying that you sell entirely and exit and don't look at the upside, etc. But as a proportion of your market cap, it has continuously increased because of the outperformance that it has shown, and because you don't want it to be that big a proportion of your overall market cap, it may tempt you to take some percentage off every once in a while and use that to grow the operating profit of all your other businesses as well.
The truth is that we are sitting on 4,500 crores of cash, or close to that number. And the Naukri business generates about 1,200 crores of EBITDA every year, right? And our other businesses are now close to breaking even. And like you said, hopefully they will start turning EBITDA positive soon as well. So, unless and until we find good use of the cash, there's no point in sort of selling Zomato, which is executing well anyway.
Hitesh, many more questions, but out of time now. We look forward to another conversation. Thank you very much for joining in. That's Info Edge for you. Perhaps the worst is behind Naukri. The non-recruitment business is also growing very well. And for now, they're going to hold on to that golden goose, the goose which is laying golden eggs for them, that's Zomato. The stock moved up post numbers. It's currently up close to about 4%.
Right. I'm not sure whether we still have Gurmeet with us. Gurmeet, you heard the management of Info Edge. Things seem to be turning around for them. They are generating cash in their core business. Other businesses on the verge of breaking even. Would you look at this as an opportunity?
No, I think the numbers are pretty heartening. I think especially Naukri showing traction and losses getting contained in Jeevansathi and other businesses getting close to break even. I think that's heartening. You made that point with them on Zomato. I think their acquisition cost was 1.17 rupees. And I think the stake today is almost 15,000 crores. It's fantastic wealth creation. So this is also one way of playing, let's say, a Zomato and a policy bazaar, if you want to, which is the holding company play and then, the startup play. And then you have I think I'm pretty gung-ho on Naukri with the focus the budget also has on job creation and, the skill development. Because, as we grow, we need to provide for that. So if they can demonstrate traction, so a lot of the schemes like using the CSR money for internship, a lot of focus of the government on formal job creation. This recruitment, vertical could be really in focus. It's just that in this market, everything is so, high on valuation that you got to probably play the waiting game. So I would probably wait for some corrections to get into it if I get any. But yeah, when it was some 5,000, I think it was really a very juicy price level to enter.
Chole Bhature comes via Zomato, or it's made at home, or what is it? Which is a special outlet, Gurmeet? It's long due.
Always have it fresh, Nigel. Prefer going in person. It becomes too soggy.
I believe you're coming for a CNBC Aavas show towards the end of this month. So three of us, you have three people who are waiting, and looking forward to that, Gurmeet.
100%.
Yeah, I think Gurmeet's new tagline is that don't talk about Ola, tell me about Chola.
Thanks a lot, Gurmeet. Wishing you a good weekend ahead, and Mangalam's given you the tagline as well. So we look forward to meeting up with you towards the end of this month as well, and the Chole Bhature. All right, well, it's limited to a short break. You come back, we'll get chatting with Tushar Pradhan on the other side. Stay with us.
Show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Assuming a normal monsoon and taking into account the 4.9% inflation print which has already come out so far as Q1 is concerned, CPI inflation for the current financial year, that is 2024-25, is projected at 4.5%, with Q2 at 4.4%, Q3 at 4.7%, and Q4 at 4.3%. CPI inflation for the first quarter of next financial year, that is
Welcome back. Well, we're keeping an eye on the headline index, and the Nifty is trading in that very, very close to that resistance area of around 24,400. The broader markets are having a big party actually. Pull up the intraday chart of DCW. The stock is up 13% as we speak. Reliance Infra as well, in the stock a few days ago had corrected close from around the 220 mark all the way to around 190 rupees. That one's moving on very, very large volume. So these are some of the top volume movers. Even HCC has resumed its uptrend, and majority of that 3% move that we're seeing on HCC has come, in fact, in the last few minutes. Pull up Reliance Infra as well, stock at the high point of the day. So plenty of movers. KFIN, the stock is up 15% now. One of those, financialization themes. Big up move is what we're seeing on that one. Tushar Pradhan, Director at Hexagon Partners, joins us on the show. Hi Tushar, good afternoon and good to see you in. How are you feeling about the markets? At the start of this week, there was that scare that everyone got. People are talking about, we have seen this before and this is the start of something. Till now, at least it hasn't played out. What's your guess from here on? We go through a bit of a time-wise correction, or do you believe we could be bracing for a sharp price-wise correction as well?
Yeah, so many questions in that one question. So I'll try and attempt, coming to some view on what I have looked at in the past and how things are looking right now. I think 2-3 things need to be clarified. You have to understand that the India market currently is going on a lot of liquidity, and which is domestic liquidity. While the international liquidity does cause a lot of volatility in between, you have to understand that this domestic flow continues to hold the market up no matter what. Now, what we actually saw last week, or even just this week as we speak, is due to the fact that the interest rates in Japan caused a flutter in the carry trade, and the bigger impact we saw in the US markets, where a lot of this carry trade was actually executed. India, being a very small part of the overall carry trade as a percentage in any case, should not have been affected. But the sentiment is what got us as well. And that's what happens to markets. Now, if you look at the unwind which has happened in the US post the interest rate increase in Japan, that is more or less over. I think 2/3 of the carry trade has already been reversed and the losses taken. And as we've seen in the last couple of days, the US markets have rallied very smartly. As a result, I think the India correction, or whatever it was generally just a response to what was happening globally. There wasn't anything locally to suggest that there is a very sharp correction due. The credit policy came and went. There was no change in terms of the view. There was some hint of a hawkish nature to the statements, But I think that was very rational, because if you're talking about 7.3% GDP growth, then there is no reason for you to cut rates at this time. And on top of that, if you are having an issue in terms of collecting deposits as it is in the banking system, then interest rates cuts are not going to do any of that for you in any case. So I think the case being done, the event having passed by, I still don't think that there is any reason significantly to expect a correction just because we think the markets have run up. I think that's the view that I have right now.
All right, so you're not expecting a correction just because the markets have run up. We'll speak about valuations in just a bit, Tushar. Meanwhile, while we were talking, we also had the numbers of Berger Paints flash by at the bottom of your screen. Looked not particularly bad. In fact, there was a 2% revenue growth that compares with other players. Asian Paints had a 2% revenue decline. Kansai Nerolac had a 1% revenue decline as well. So in that, a positive growth is something that the street likes. Yes, the EBITDA did decline. But remember, at the same time, last quarter was the best ever EBITDA margin that the company had recorded. So they had an element of high base that after there was some price cuts that the company took and also increased their spends on advertising. Ever since then, the industry has announced price hikes to the tune of 2 to 3%, so that should hold margins going forward. The most important internal this time around has been, while the volume growth has been double digit, the market share that the company has seen in terms of an improvement is the highest that they've ever seen in this quarter itself. So that should assuage some concerns of market share loss for number 2, number 3, number 4 players in the event of a big competition coming in from the likes of Birlas as well as JSW. So Asian Berger Paints, as a result of which, currently has moved higher despite a decline in the EBITDA and profits. A 2% revenue growth is better than the industry, and they've gained market share the most that they have in this quarter itself. Tushar, your thoughts on some of these consumer names? While we've seen them rally over the last month or so, from a year-to-date perspective or for the last 2 years, they haven't seen much in terms of a move. There's been more of a time correction, valuation correction as well. Do you like any of these staples ahead of expected recovery in rural consumption?
So I think the question is, again, I would break it up in 2 parts. Do I like those companies? I absolutely love them. Simply for the fact that you have an economy like India, where it is just starting to, reach this kind of distribution for consumption of, these goods and services at a level at which, it's going to explode from here on. So do I like the longer term prospects of these companies being in the business? Absolutely, yes. But as you mentioned, in the last 2 years, most of these companies have been trading on an average between 50, 60, 70 times. Take a pick. In anticipation of this continued growth that we will see. So on one side, you have to understand that the growth will continue, no matter what we do about it. Sentiment will drive what would you like to pay for them. And typically, a good company may not make you money in the stock markets. While the reverse may not absolutely be true, sometimes it is true. It is all about the valuation that you think is attractive given the potential, rather than it being a good company, rather than it being in a good sector, rather than it being a sector which is favored because of tremendous order flow, rather than being in a sector which is absolutely solid in terms of how the execution will come in the next 2, 3, 4 years. The key question is, what price do you buy them? So I think these are 2 different parts of the question I will answer. So I think one of the observations your question itself had was that, is there a time correction that we have seen? So yes, clearly. So in spite of pretty significant margin improvement on the back of some price increases, these companies have taken slightly better environment in terms of rural demand, which we should expect to start kicking in some time from now, and the overall demographic situation not having changed. So in the long term, I don't think you're going to miss something along the way. But what is the cost of waiting? The opportunity cost of being in good companies, quote unquote, and then waiting for them to kind of kick in because their overvaluation will then correct over a certain period of time by time value is a difficult prospect to keep. So I would think that as a portfolio allocator, and if you're building a portfolio, I think you should definitely keep some defensive. And then these are the stocks which start doing well the minute there is crisis in the markets elsewhere, as we've seen. So it's a good, soft kind of defensive play to keep in a portfolio. But to keep thinking that, is that going to be the driver for my return in the next few years? I think the valuations are telling you another story. So that would be my take.
Do you want to tell us in terms of sectoral allocation in your portfolio? What would you recommend now? What is it that you're comfortable buying?
So I've been saying for some time that manufacturing and industrials are areas which are of a lot of interest to me. But again, here the spectrum of valuation is pretty wide. So when you look at the typical MNC industrials, they are again in your 70s, 80s stratospheric Ps. If you look at even middle-level engineering companies, manufacturing domestic, they're still fairly expensive compared to their longer-term averages. So nothing really jumps up at you. But there is a fairly largest number of companies, which I would call mid-caps, which actually are in a supply chain going into the OEMs, or I would call the larger industrial companies. And I think that is where the opportunity continues to be, because it is a little bit like the auto story. So you can have the OEMs, which will have a certain rate of increase, but the auto ancillary companies will actually have a greater party, if you wish, if you can identify one or two which have not caught the valuation bug, and you can play that like there. So I think infrastructure, manufacturing, industrials would be very much part of my favorite list as of now. But again, within infrastructure, I think there is an entire supply chain, and I've been through that cycle once to know that there are companies which supply the infrastructural companies, there are infrastructure companies, and there are infrastructure financing companies. So I think one can take a choice across there. The growth is pretty solid for the next 2 or 3 years there. I think across the spectrum, you will get some opportunities both in the services area. So I think technology is something that we should keep looking at. And not because of what happens to the US economy per se, but I think within there are some select plays which bring out some nuance of the technology play overall. So I think that might be something to look at. But again, valuations don't support you largely on an average there. So again, we'll be fairly circumspect there as well. I think the chemicals, specialty chemicals and the pharma space, I think again gives us a fair bit of opportunity to look at. Within that, I would still look at chemicals and specialty chemicals a lot more closely. I think the overall trends where the crude oil prices are largely more or less in control. We are not expecting a huge global economic uplift to bring oil prices up. So you have raw material prices which will remain low. And then the demand for specialty chemicals and derivatives will continue to be very strong, especially for India. Including the China Plus story, China Plus One. And I think that is where some of the attractiveness will continue to be. So I hope I've given you a fair idea of what kind of sectors we like right now.
Good speaking to you as always, Tushar. Appreciate you joining in and giving us your reading of the markets. Wishing you a good weekend ahead. We look forward to having a chat with you in the coming weeks. But let's focus on the stock of the day. Ola Electric, well, it's made its debut on the exchanges today. The stock listed at a premium at around 76 rupees, but from there on, the stock is flying away. Sonia joins us to fill us in with a quick analysis on that one. Sonia.
Well, thanks a lot for that. It has indeed been a very strong listing for Ola Electric. Debuted at 76 rupees. Now it's 20% higher. As we know, Ola Electric is India's largest electric two-wheeler manufacturer and has now hit Dalal Street, which means it is India's only pure-play electric two-wheeler manufacturer to be listed on the exchanges. Now, Ola has the highest market share currently in the space. Its market share as of June 2024 is 46.2%, which is much higher than the second best player, which is TVS Motor, that enjoys a market share at 17%. If you look at the financials as well, Ola Electric has seen a good growth in the last couple of years on the top line. The revenues have grown 88.4% in FY24, standing at a little over 5,240 crores. The company is yet to make a profit or a break-even, so the company has reported losses for the last 3 years. Specifically in FY24, the losses have been to the tune of 1,580 crores compared to 1,472 crores in FY23. Now, with this IPO and listing, the company intends to use 1,600 crores of the net proceeds for investment into research and development purposes. It's looking to expand its product portfolio, move from scooters to electric bikes as well, and it may unveil a plan of its electric bike on the 15th of August. The bigger story here is this, that the electric two-wheeler industry in India is very underpenetrated at the moment. Barely 5% of the two-wheeler market is electric currently, so the scope of growth is large. Even if you look at it, the two-wheeler industry growth-wise is expected to grow at a compounded rate of 11% over the next couple of years and expected to hit a target of $35 to $45 billion by FY28. The management is also focusing on cost cutting. In the recent interviews, Bhavish Agarwal has talked about how they are producing lithium cells in-house in order to cut their costs, and he mentioned that by manufacturing these cells internally, the company aims to eliminate 25 to 30% margin charged by external suppliers for lithium cells. So good listing coming through. Let's see how the next couple of days pan out.
Okay, day one has been exceedingly strong, 20% up on Ola Electric. Earlier this week, we also had a chat with the founder, Bhavish Agarwal, who spoke to Ritu Singh on his plans for the company and the state of EV penetration in India.
This Ola Electric story is a story of India's future. We are building India's future supply chains, India's manufacturing, India's future products, and our ambition and mission is to really build India's leadership on the global stage. So the fact that the street has liked our story and liked what we do, like the price, is a very strong positive. Price will move up and down. I'm learning the ways of the market. And we will keep doing our work. We'll keep focusing on building good business, building strong products, good products, building a sustainable business also, and hopefully creating wealth for investors in the long term. The broader story that's playing out here is the penetration story of electrification of EVs in India. 3 years ago, when we started, almost to the day, EV penetration in two-wheelers was almost zero. Now it is 6-7% overall, and within scooters, where all the action has been over the last 2 years, it is 15+%. And the scooter penetration month on month is only going up. 2 years ago, the government used to give 60,000 rupees in FAME subsidy. Now they give 10,000. And the industry, not just us, but the whole industry has adjusted very well. They've rejigged the cost structures, and the industry continues to grow with reduced FAME. I believe this is the way of the future. Slowly the incentives will taper down as companies become more stronger in their supply chain and their cost structures to be able to deliver profit margins with probably no subsidies in the future.
Stock of the day there, Ola Electric locked upper circuit 20%. Slip a short break, come back, we'll get you an insight into dealing room chatter, and also we'll get you some trading picks. Stay with us.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. You know, I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, you know, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Welcome back. Well, one stock that's got wings in the last few minutes is ABFRL, Aditya Birla Fashion and Retail. Stock is up 3%, 1.5% of that move coming in the last 6 to around 8 minutes, or a big spike up on that one. But as promised, Nimesh is standing by to help us out with what's he sensing in D-Street Chatter. Well, Nimesh, good day for the market. All's well that ends well, and that seems to be the case. Tell us what you're picking up.
Oh, absolutely, Nigel. You know, just 2 days of consolidation and we have bounced back pretty sharply in today's market, largely led by auto and IT names, but there I believe it's more of short covering as well because of the last 2 days of bit of correction in those sector stocks. So in terms of flows, again, it's a mixed day of trade. I've been saying this for a while now that it's even students between FIs and DIs in terms of flows and all. While the bigger indices are up 1%, the breadth seems to be quite mixed, and there is selling as well in some select stocks, especially the cash market stocks. So that trend of selling in the cash market stocks continue for the second day running. A word on Nifty Bank. It's been in the green today, but today's rally in the Nifty Bank is led by the PSU Bank stocks post the RBI policy. But in general, the feedback is that while we've seen a pullback rally, there is selling pressure in the broader market stocks from larger FIs.
All right.
What about individual stocks, Nimesh? What have you picked up from dealing rooms?
Well, a lot of mid-cap names are buzzing in trade today. So the first name is Jubilant Ingrevia. A big move in that stock, up several % in today's market. But off late in general, the stock has been buzzing as well. Big volumes as well. I understand some HNI investors are active as well. And the city is anticipating a large order win for the company from a global giant very soon. So that's the buzz as far as Jubilant Ingrevia is concerned. The second name is Updata Services. Again, a mid-cap name, but buzzing in trade today, good volumes as well. I understand a leading HNI investor is quite active buyer, and hence a big move in that stock in today's market. The third stock is Orient Cement. This is interesting. There was a lot of interest in the Birla Group stocks of late in the cement names, but in the last 2 days, the stock has shaved off nearly 10% and under pressure in today's market as well. But in general, the flows have been quite strong from larger HNIs, and the street is anticipating a corporate development in Orient Cement very soon. So watch out for the potential deal in this company very soon. And the last is Power Grid. Within the PSU name, this is one stock which stands out today, largely on back of buy flows. So expect high delivery volumes, and looks like some larger FIs are again looking to buy Power Grid at these levels.
All right. Thanks a lot for that, Nimesh. Let's get in the tomorrow trade or the Monday trade now. Mitesh Shakkar joins in. Mitesh, it's a Friday afternoon. What would you buy or sell today for a reverse trade on Monday?
Mangalam, Coromandel, I think, is showing very good strength and is now at the day's high. So that's a buy with a stop at 1664 for targets of 1750, and a BKST and ONGC with a stop at about 329.5 for a target of 339.
Thank you very much for that. Some of these PSUs are seeing some buying. So NTPC, Coal India, even State Bank of India. PSUs, these are stocks which are up 1.5%, 2%, and some buying has emerged in the last 10 minutes. Wockhards' net loss has narrowed very significantly, 14 crore of a net loss in the current quarter. Revenues are up 15%, and the stock is now up 4%, moving up very sharply. Let's talk about Cochin Shipyard. That's a stock which is up nearly 3%, came out with their Q1 numbers, good set of numbers, further fortifying that 250% gain that it's seen since the beginning of the year. Upasana joins in now with the analysis on these numbers. Upasana.
Thanks so much for that. Well, the companies reported strong set of numbers and the beat was largely driven by companies' ship repair segment. Now coming to revenues, revenues stood at 771 crores with an uptick of 62% on a YoY basis. EBITDA also expanded 1.2x times at 177 crores, leading to EBITDA margin expansion from 17% to as high as 23%. PAT stood at 174 crores with an uptick of 76% on a YoY basis. Now coming to company's key segment, that is shipbuilding segment, which is nearly 68% of the overall sales, recorded a revenue growth of almost 62% on a YoY basis, but margins in this segment dipped around 180 basis points at 17.5%. Now, ship repair segment, which is nearly 32% of the overall sales of the company, is where the growth lies. The revenue growth was about 63% on a YoY basis and margins sharply expanded from 24% to as high as 43%. So all in all, strong set of numbers coming in from Cochin Shipyard in its Q1 FY25.
All right. Thanks a lot for that, Upasna. That's about Cochin Shipyard. We also have Hemang Jani joining us now. Hemang, you've heard about Cochin Shipyard. There have been a bunch of stocks which have been in the news today, right from Ola to Trent to Cochin Shipyard now. What is it that stood out in terms of a stock in trade today for you?
Clearly, Trent is the one that really stood out because of the way the company is delivering for almost now 2 years, and more so the way they've ranked the retail formats, the categories. I think every time there is a sense that the company is expensive and at this price, whether it makes sense, but the way they're delivering both in terms of top line growth, the margin, the category addition, I think it has surprised everybody. So I think that is something that surely stood out for us.
Everyone is also how strong Ola Electric's first day has been, 20% gain on that. There is no doubt there is a lot of headroom for EV penetration to go up from current levels of just about 5.5% of the overall two-wheeler volumes. But there is still a question mark on who will eventually do well in this race. Ola Electric has a first mover advantage, but even the other companies like Bajaj Auto, TVS Motors are making strides, making investments in this particular to grow this portfolio. Your thoughts on Ola Electric after this 20% up move? Are you surprised with the strength that it's seen? And how would you play this two-wheeler, EV portfolio?
Yeah, so the response to the IPO was not that great, but I think the listing was surely blockbuster. So typically when we look for any investment opportunity or the theme on which we are working, we tend to avoid these kind of newer companies where the market cap is as high as about 40,000 crore and when there is a longer term story. Instead, I think it makes more sense to look at some of the incumbents like TVS, which is a 40% of the scooter portfolio overall, and very decent product offering in terms of EV also. So I think rather than paying a 40,000 crore and such high valuations without any visibility or profitability for next 2-3 years, it makes more sense to go with something like TVS or a Bajaj Auto, which have a very stable and better kind of a product offering in the same category.
All right, Hemang, we need to ask you a few more questions for the time being. We'll take that mandatory break. We'll come back. We'll do some further analysis with Hemang, who's waiting by. Stay with us.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. Markets holding steady. 7 minutes to go. We have Hemang Jani who's still with us. Hemang, I wanted to ask you about Orient Cement. Nimesh just told us that the street is anticipating that there's going to be some kind of corporate development. The stock is corrected 10%, by the way, from the recent peak. The street's sniffing a deal on the cards. Mr. Ketrabal tells us he doesn't know about it. What's your take at around 330 rupees? The asset is good, mind you. Well, what's your take?
Yeah, so the asset is good, 8.5 million ton capacity, about 5 odd million ton clinker. And now that both the big brothers are out on a buying spree, Adani and Mr. Birla, at some point people would start talking about possibility of an M&A play. The timing is something that you really can't put your handle on. But I do think that, somebody who has a, let's say, 6 months, 12-month kind of an horizon could look at it as an M&A play, as an event or a special situation kind of idea. It's not cheap, by the way. It's about $100 per ton valuation at this point of time. And for an 8.5 million ton capacity, that's a fair value. So not much of juice, but given the way the deals are happening, where they tend to pay about 25-30% or maybe more premium. If that happens, then there can be some sort of a re-rating. 30-40% upside is possible.
All right, 30-40% upside is possible if there is any deal, etc. I just wanted your thoughts on Berger as well, because Berger reported numbers just an hour ago, 2% revenue growth. The EBITDA declined on account of a couple of factors. The company in the same quarter last year had a very good base, so beating that would be difficult. At the same time, they've spent a little more on advertising, they've reduced prices, etc. as well. So the good part is that they've gained a lot of market share, and positive revenue growth is actually better than what, say, someone like an Asian Paints or Kansai Nerolac have reported this quarter as well. The stock, understandably, up around 2.5%. Your thoughts on Berger and the paint industry?
So Mangalam, numbers were okayish, more or less in line. At least on the revenue front, there's a small surprise. OPM a bit softer. Typically, these companies have kind of underperformed the broader market or the indices because of the entry of a larger player like Grasim, and also the fact that on the urban side, the volume growth has not been up to the mark. So both Asian Paints and Berger, we would avoid. If we want to play the consumption story, we would go with something where there is a clear visibility of growth, like you have some of the retail players, Tata Consumer, Britannia delivered a 7% kind of a volume growth. So I think we should go with some of those companies.
Right, speaking about some of those retail companies as well, you spoke about some of the staples. Trent, we spoke about just moments ago. AB Fashion and Retail, the stock is an F&O ban, so it'll be very interesting to see what happens to that one. I'd done a piece, Trent versus ABFRL. It was about 3.5-4 years ago, where both of them were at the same market cap. Now, Trent has moved around 7.5 times since then. ABFRL, of course, has moved about 60-70 rupees in the last few months or so. but still that valuation gap between the two is only widening. So maybe some on the street are looking at that narrowing. The stock is an F&O band, so impact cost would be a lot higher as well. But do you track ABFRL? Have you looked at these numbers? What do you think one should look at in terms of future for ABFRL?
So, Manglam, ABFRL continues to look attractive, but when it comes to delivery and performance, somehow it is lagged behind, and you don't see any meaningful, catch up in terms of performance, particularly when you compare it with something like Trend. So while it looks great in terms of pedigree, in terms of the formats and the valuations, I would still prefer a Trend because you can clearly see how they are able to outperform, quarter-on-quarter basis.
All right, there it is, a 45% up move in this year itself for ABFRL. Compare that to Trent, which is a 100% up move. And if you look at the last 2 years, Trent is up nearly 400% and ABFRL by and large flattish itself. But let's talk about another company that reported an inline set of performance. That was Bharat Forge. Their defense revenue surged about 150%. Margins expanded as well. So non-auto parts of the business doing extremely well, and that explains why the stock is high by 2% as well. We spoke with Baba Kalyani, who's the chairman and managing director of the company. Let's hear out the excerpts of that conversation, and then we ask Hemang about his view here.
Expand our Indian manufacturing. That is the whole idea of the fundraise. We believe there is a huge opportunity to increase Indian manufacturing. So we want to increase our manufacturing footprint in different states in India. There's a lot of opportunity. There's a lot of growth potential within the country, and a lot of, let's say, business that will come from places like Europe and North America into India. So we need to create much more capacity, and a lot of this is in different kind of products. The CV business by itself is a little slow because of all the headwinds that you see in Europe and beginning to see in the United States. But overall, I think next 2 years, the CV business will bounce back because that is when the emission change will happen, and there'll be a lot of pre-buy. So we expect next year and year after next to be a boom year in this business. I think you will see the subsidiaries to be profitable next year. We will continue to make progress, so you will see continued progress quarter on quarter on these subsidiaries.
All right, Hemang, quickly, your view on all these names, defense names, Bharat Forge in particular, and anything that you like from there?
So yes, from a defense perspective, Bharat Forge could be an interesting, story because of the way the company will shape up the, business model in terms of different products. So next 2 years are going to be extremely good, but on the auto components part, I think the triggers are lacking. So if I want to play pure defense, I think Bharat Electronics remains one of the better plays because of the way they are delivering and the overall product portfolio that they have. But I'm not too bullish on the entire, railways and defense because that entire theme has played out too much. Now you have to be selective and you have to time your entry in a better way.
And that point, thank you so much, Hemang, for joining in. Wish you a good weekend. You've thrown light on a lot of these stocks. In the dying minutes of trade, we had Insecticide India numbers coming up for you. Stock up 8% after what seems like a 70% jump in profit. May have been led by EBITDA margin expansion as well because the revenue has grown just about 2.5%. Net profit up 70%. The stock up nearly 8%. It's been a good week, especially from where we started, how it appeared at the start of the week. We're ending with just about minor losses. So we thought that, this could be a very rough week for the bulls with the kind of handover that we got at the start of this week itself. But we bounced back pretty smartly and ending about 1.5% for the week for the Nifty and, for the Sensex as well, similar amounts. For the Nifty Bank, it has been slightly weak, so down about 1.7% for the week. The last day of the week was pretty strong. 250 points on the Nifty, 800 points on the Sensex. Midcap's doing a tad better, along with the Nifty Bank as well, gaining about 2/3%. The top gainers today, we had Eicher Motors doing extremely well, ONGC doing extremely well as well. From the broader markets, the stock of the day, the two stocks of the day were Trent and NBCC. NBCC on that order win, Trent on the back of strong numbers that came by. On the way down, we had Alembic Pharma, which was down by about 6% as well. And then we had the stellar listing of Ola, which opened absolutely flat, but thereafter piled onto the gains and ended about 20% higher. So good end to a wobbly week. We end the week with about 1.5% lower on the Nifty and the Sensex, but that could have been much worse had the global weakness continued for the markets in the whole. With that, we wrap up on this edition of Closing Bell, but you don't go anywhere because on the other side of the short break, you have our Friday special Editors Roundtable coming up next.
To celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
The Monetary Policy Committee met on 6th, 7th and 8th August. After a detailed assessment of the evolving macroeconomic and financial conditions and the overall outlook, it decided by a majority of 4:2 members to keep the policy repo rate unchanged.
Dalal Street ends in the red for the second week in a row with key indices falling over 1%. On this week's edition of Editors Roundtable, we'll take stock of the big events of this week. We'll put the spotlight on 18 years of Interglobe Aviation, and we'll tell you why Sanjeev Goenka's big plans for the RP Sanjeev Goenka Group companies are. I am Reema Tendulkar. With me are Prashant, Nimesh, Nigel, and joining us today in the newsroom, we've got Sandeep Tandon of Quant Mutual Fund. Hi, boys. You know, there are some weeks on a stretch where nothing happens, and then in this week, everything happens. This was just one of those.
I mean, I think this was the week when market said
it's not just one way.
It's not.
It sometimes goes down also, right? And I think it also showed us that global stuff matters.
Yeah.
I mean, eventually it matters. It may not matter for long stretches of time, but it comes to a point where there can be a flare-up in volatility for a variety of reasons, and then the market pays attention. But I must say, even within this, India has been the best performer, high to low. I mean, the outperformance is there. The Teflon coating, which I keep talking about, I mean, that is very much there.
You know, a brokerage today said bulletproof. That's a new one.
Well, and you know, the market that was causing all the trouble at the start of the week was the Japanese index.
Yeah.
That was down more than 10% in a single trading session. It ended the week with a cut of only 2%.
2%.
So post that Monday, actually, it pulled back considerably. And I think the bulls felt good today after 11:30, 12 noon. Because they said, at least that market is shut. Let's get back to our own cues.
And you know, today was, Friday was very low volatility. It was such a stable and steady session. Monday to Thursday, there was so much volatility. You open up, you end down, you start lower, you end lower. But today was like steady and strong through the day.
You know, what adds to the strength of this market is the fact that, look at this, again, this month's SIP data, right? 23,000 crores of SIP money. We've been saying this, that this domestic money is what is leading to a big outperformance of the Indian equities, and we have one of the big, domestic fund manager with us joining today. Sandeep, what's been your call? I think every fund has actually raised the cash levels of late. What is your sense on the Indian markets in terms of valuations, and where do you stand in terms of cash levels within your portfolios?
See, we have only 8-9% cash in a small and mid-cap space only. Otherwise, we have largely invested. Okay. We have been slightly cautious. I think from last month, I have been talking about that employed vols of the cross-asset, cross-market will move up. And it happened. Okay. Yeah. It is very difficult to pinpoint days and exact thing how it will play out. But we were talking about how the currency vols will come into picture, and we have seen complacency in US market. So vulnerability was high and it played out. Okay. So now question comes whether this is played out well or it's the beginning of a new trend. That's what we have to watch. The way I look at from a very near-term perspective, it has played out, okay? Because if you look at the vol indices of Nikkei, it went to 70%, okay, which is maybe third or fourth highest maybe in last 30-40 years, okay? It was actually higher than COVID levels, which is very unique, which is the employed vols of the Nikkei was higher than COVID crisis. So something which indicates to me that this is a big trailer. I think something is still pending, okay? Something has changed, okay? And similarly, if you look at I'm trying to give you a behavior aspect of the vols data. If you look at the US market also, okay, one single day it was 65%, closer to the COVID levels, okay. We have not seen this sort of spike, and within the same day it settled, okay. The overall vol indices globally are still marginally elevated. So I like to wait and watch and see whether they'll correct significantly or something has changed. My view is that we like to remain cautious for even from a next 1 or 2 months perspective also, because something gets changed, never gets settled in few days time. So with that background, we are not preempting anything, but we still remain cautious that vols remains elevated.
I mean, as you said, this is the trailer. So I'll come to you on that. And Sandeep, by the way, he manages, of course, for the uninitiated. I don't think any of our viewers don't know Sandeep. He manages a quant mutual fund, reaching closer to that magical 1 lakh crore.
Yeah, we are
AUM.
slightly shorter of that.
And he started, and I've said this before, but he started with 500 crores in AUM in 2020, right? March, I think, 2020. So it's one of the fastest growing mutual funds.
In fact, equity AUM was 27 crores.
27 crores, and we're now talking about
96,000.
96,000 crores. So more from Sandeep, but if you missed the market action, let me just quickly recap things here. So as I said, right, I mean, global stuff came to the fore. It mattered. It started, of course, with, I mean, you can always go back and back, say it started sometime in the middle of last week because, I mean, the indications were there from the Japanese market, etc. But it really started, of course, with the labor market data last Friday. You had sort of, Six Sigma moves, big, huge moves that day. And then, of course, the market here started correcting. And, of course, it was also the yen carry trade unwind, which the yen had a 20-handle move. That is 162 to 142. So that is, it's only happened, I think, 5 times in the last 20 years with interest rate, with interest rate differential of 5%. It's only, I think, happened once or twice. So really unprecedented week in that sense. By the end of the week, I mean, so this is what happened. By the end of the week, things calmed down. The initial jobless claims data came from the US. it's weekly data, but because we are sort of scratching for any thing which indicates calm or otherwise, there was outsized attention to it, and that growth scare, people kind of backed off of it. On the yen carry trade, JP Morgan put out a note this morning essentially saying that about 70% of the carry trade unwind is behind. Now, I was surprised because, I mean, what do they mean by that? That 70% is done? Are they saying yen shorts have been unwound? Or are they talking about everything else, everything combined? Because, estimates of how large the carry trade itself is kind of unknown. As I said, Nifty still outperformed. High to low, Nifty fell 4.5. S&P was down 9% at one stage. For the week, Nifty is down 1.5. Bank Nifty is down 1.7. Midcap index is down 1.2. And small cap index ended about 2% lower. So let's pick up from where you left off. This is the trailer. This is, in that sense, the first episode of volatility. You're expecting more, Sandeep.
If I look at the entire characteristic, the way it is unfolded, it looks like that we have seen first round of trailer. You have seen in yen, maybe the next round of volatility will come in dollar index. Okay,
so the dollar goes higher?
Yeah, that will go higher.
But what will cause it, in your opinion? Growth scare once again, or?
It could be combination, okay? Or let's say, because if you really go back to look at the cycles, let's be very clear, this theme of talking about yen carry trade unwinding, nobody knows. See, I've been a large player of derivative in the past. We understand that space. People create so many synthetic out of it. So it's very, very difficult to really pinpoint that 75% is unwinding. I think Bank of Japan also don't know up to what extent this misuse has happened. Okay, so the only way you can figure out through EPFR data or some of the exchange data where you give the origin of the currency. From that perspective, you can reverse calculate and get some numbers. But no way you can figure out. My sense is this number is far, far higher than the $2 trillion numbers which is there. See, today look at the global liquidity is around $190 trillion, and yen carry trade plays a very large number. So it could be as high as 30, 40, 50 trillions. Also, we are not going to rule out because it has a leverage effects, and you have to keep in mind it's not about the directional trades. People leverage, borrow through and create a synthetic out of it, and even these are largely hedged trades. Okay, nobody trades a very sizable position on the directional side. Okay, so maybe directional trade you can say you can quantify through exchanges route. It could be $2 trillion. So that could be played out. Okay, the first round obviously the pressure get will on the hedges. So they got capitulated. Now the long-term players. So if you see, let's say after recovery of USD JPY, it recovered further today 147, 148. It recovered back to 150, 150. When the second round of pressure get built, maybe that stage some of the people who have created a structure or the synthetic for a long-term perspective, they might unwound. And maybe third round they give up completely, and that will be the bottom. Okay, so I think it's a premature to conclude that this has been settled down. 70. No, it doesn't look like. I think it could have more ripple effect will come.
Your portfolio is reflecting some of, what your view is, right?
Yeah.
You've moved largely into more safer, defensive kind of names.
Correct.
So just, so what kind of sectors are we talking?
Since we have been cautious, we always said that easy phase of bull run is over. Yes, we are in bull run, but decisive phase. But within decisive, if you can quantify these phases well, so we have moved towards from illiquid to liquid portfolio, from high beta to very low beta portfolio. So a large portfolio is now towards consumption, pharma, insurance, hospitality in general, hotels also, if you want to talk about. Then we have built a very large exposure. Still, we have a large exposure in energy because courtesy Reliance being the largest one. So that remains skewed structure. Insurance is something which you rebuild further. So I think our
LIC is a large
LIC is also a large holding. So 70% of our portfolio in the entire is about these sectors only. So it's a very, very conservative approach. We are not in a mindset to raise very high level of cash. If call goes wrong, we don't want to get stuck with that approach. So better to participate, better to underperform rather than sitting on very large cash. So we are not taking that call, but it's a very defensive portfolio in today's context.
Let's also quickly recap the big headlines from this week. It was a very news-heavy week. So starting with the RBI policy, on expected lines, the central bank kept rates on hold for the 9th consecutive meeting, but they did sound hawkish and they said that they will focus on headline inflation and not core inflation. So setting the record straight over there. And they also raised the caution on top-up loans being given by banks and BFCs on gold and home loans, and once again said that deposit growth is trailing loan growth. Secondly, the other one, big one, was on Friday, Ola's listing. Remember, Ola is India's largest two-wheeler EV maker with a market share of 46%. But look at the close. By the end of it, Ola Electric ended with an, up close to about 20%. Took a lot of people by surprise, considering that Ola was loss-making. So I don't think very few people would have anticipated this kind of close. And finally, we were also in the penultimate week of the earnings season, and it's been a muted Q1. So Motilal Oswal analysis is as follows. For 46 out of the Nifty 50 company, the PAT growth has been about 4%. Estimates were of 2%, so in line with estimates. For mid-cap, 69 companies in their coverage, the mid-cap earnings growth has been negative 12%, and small caps is where there has been a miss compared to estimates. So 86 companies of small cap, this is Motilal Oswal analysis, the earnings growth has declined by 4%. They were anticipating a little bit of a growth. Sandeep, you spoke about how you've raised the cash level in small and mid caps. Now, in the earnings season so far, the miss has come in largely on the small and the mid-cap universe. In your portfolio, where is it that you've seen some underperformance, where you've booked out, fearing that fundamentals are not matching up with the valuations right now?
So I think, let me answer this question first of all. See, yes, there has been miss on estimate, but the liquidity has been so meaningful. Hardly any impact on the prices. Okay, you correct 5%, next day same stock is up 10%. Okay, so you are not getting the true picture when you start looking at just purely on the valuation. That's the way we start talking about how the sentiments is around that, what is the liquidity aspect. Okay, so India liquidity, good liquidity is very large. So I think with that background, I think we remain very constructive on India on relative basis. The absolute basis we are doing reasonably well, but I think what is very interesting, the relative basis we are doing very well. At some point in time, money will come in a big way to India. Okay, today, let's say because of this carry trade unwinding, the first day people have capitulated. A lot of hedges got calculated. All the guys who came through P-note structure, they got capitulated. But from a longer term perspective, I think a lot of money is sitting on the fence, and we will see participation. So I don't think one should keep a very negative mindset even in the small cap. In fact, I'm very constructive from a longer term perspective, not from next 1 quarter perspective, but somebody has like 4-5 years, 10-year horizon. I think this is an area which should do very well, irrespective of disappointment with what we see in the recent earnings seasons.
Okay, Nimesh has got something special for us. He's talking about Indigo, and 18 years, 18th anniversary, they've announced some big programs, and what stood out for me was the frequent flyer program. Right?
Absolutely. So, Indigo 2.0 is going to be a big thing for the company. That's what they've been claiming. But, look at the last 18 years of Indigo. It's been flying high, continues to be the market leader in India. And by now, it's the second most valuable company in terms of market cap. So, Mr. Good to the wall and explain what Indigo 2.0 would mean for this company. So, as I said, it's been the market leader in India and a big market cap company as well. But company recently announced Indigo 2.0. Which means, they've put out some new strategies, which includes, they've now announced the business class offerings from November of this year. Second, they've announced easy to earn and burn loyalty points as well as loyalty programs. Third, they've announced 40 new international routes by end of this year. And fourth, they're going to upgrade their websites and mobile apps for further enhancement for experience for the customers. Now, what an analyst is saying? Analyst believes that the business class will widen the addressable market, and loyalty program is a big plus for the company. Business class will not only improve the RASK, but also improve the margins for the company going forward. And loyalty program would mean further stickiness as far as the customers are concerned. Now, the street seems to be quite excited about Indigo for a very long time. Look at the brokerage ratings and the target prices. Virtually everybody is having a buy or an overweight on Indigo. Kotak, Citi, Morgan Stanley, and JP Morgan. And the price range seems to be between 5,000 to 5,400, which means a potential another 15 to 25% upside even from current levels. Now, generally we've seen, when there's a big supply overhang on the stock underperform, but that's not been the case as far as Indigo is concerned. That shows the kind of business mode this company enjoys. Ganwal, one of the big promoter entity, they've been constant sellers in the stock in the last few years now. They've done 4 tranches of stake sales from September 2022 all the way to March 2024. They've sold stakes virtually every 5 months. In fact, now they're going to sell further because the lockup is going to end. But most interesting is, ever since the first block, when they sold in 2022, the stock has actually doubled in that particular period. Now expect a large block deal very soon, because the lockup of 5 months is going to end in the next few days. So there will be further supply. But again, the stock has been outperforming despite despite the selling. Just a word on the market cap and the valuation picture now globally. Indigo is now the second most valued company in terms of market cap, commanding a market cap of nearly $20 billion, trading at close to 20 times. Of course, Delta Airlines is the most valued company at $24 billion. The rest are Ryanair, Air China in Southeast Asia, having a market cap between 15 to $17 billion. But again, in terms of valuation, it's still quoting at 20 times. And the 2.0 means there could be further upside as far as what the brokerages are saying. So looks like the dominance of Indigo is likely to continue in years to come.
The old cliches about airlines not making money. Sandeep, you have a view? Airlines as a business?
Historically, nobody has made money. Nobody has made money. So I think we should not celebrate this thing. It's too premature.
But can't fault their execution.
No,
right?
they have done a great execution. The challenge is that the stock will get supply on a perpetuity basis. Okay, and that is the problem. Okay, both the promoters are seller. The liquidity will keep on rising. As long as Indian market has a bull run, it can be absorbed. The moment it reverses, then exit becomes very difficult in such names.
Absolutely. We'll take a quick commercial break here. We have more to cover. So we're going to see you on the other side. Stay right here.
.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%.
Free speech, and yet the need to ensure that there is moderation and there are guidelines and it is a safe space. What's been the experience on that front today? I mean, I remember you saying that whatever's happening in the world is happening on YouTube, and we have active wars currently on in the world at this point in time. We've got situations that have just taken place over the last few days where there is an active call inciting violence, for instance, in different parts of the world. Do you believe that there is a need to perhaps review the moderation community guidelines, the moderation policy? Is there a need to engage actively with regulators, with governments at this point in time around the world? I mean, how do you...
Welcome back. You're tuned into Editor's Roundtable. Well, we're turning the spotlight on Sanjeev Goenka companies. Remember, he did an interview with Shriram here on CNBC TV18, and from there, well, the stock market has got a little bit excited, at least on a couple of the companies that he is heading. Let's run you through a few details. First, the entire piece comes up. You have the power and utility company, you have the KPO that he runs out there, the largest carbon black company here in India. You have the music library as well, the retail venture, as well as the holding company. So that's basically the entire bouquet of companies that Mr. Goenka does head. The street actually got excited with that one statement that he says he believes the entire market capitalization of the group will go to around 2 lakh crore odd. Currently, it's around 72,000 crores odd. So the aggression that the street has read it as a rather aggressive statement. As of now, 71,000 crores is the total market capitalization, and bulk of it comes in from CESC, from Firstsource, as well as PCBL. And both these two is something that the street is quite optimistic on. Let's focus on PCBL first. The margins have improved gradually over the last few years from around 14%. It's come up to around 16%. Profitability as well has gone up big time, from around the 300 crores all the way to around 500 crores. But what he said was he's expecting margins to improve even more. He's talking about 17 to 18%, and he's saying the profit number from 500 crores, it could go up nearly around 5x. Now, those are big and tall targets. If you look at the Bloomberg estimates, then on FY26 numbers, the stock is trading at around 22 times. But if in case the profitability goes up by 5 times in the next 5 years, then it's at around 7 times odd. So that's about PCBL. Moving to Firstsource, that's been actually an underperformer. It's not grown as much as the market. The street has been quite disappointed out there. But they have gotten a new CEO last year. And earlier he had roles at Tech Mahindra as well as Infosys. Infosys for more than 10 years. At Tech Mahindra, he was heading their BPO division, and he had reported very, very good revenue growth of close to around 20%. So now the street is optimistic that maybe, in fact, this growth that is looking quite subdued over the last few years, barring the COVID period, maybe Firstsource can continue to grow from here on. And one of the things that they have done is they've gone ahead and they've upped their guidance. They've upped it for the current year to around 11.5 to around 13%. The long-term margins, they are talking about going to around 14-15%. And if you look at the valuation parameter, even after the recent run-up, it trades at around 20-25 times. So that's on Firstsource as well. Moving to the other piece that we're looking at, this is an interesting one. because the other way to play Firstsource is play the holding company. So RPSG Ventures, it has close to 50% stake in Firstsource. That's valued at roughly 11,000 crores. The IPL franchise as well, 51% is held under this franchise. And the football club, Mohan Bagan as well, is under this one. They also have a group of FMCG companies, and 3 of them come up for you on the screen. And I understand that as of now, 2Yum is doing revenues of close to around 1,000 crores. So that's the holding company that they have as well. Scaling up of the retail business is going to be interesting. For the last few quarters, they haven't got past that 550 to 600 crores. Margins have been very, very minimal or absolutely zilch as well. So that's a smaller part of the business. The street believes that as of now, the market capitalization of the entire group is around 70,000 crores, but they have taken note of that target of around 2 lakh crores odd. So let's see how they get there. But those are the broad companies that he is heading. PCBL and Firstsource, I'm going to keep an eye out on both those two. Well, Sandeep, I'm coming across to you then with regard to this group. I'm not sure whether you have a view on the group or any of the companies, but sometimes when promoter entities start showing aggression, that's one of the first indicators that maybe in fact things are turning. Your comment on it.
See, I will not comment on individual names, but I say some of these companies were trading in the neglected zone for a while. It got neglected, and you have seen in last round, all neglected stock have rallied a lot. But generally, as a student of behavior finance, we'll take a with pinch of salt when people talk very aggressive, you know. Okay. Suddenly, very aggressive numbers come into picture. From a behavior perspective, we'll look for some amount of caution. We should not get carried away. Because execution is the key, because making statement is very easy, but we have to see how well they can execute. But generally, I like to be cautious about such statements.
Okay, all right. So very cautious. But Sandeep, I wanted to ask you about the metal pack. We spoke about currency. We spoke about growth as well globally. And irrespective of how good balance sheets are, we know a lot of these metal companies, the balance sheets are very good. And you've got a couple of those very, very well. You know, particularly PSU government-owned metal companies. What's the view at current reckoning? And some of these PSU metal-owned companies have corrected from the top. Your view on it?
So, Nigel, if you look at it in isolation in India, looks very good. Entire material space, because India is growing. You can't grow.
But the global factors are worrying.
The only problem is global factor. And I will like to remain slightly cautious from a near-term perspective, because when we're saying that global volatility is going to expand further, and if you're talking about a risk of dollar index spiking, okay, with that background, it will be premature to take a very aggressive view right now. I think they have done a great job in last 2 years. From January, February 2023 have been rallying. Okay, I think if it's good, if they get into some sort of correction and consolidation, which is the case, and when this global volatility settle down, that's a time I would like to add big time in our portfolio, because we have pruned down a bit, but we are not negative from a structure point of view, but purely cautious from a very near term, and I say near term, just a quarter perspective, maybe 2 months perspective. Once this global volatility does settle down, we will relook this space again.
And the view is for the market also? I mean, it's near term. The cautious view is a quarter long?
Quarter sort of thing you can say. One has to be cautious, because very difficult to see how exactly it plays out. So when we talk about, let's say, India, per se, we are very, very convinced about India long-term story. But from a very near-term, very short-term perspective, I will play safe. You know, I don't want to be, is samay Shivaji nahi banna hai. That's the way I look at it, you know. It's better to protect the capital and survive this phase. And then I think everything looks good to me after that.
Absolutely. Sandeep, great conversation, and thank you for dropping by.
Thank you.
Thanks a lot for calling us.
Okay. Well, I think
it's time to wrap up this edition of Editors Roundtable. More news and updates on the other side.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming
to AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation.
Hello and welcome to Business 360. I'm Arshia Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end in the red for the second consecutive week despite a rebound on Friday. Sensex remains below 80,000 even after gaining over 800 points today. The government tables amendments to the Banking Regulation Act in the Lok Sabha allows depositors the option to nominate up to 4 people, including successive and simultaneous nominations. Also raises the threshold of what can be defined as substantial interest in a bank from 5 lakh to 2 crore rupees. Ola Electric jumps over 17% after listing at the issue price of 76 rupees. Chairman Bhavesh Agarwal tells CNBC TV18 that e-scooters already account for 15% of the scooter market and was going up. The street now looks forward to the unveiling of its e-bike plan on August 15th. Former Deputy Chief Minister of Delhi, Manish Sisodia, is set to walk out of jail after 17 months. Supreme Court grants bail in the excise policy case. Apex Court rules the long period of incarceration without trial would be in grave violation of fundamental rights. Pulls up the High Court and Trial Court for playing it safe by denying bail. Former US President Donald Trump is leading Kamala Harris by just 2 percentage points in the presidential race, according to a CNBC survey. Even as Harris gains ground, the poll shows Trump holds a substantial lead on the economy. Both Trump and Harris have agreed to a debate in September. A renewed push for a ceasefire in Gaza. The United States, Egypt and Qatar call on Israel and Hamas to resume negotiations by the 15th of August. Israel tells residents of Khan Yunis to evacuate once again as it prepares for another assault. Nobel laureate Muhammad Yunus led 17-member interim government takes charge in Bangladesh. Yunus himself will oversee a number of crucial ministries, including Defence, Education and Food Ministry. As per the last data available, Awami League's government leaves a per capita debt of over 1 lakh Bangladeshi rupees. Neeraj Chopra wins silver in javelin after Pakistan's Arshad Nadeem broke the Olympic record to win gold. India names ace shooter Manu Bhaker and hockey goalkeeper Srijesh as the flag bearers for the closing ceremony of the Paris Olympics. Every Indian should be proud of Vinesh Phogat's achievement, says 2008 Olympic gold medalist Abhinav Bindra, who met wrestler who was disqualified ahead of a gold medal bout. Bindra also calls for improving regulations to ensure athletes compete on their natural weight categories. All right, let's start with the market action. Sensex and Nifty gained over 1% today, but despite the rebound, both indices ended the week with losses of over 1%. This is the second consecutive week of losses for the markets. In the money market, the rupee remains on a tight leash, trading below the 84 mark against the US dollar. The rupee has remained closer to its all-time low all through this week. Right after hitting record levels in June, the inflow into equity mutual funds dropped by 9% in July. SIP inflows, however, came in at a record high. Sonal Bhutra is here with the Mutual Fund July report card. Over to you.
July was a very interesting month. We had big events, the likes of budget, and this came in just after that rally post the election results as well. So it's been quite volatile as far as the numbers are concerned. In July, the equity flows, they ebbed, and we saw a lower number versus the June number. So equity fund flows came in at 37,113 crore rupees, which compares with the number of 40,573 crore rupees in the month of June. Now, equity fund AUM, that came in at 29.33 lakh crore rupees. And interestingly, again, these are the sectoral funds which have contributed to majority of the equity AUM as well. As per the latest numbers, sectoral funds are 14% of equity fund AUM at 4.21 lakh crore rupees, and it forms the largest chunk in terms of overall equity fund flows as well. So let's talk more about sectoral funds then. Yes, the number has come off on a month-on-month basis. There were fewer sectoral funds which were introduced as well. So that number has come at 18,386 crore rupees, which compares with 22,351 crore rupees in the month of June. But the interest continues in sectoral funds, and a lot of it has come in form of NFOs as well, be it the Edelweiss Business Cycle Fund or the ICICI Pru Energy Fund as well. So in the month of July, there were 15 NFOs which garnered around 16,565 crore rupees. This compares with 17 NFOs in June, which garnered a lower number at 15,227 crore rupees. This NFO largely led by multi-cap funds and sectoral funds, as I told you earlier. They garnered 13,753 crore rupees. So big chunk coming in from there. Now let's talk about the other numbers. Large caps, the inflows have come down to 670 crore rupees versus 970 crore rupees. Similar is the story with mid caps. That's where we saw the inflows of 1,644 crore rupees. This compares with 2,528 crore rupees. Small caps largely stable at 2,100 crore rupees. This compares with around 2,200 crore rupees. Now the gross SIP number, it is at a record high. That continues to be the case. July gross SIP is at 23,332 crore rupees, which compares with 21,262 crore rupees. This is on a month-on-month basis, but very important to understand the net SIP number, because there have been a lot of redemptions as well. So that is a number which is important to track, and will be important to track going forward as well. The funds that have done really well, hybrid funds, because there's been a big inflow of money there. In July, it saw inflows of 17,436 crore rupees, which compares with the June number of 8,855 crore rupees. But clearly, it's the sectoral theme again which has done really well. Even debt funds have seen higher flows. The mark-to-market gains were higher this time around. So this is what the picture looks like. But yes, going forward, we'll watch out for what the flows are in the sectoral theme, because that seems to be gaining space.
Thank you, Sonal, for that. Ola Electric has made a tepid debut on Dalal Street. The stock listed at the issue price of 76 rupees a share on the NSE. However, soon after, it hit the upper circuit of 20%. The company's IPO has been subscribed by over 4 times. Ola is now the only listed pure EV two-wheeler company. My colleague Ritu Singh caught up with Bhavish Agarwal, the chairman and MD, who said that the company will keep working to build a sustainable and healthy, profitable business.
This Ola Electric story is a story of India's future. We are building India's future supply chains, India's manufacturing, India's future products, and our ambition and mission is to really build India's leadership on the global stage. So the fact that the street has liked our story and liked what we do, like the price, is a very strong positive. Price will move up and down. I'm learning the ways of the market. And we will keep doing our work. We'll keep focusing on building good business, building strong products, good products, building a sustainable business also, and hopefully creating wealth for investors in the long term. The broader story that's playing out here is the penetration story of electrification of EVs in India. 3 years ago, when we started, almost to the day, EV penetration in two-wheelers was almost zero. Now it is 6-7% overall, and within scooters, where all the action has been over the last 2 years, it is 15+%. And the scooter penetration month on month is only going up. 2 years ago, the government used to give 60,000 rupees in FAME subsidy. Now they give 10,000. And the industry, not just us, but the whole industry has adjusted very well. They've rejigged the cost structures, and the industry continues to grow with reduced FAME. I believe this is the way of the future. Slowly the incentives will taper down as companies become more stronger in their supply chain and their cost structures to be able to deliver profit margins with probably no subsidies in the future.
The government has tabled amendments to the Banking Regulation Act in the Lok Sabha. The amendment will allow depositors the option to nominate up to 4 people, including successive and simultaneous nominations. Sapna Das joins us now. Sapna, several notable amendments in the bill. Take us through the key ones, please.
Well, this is something that the Finance Minister had already spoken about in her FY24 budget speech, wherein she had made it very clear that for the convenience of investors and depositors, certain amendments will have to be brought to the banking law bill, to the banking laws, which would entail changes, simultaneous changes in RBI Act, SBI Act, the Banking Acquisition Act, so on and so forth. So that's exactly what the government has done. It has tabled the Banking Laws Amendment Bill in the Lok Sabha. And what it essentially does is to basically give more flexibility to depositors as well as enhance the protection levels for investors. For instance, as you've rightly pointed out, the number of nominees allowed per account through this amendment will go up from the current 1 to 4 in number. A total of 4 can't exceed 4. And within that also there will be a provision for successive and consecutive nominations. So wherever it's successive, it will be in order of priority, like nominee 1, 2, 3. Wherever it's consecutive, it basically means that 3 or up to 4 nominees coming together, it will have to be as a percentage of the deposit amount that is being held. So that needs to be kept in mind. Second, also in terms wherever wherever there are unclaimed deposits, basically dividends, share, bond money, interest, all of that is unclaimed for a period of 7 years. It gets transferred to the Investor Education Protection Fund. However, from now onwards, that money can be claimed or refunded to investors. So basically, it kind of streamlines the entire thing. You don't have to go looking here and there where are my unclaimed dividends or where are my unclaimed shares, so to speak. Third, of course, also it makes certain rules for the banking system as a whole, makes it tighter in terms of bank reportage to the Reserve Bank of India in terms of the statutory requirements, statutory reports. As of now, it was every reporting Friday, but now the dates are changed, or rather they are proposed as the last day of every fortnight, every month or every quarter, and all the banks will have to have the same timeline. You cannot have certain banks following one timeline and other banks following another timeline. So this brings consistency in the reporting of important information to the banking regulator. That's the intent of the government and of this bill. Of course, other provisions, it gives also flexibility to the banks to basically give a market-linked remuneration to hiring of auditors. So it makes it more competitive. They can actually go ahead and get the best talent in the market. This will help to improve the quality of audits. So that's the intent. Last but not the least, also in terms of substantial interest, that is being redefined because the last value was fixed sometime in 1968. So it was at that point in time 5 lakh odd rupees. This is now going to be raised to around 2 crore rupees. So these are some of the major takeaways. Of course, in terms of the nomination, the number of nominees going up for bank accounts per bank account, I think that will be of great interest for consumers across the sector.
All right, thank you, Sapna, for that update. On to a CNBC TV18 exclusive. The race to acquire more than 60% stake of CVC Capital in Healthcare Global is in its last lap. Sources have told CNBC TV18 that private equity firm Bain Capital and Abu Dhabi-based company Burjeel have likely submitted their binding bids for the stake. CVC's stake sale will trigger an open offer, and the deal size is likely to be around 5,000 crore rupees if the open offer is fully subscribed. Shares of Godfrey Phillips surged more than 6% in today's trade. This after the company reported a 26% jump in cigarette volumes in the first quarter as compared to the same period last year. This volume growth is higher than Godfrey Phillips's peers ITC and VST Industries. And on another note, Samir Modi was ousted from the board this week amid a family feud over the control of group companies. The other directors did not support his reappointment. The big national story that we are tracking, the Supreme Court today granted bail to Delhi's former Deputy Chief Minister Manish Sisodia in the liquor excise policy case. Sisodia has spent 17 months in the jail. The apex court, while giving its judgment, said that the long period of incarceration without a trial would be in violation of his fundamental rights. Ashmit Kumar is here with more on the court's verdict. Ashmit.
Well, let's bear in mind that it was in the month of February of last year, 2023, when he was arrested by the CBI. He's been incarcerated, he's been behind bars, and that is something that weighed on the mind of the apex court. The Supreme Court said that keeping him inside the jail for an unlimited period of time is not something that is tenable, is not something that the apex court can gloss over. The Supreme Court said the fact that the bail is a right that bail is the norm and that not grant of bail is rather the exception. The fact that he's been incarcerated for 17 years and the fact that trial has not even begun. These are sufficient grounds, the Apex Court believe, for granting him bail and for granting immediate release of Manish Sisodia. Not just that, the Apex Court was also critical of the conduct of the ED as well as the CBI. The Supreme Court noted that in October of 2023, they had said that the investigation will be completed in about 7 to 8 months' time. They had assured that the trial would begin, but the trial has not even begun. The Apex Court also noted that far from beginning of the trial, given the fact the large volume of documents in play, there are over 1 lakh digitized documents, there are nearly 500 witnesses. Given the scope of this trial, the Supreme Court said that there's not even the remotest possibility of the trial concluding anytime soon. Not just that, the Apex Court also said that the alternative, which is to send him to the trial court for granting bail, would be akin to making Manish Sisodia play a game of snakes and ladders, and that is not something that the Apex Court will allow, that would be a travesty of justice. And with these observations, the Apex Court granting immediate release of Manish Sisodia. There are, of course, a few riders. He has to surrender his passport. There'll be limitations in terms of his movement. But the big story, of course, is that after 17 months of incarceration, the former Deputy Chief Minister of Delhi is set to walk out of the Har jail.
Thank you, Ashmit, for that. On that note, it's time for a short break. Coming up next, every Indian should be proud of Vinesh Phogat's achievement, says 2008 Olympic gold medalist Abhinav Bindra, who met the wrestler who was disqualified ahead of her gold medal bout. More on that when we return.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on the large street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The Monetary Policy Committee met on 6th, 7th and 8th August after a detailed assessment of the evolving macroeconomic and financial conditions and the overall
Welcome back. Amara Raja Energy is set to inaugurate a new battery manufacturing facility in Telangana. Speaking to CNBC TV18, company's chairman Jaidev Gala said India's EV battery industry will need protection from cheap Chinese imports, especially once domestic manufacturing capabilities pick up. He also added the new Telangana facility will start rolling out EV batteries by June 2025.
For us to have access to that supply chain, government, that's a bigger role that the government has to play. On the one side, giving us some incentives and hand-holding is good, but on the other side, actually going out and securing the supply chain the way the Chinese government has done for their companies, or by incentivizing us to go and do that, would definitely help, and I think it's required also.
Right.
If you look at it today, China doesn't own 80% of the minerals, but they're processing 80% of the minerals,
right,
regardless of where it's coming from. So that's all because of the way the government has moved.
Neeraj Chopra added another Olympic medal to his and the nation's tally. The defending Olympic javelin champion secured India's first silver medal of the Paris edition. With this, India's medal tally goes up to 5. Pakistan's 27-year-old athlete Arshad Nadeem bagged gold with an Olympic record throw of close to 93 meters. His win gives Pakistan its first ever individual gold medal at the Olympics and its first medal in 32 years.
कंपटीशन बहुत अच्छा था और वही है हर किसी दिन किसी एथलीट का दिन होता है आज अरशद का दिन था कभी जब बात करें टोक्यो की और बुडापेस्ट की वहाँ पे अपना दिन था या एशियन गेम्स में अपना दिन था तो हर एक एथलीट का जो बॉडी है वो एक उस दिन अलग ही उसमें होती है हर चीज़ परफेक्ट होती है जैसे अरशद की थी
देखो जी ये तो खुशी के आंसू हैं आ जाते हैं लेकिन बहुत खुशी हमने सिल्वर की गोल्ड की कोई हमने इसी नहीं है लेकिन हमने सिल्वर भी गोल्ड वर्गा है हाँ। और जो बच्चा लेके आया वो भी हमारा लेके आया गोल्ड लेके आया सिल्वर लेके आया वो भी हमारा लेके आया हाँ। लेकिन हमने कोई वो नहीं है जो दुख उन बच्चों का जो समय इतने दोनों मैं कर लग रहे बेचारे मैं सिल्वर गोल्ड में कैसा भी ले नहीं पाए लेकिन सब मैं अपने बच्चे खातर नहीं सोचा भाई जा रहे हैं कुछ न कुछ करके आएंगे
That was Neeraj Chopra's mother, whose comments have won so many hearts. Moving on, double bronze medal winner in shooting Manu Bhakar and hockey goalkeeper Shriram, who also won the bronze, have been named as India's flag bearers for the closing ceremony of the Paris Olympics on Sunday. Shriram, along with the hockey team, won consecutive bronze medals at Tokyo and Paris Olympics. Manu Bhakar became the first athlete in independent India to win 2 medals in the same Olympics. India's first individual Olympic gold medalist Abhinav Bindra praised Bhakar's achievement, calling it an inspiring story for generations to come.
Let's start with Manu Bhakar and what a spectacular run she's had.
Yes, absolutely amazing. I mean, to go back home with 2 bronze medals and a 4th place finish, it's been an incredible achievement for her. I'm so inspired and simply proud of her. I mean, from how she finished in Tokyo, to show the resilience, to show the character that she's displayed, to keep at it, to not give up, is an inspiring story for generations of Indians to come.
And in an extensive interview with Shriram, Bindra also spoke about the heartbreak suffered by wrestler Vinesh Fogart, who failed to make weight for her gold medal bout and got disqualified. Bindra, who met Fogart after her disqualification, said that every Indian should be proud of what she has achieved. Bindra also said the World Wrestling Body should consider changing rules to ensure athletes compete in their natural weight categories to ensure safety and protect their health.
You know, let's talk about the big heartbreak for India, and that is what happened this far as Vinesh Phogat is concerned, and you went and met her, you had a conversation with her. You know, while the post-mortem is underway on what happened, what could have been done differently, what went wrong, what wasn't done, and so on and so forth, from an athlete's perspective, from her perspective, and someone who's dealt with adversity and someone who's you know, hit rock bottom and sort of risen up, what do you see her mental state at this point in time?
Obviously, she's devastated. I can fully empathize with her. I can't even imagine what she would be going through. You know, I had heartbreaks in my sports career, but you know what she's gone through, I can't even understand. I met her, but I didn't even know what to tell her.
What did she say to you?
No, I mean, it was just general talk on you know on life, and how life can be unfair, and you know sport sometimes can be brutal.
Did she have an assessment of what went wrong?
Oh, we didn't even get into that. But I just went to
offer your
support to her and to be there for her, and I think that's what she needs at the moment, and I think the country must rally behind her in these difficult times. It's a very, very, very difficult period for her, and you know she's gone through a tough period with all what's happened in the course of the last year or so, and to come where she's come has been incredible. It's been absolutely incredible, and India really should be very, very, very proud of her.
No, absolutely. I think you know, every Indian should be very proud of what she's been able to achieve. But you know, in her story, there's many stories that come up. One, I think, for the first time, the brutality of what an elite sport and competing at the Olympics means. I mean, 100 grams, that was the difference between her winning possibly the gold and being disqualified. I mean, I think for the first time, people truly understood the full force of what an athlete has to go through.
It's not an easy business here.
It's not.
It's tough, and you know, you put your heart and soul into it, and sometimes that is the difference between winning and not winning. Disqualification or being legitimate to be able to participate. Sport is hard. It's very, very, very hard, and that's why, you know, India must look at failure very differently. I think society on its whole looks down on failure in India, and I think it's high time that, you know, society and the youth of the country become more sporting in nature. You have to, yes, you want to go there and win, no question about that. You know, you want to put your best foot forward and be on the podium. But you know, there are 10,000 odd athletes here, only 300 go back with gold medals. So the people who don't, they're not losers. They've gained, they've represented your country. There are only 10,000 athletes here in the whole of, they're the 10,000 best athletes on this planet. So you can imagine how brutal the competition is. You can imagine how tough that competition is. And I think we have to just look at failure very differently. Of course, we have to learn from it. We have to learn to fail well. We have to take learnings out of every experience and try and get better. And sport is a human endeavor. And you have to keep going. You have to remain resilient. You have to remain patient. And you have to learn to remain positive, and you have to back your athletes. You can't just be with your athlete when
the going's good.
When the going's good. That's very convenient, and that's not the way we should look at sport and our athletes. We have to appreciate sport very differently.
And you can catch the exclusive conversation with Abhinav Bindra at 6 p.m. and 9:30 p.m. right here on CNBC TV18. But that is a wrap on this edition of Business 360. News and updates continue right here on CNBC TV18.
Decided by a majority of 4:2 members to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%.
Global funds category, international funds which are investing in, you know, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last year when the taxation was changed, and now it's come back into reckoning with full power and full force. And I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
First and foremost is the fact that our target is the headline inflation, where food inflation has a weight of about 46%. With this high share of food in the consumption basket, food inflation pressures cannot be ignored. Further, public at large understands inflation more in terms of food inflation than the other components of headline inflation. Therefore, we cannot and should not become complacent merely because core inflation has fallen considerably. Second, and equally important, is the reality that high food inflation adversely affects household inflation expectations, which have a significant impact on future trajectory of inflation.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Let's talk money.
Hello and welcome to this latest edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. The budget has brought in tax relief for certain categories of hybrid funds. Some of these funds were earlier being taxed at the investor's own slab rate, which of course could be as high as 30%. But now the long-term capital gains tax on these funds has been slashed to just about 12.5%. So there is a huge tax advantage. Is it worth, therefore, considering these funds for investment, given that not just tax, but there is market volatility and there is a need to diversify risk across asset classes? Welcome to part 2 of our capital gains tax classroom. Last week it was all about property. This week we are going to talk about hybrid funds and where they should be when it comes to your portfolio. Joining me to discuss this today are Mohit Gang, CEO of Moneyfront, and we also have Devendra Singhal, Executive VP and Fund Manager at Kotak AMC, who manages Kotak's multi-asset funds. This is also a category which actually gets that tax advantage. So gentlemen, thank you so much for joining in. Good to have both of you on. Yeah, there we go. We are seeing Devendra also, who's joining in remotely. So let's get the first thoughts in, Mohit. So this is the mutual fund tax classroom now. Your first thoughts on this change of 12.5%, which is coming in for a large variety of funds, right? Which were in that in between. They were neither pure equity nor pure debt, but the in between ones.
Surbhi, I think first and foremost, I think mutual fund investors can't complain about the change of taxation in this budget. Honestly, I think yes, long term and short term has gone up a little on the equity side. That hurts to a certain category of investors. But for investors who were investing in international funds, who were investing in balanced hybrids, conservative hybrids, who were investing in multi-asset funds, who were investing in gold funds and fund of funds and all those categories, they gain a lot. Honestly, they benefit a lot because of this whole change of taxation. And now there are only two classes of, or two holding periods, which is 24 months and 12 months. So the budget has done away with the 36-month holding period per se. The budget has done away with the indexation thing. But what the budget has done brilliantly is made the tax rates uniform, right? So there is extreme amount of clarity and simplicity now. All these categories now get classified as long-term after 2 years and get taxed at 12.5. So
yeah, that's actually a huge relief. At least, you know, long-term now is 2 years. That whole concept of first, whether it's 36 months or whether it is 24 months, at least that gets taken away. Let me bring in Devendra as well for some opening thoughts, and then we'll go category by category. Devendra, what is your first take? The fact that there were some funds which were being penalized really severely, right? Because they were being taxed at the slab rate. Now that tax rate comes down to 12.5%. So what is the initial feedback you're getting from investors?
Hi, Surbhi. So as Mohit rightly pointed out that, you know, investors in general have nothing to complain about, especially the mutual fund investors. And, you know, the hybrid fund investors are, I think, on a sweet note here, because now it reduces the, you know, complexity. It simplifies the tax structure. It reduces the holding period, which is a big advantage for the investors, you know. It brings a lot of agility to what they can do with their money, rather than waiting for it to get long term and then get slightly better in terms of taxation. Now that hold period is also went down to 24 months versus 36 months, which was earlier. So specifically in the categories of conservative hybrids and fund of funds, I think it's a brilliant move.
Okay, and we're going to talk about all of these specific categories in more detail. But to begin with, investors, I think there's one thing that we all need to ask ourselves when we're talking about hybrid funds. And as the name suggests, a hybrid could be a mix of debt and equity. In some cases, if it's multi-asset, it could involve gold or silver or other asset classes as well. So the first thing that investors, we need to ask ourselves is whether this hybrid fund has, you know, 20% equity, 30%, 35%, 50, 65%, because the taxation depends on the range of equity and debt that that fund is holding. So as investors, that's the first point of awareness, to ask you know, whoever is advising us on that fund in terms of what is the equity contribution. So with that caveat in place, Mohit, let's get started. And I want to start with you know, the simpler things first up. Funds where the equity allocation is at least 65% or more. Here, nothing changes, right? It's just that the 10% tax now becomes 12.5% tax.
And 15 has gone to 20 on the short-term side. And the long-term capital gains exemption limit has got increased from 1 lakh to 1.25 on the equity. So these are the three changes. But per se, fairly simple for investors to understand.
Okay, but it's important to know what all funds fall under this category. I mean, at least in terms of nomenclature. So pure equity funds, which are, you know, going up to 100% equity, we all know. Equity mutual funds. Here, which are the subcategories? For instance, you know, arbitrage funds always had a great equity taxation advantage. Does that continue?
Absolutely, absolutely. So arbitrage continues to benefit with equity taxation. The whole proposition of arbitrage was that it has equity composition or hedged equity composition over 65%. So that continues to benefit. Even equity savings as a category, Surbhi, where naked equity plus hedged equity, as in the ARB component combined, put together, was over 65%, and that continues to benefit from the equity taxation per se. So any form of equity where the Indian equity composition is greater than 65% will continue to get taxed on the equity parameter.
Okay, so that includes arbitrage funds. It will include, like you said, the equity savings fund category.
Equity savings, arbitrage, and also some kind of balanced funds where the equity composition is greater than 65%. But as you rightly said, balanced category has to be seen scheme by scheme, fund by fund, where you have to actually figure out the equity composition. But yeah.
So the balanced advantage funds, the BAF category, as it's called. Okay, Devendra, come in on this. You also mentioned the equity savings fund category, right? Just remind us, remind our viewers, because not everybody invests in a lot of these funds. So tell us more about the equity savings category. How much is the typical debt equity mix, and whom are these funds suitable for?
Sure. So Surbhi, as you rightly said, you know, the hybrid funds are categorized in terms of, how much equity you can have, and then other portions starts coming in. In equity saving as a category, you have 10 to 50% long equity, which is pure equity component, but you have a minimum of 15% in equity arbitrage. So in terms of taxation, it classifies as equity taxation because equity and equity arbitrage is always more than 65%, right? Then you can have, up to 35% in debt if you want to, which is normally a balancing factor. You also gives you steadiness in terms of that. But equity, pure equity, only up to 50%, minimum 10%. Arbitrage, minimum 15%, and then the rest comes in.
And
so this kind of
sorry, Devendra. So this is the equity savings fund category. Is this the same as aggressive hybrid funds? Because there's something called aggressive hybrid fund as well, right? Or is that something else, a different category which also has more than 65% or up to 65% equity?
So aggressive hybrid fund is a very different category. If you remember, this was earlier called balance funds. Before the balance advantage funds came in, this category was called balance funds, whereby in aggressive hybrid, you always have minimum 65% in equity, which is net equity, no arbitrage included, up to 80%. So 65 to 80% in pure equity, that is what aggressive funds are.
Okay. So fair enough.
Equity saving is different.
Yes, please continue. Please continue.
Equity saving is different, that the net equity portion is always capped at 50%. And the lowest you can go is 10%. But to have an efficient taxation structure, you have a minimum of 15% in arbitrage, equity arbitrage. So you get a minimum of 65% in equity and equity arbitrage, which is there for the investors to benefit from.
Okay. So Devendra, one final follow-up question. Now, suppose I am an aggressive investor. I already have equity mutual funds, but I also want to do a hybrid fund which has the benefit of equity taxation, and I'm okay to take risk. So between a balanced advantage fund, which is typically running more than 65% equity, this equity savings category, and the aggressive hybrid category, you described 2-3 different types of funds, right? They all have the same taxation now, equity taxation. How should I go about making my choice? What is the criteria that I should ask as an investor?
Okay. See, generally aggressive hybrids or the equity hybrids, they are ones for the riskier investor. I mean, investors who have a high risk appetite, because they would anyways at all point in time would be minimum 65% long in net equity. Okay. Balanced advantage funds are generally dynamic funds which can go to as low as 20% or as high as 90-100% in equity. But typically they hover around 50-60% in net equity on a average basis, on a normalized basis. Equity saving is the least in terms of the risk appetite. So because they are capped at 50%, but typically, for example, at Kotak, we have an average equity of less than 35% over the span of this fund.
Okay.
So the more riskier the investor, aggressive hybrid, then BAF, and then equity saving.
Okay, superb. That really explains it very, very well. So if you're a high-risk investor and you're looking for a higher risk profile fund, then that's the order that you can follow. Mohit, I want to take off from what Devendra said on the balanced advantage category, which brings us to the next taxation bucket itself, right? Now we're talking about mutual funds, which will be holding equity to the extent of 35% of the total holding, going up to 65%, but not over 65%. So in this bucket, which is what Devendra is also saying, that the bulk of the balanced advantage funds typically run portfolios that they fall in this category. Now here, there's a huge tax advantage as well, right?
Absolutely. So Surabhi, this was the bucket which was holding equity between 35 to 65% of the overall portfolio, which got hammered last year in the budget. So when the taxation changed, this category typically got changed, and the taxation here was long-term with a 36-month holding period and tax at 20% with indexation, right? So it completely changed the entire mutual fund industry and divided the entire industry into 3 asset classes from a taxation perspective. which is equity greater than 65, equity between 35 to 65, and then equity less than 35, right? So this middle category was the one which was having an indexation advantage with a 3-year holding period. Now this completely changes. This is now a 2-year holding period for long-term capital gains, and the taxation now has been reduced to 12.5.
Which is a double bonanza, right? You don't have to wait 3 years to qualify for long-term. You just have to wait for 2 years, be invested for 2 years. And the tax is not slab rate. The tax is not 20%,
yes,
but it's 12.5%.
It's 12.5%. So taxation reduces, the holding period reduces. So obviously, as Devendra also said, the agility of the investor improves out here. He can move a little quickly, right? Plus, these are categories which were actually sort of be more used by conservative investors. This was a category which was more preferred by retired investors, right? So for them, it becomes a little more tax efficient. From them, the actual realization of the money improves, right, in their hand. So I think overall, it just benefits the industry, and also the profile of investors who was typically investing in this category was a little more moderate, conservative, or retired, right? So I think that entire category benefits a lot.
Okay, so balanced advantage funds, now they have the tax advantage for sure.
Yes.
Let's also talk about the other merits, because like you're saying, tax should not be the only reason we invest into anything, right? Looking at the market environment, the dynamics, equities have been on a tear and everything's so volatile. Typically, would you advise people to opt for this type of a hybrid fund? And if yes, why so?
Look, Surabhi, as I said, it all totally depends on the risk profile of the investor, whether he wants to conservatively invest with modest amount of growth, but the objective is more or less preservation of capital to a large extent, then yes, you would want to go into these categories. A balanced advantage gives you the advantage that fund manager with all the expertise and all the resources at his disposal is typically changing the equity debt mix in the overall portfolio and is trying to play out the market cycles, which has historically benefited the investors, right? Even in a multi-asset category, today most of the funds were being pushed to keep 65% and above equity. Now those funds can also become a little more true to label, keep slightly lesser equity composition, improve the commodities allocation in the portfolio, which was kind of hovering between 10 to 12% for most of the funds. So that could be improved. So it can become more realistic multi-asset from that perspective, right? So it all benefits the investors to a large extent.
So multi-asset, I'm going to come to it in just a bit and have a sort of more detailed chat on it. But balanced advantage itself as a category, does it get a thumbs up from you?
It definitely gets a thumbs up, now more so because of taxation, but previously also because of the inherent advantages of movement between debt and equity and playing the asset allocation part automatically through a fund manager route was a huge advantage for conservative investors and few profiles of investors.
And would you like to take any examples or any names of the kind of funds in this category that you like, or what people should go out and sort of check upon?
So look, there are balanced hybrid funds also. There are balanced advantage funds also. Both of these kind of fitted into this category. There are some exceptions which ran over 65% equity allocation, but let's say Pru ICICI balanced advantage fund, Kotak balanced advantage fund, let's say, right? There was an HDFC balanced advantage, but which kept equity to a slightly higher extent at all points in time, right? And so you have, and then there is a balanced hybrid category. So you had perhaps a 361 balanced hybrid fund or those kind of funds which had 45 to 55% equity composition and 45 to 55% debt composition. They kept moving between these allocations. So those are categories which become extremely lucrative now from a tax perspective. They were always good as a profile fit for investors of certain categories or certain risk profiles, but now they become very attractive from a tax perspective also.
Fair enough. We need to take a break. But after the break, we are going to talk about this multi-asset category, because I think a lot of investors have seen the kind of returns that gold can deliver to the portfolio over prolonged periods of time. Especially the last 1 year has been fantastic for gold. So whether we should consider the multi-asset category as well, now that it also has a tax advantage, we'll discuss this after the break.
Let's talk money.
assuming a normal monsoon and taking into account the 4.9% inflation print, which has already come out so far as Q1 is concerned, CPI inflation for the current financial year, that is 2024-25, is projected at 4.5%, with Q2 at 4.4%, Q3 at 4.7%, and Q4 at 4.3%. CPI inflation for the first quarter of next financial year, that is Q1 2025-26, is projected at 4.4%. The risks are evenly balanced.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Let's talk money.
Welcome back. You're watching the capital gains tax classroom when it comes to mutual fund investing, because so much has changed after this budget. And of course, we have Mohit Gang as well as Devendra Singhal to take our questions and help us understand this issue today. We were speaking about multi-asset funds just before we went into the break, and I want to bring in Devendra because he manages those funds at Kotak KMC. So Devendra, great going, right? Not only are asset classes like gold giving you such a great return, now the tax is also looking better. So what's your advice? And to the point that Mohit made before we went into the break, that now that the tax rate has come down, will we see these funds invest more in commodities like gold?
So, Surbhi, as you define multi-asset, multi means you need to have at least 3 assets with minimum 10% weight. Now, there's no, limitations in terms of how much one category can invest into the other. It all depends on how you have basically positioned your fund in terms of taxation. So you're right that with taxation angle going off, now you could have a more aggressive call in terms of higher allocation into particular assets like gold, international equities, and debt and all.